and welcome to CoinDesk Live. We are coming to you from the CoinDesk studio at Consensus 2025 in Toronto, sponsored by MoonPay, the global leader in crypto payments. This is the most influential event, the Super Bowl of the blockchain world, where the top voices in the community come together to drive innovation forward. I'm Jen Sanasi. Joining me to kick things off this morning is CoinDesk senior anchor Christine Lee and CoinDesk deputy managing editor of global policy and regulation, Jesse Hamilton. Good morning to you both.
Good morning, Jen. Day 2 of another busy day here in Toronto.
Day 2, 15,000 attendees in Toronto,
Incredible.
which is a staggering number for our first conference north of the border. Jesse,
Yes.
you kind of wrapped things up last night,
Yeah,
or yesterday
right.
afternoon with Bo Hines on the main stage. Talk to us about that conversation you had.
Yeah, it was, well, you know, this feels like day 5 already. Yesterday was so busy, but Bo Hines is the White House liaison for crypto matters, basically, and
The crypto quarterback.
he told us some things about the progress for crypto legislation in the U.S. That were pretty interesting. We asked him about the possibility that today there would be potentially some action in the Senate to sort of get back to the stablecoin bill that had been derailed a bit in a procedural vote recently. And while he didn't confirm that any deal had been made, he did sort of express hope that there was going to be back on track, which would be a big deal, obviously, for the U.S. Crypto policy effort.
What are your sources saying? I mean, do you think that the stablecoin bill can be back on track?
It looks like things are looking up, I think.
Oh, okay.
Well, he did say that he was pretty confident that Trump would sign legislation by August.
Yes, which has been, of course, their goal all along is to finish this by the August break in Congress. There has been, we understand there has been new language on the bill that's been circulating in the Senate, and that members are starting to feel more confident that this is actually going to happen. Maybe there could be action as early as today, but that this week that they should be possibly moving something forward on that. So, another of the sessions yesterday was particularly interesting, I think, sort of in that same vein. French Hill, the chairman of the House Financial Services Committee, spoke to Nick Day, and sort of he's a Republican. He's one of the leaders in the sort of legislative efforts on both stablecoins and the market structure legislation. That's going to be like the bigger picture legislation in the U.S. And he acknowledged that President Trump's personal crypto business interests have been a friction for what's going on. And while that may be obvious to everybody, it's unusual for a Republican, especially a prominent one, to sort of acknowledge the elephant in the room in Congress. And so that was an interesting moment to me yesterday on our stage. So that, you know, whether Trump's business is going to be explicitly acknowledged and dealt with in the stablecoin legislation is still uncertain. That maybe won't happen, but it is interesting that the Republicans are sort of acknowledging that this is an issue, because it is what the Democrats are bringing up as the objection to moving forward on the bills.
Yesterday at the desk, we had Paul Hastings' partner Renato Mariotti join Sam and I. And while most of our guests here at the desk yesterday were positive about legislation when it comes to both stablecoin and market structure, Renato said the conversations he was having on the floor were a little different than what folks were saying at the desk and maybe on the stages. He said he was speaking to a lot of executive leadership who were concerned and a little bit worried that market structure doesn't get passed this year. We're left without legislation, and then rulemaking is left up to the regulators. That then puts us in a poor position when leadership at places like the SEC and the CFTC change?
That's still very much a possibility. No one should ever count on Congress to do something. And of course, that's the position the crypto industry is in right now, is counting on Congress to do something. But it's a very volatile and chaotic process. And you should never surprise anyone when politics finds a way to get it in the way of legislative progress. And in this case, the stablecoin bill looked like it was sailing. It came out
really did.
It came out of the banking committee,
A lot of momentum,
huge bipartisan support. Democrats were on board, and that some of those same Democrats now are the ones objecting. So you just never quite know what's going to take place. And of course, the stablecoin issue is just much narrower and simpler than the market structure bill, which is where we're really going to have some interesting times coming out this year. And I'm always the bummer in the room when we're talking about this, but this process takes a long time. It takes a lot longer than people tend to anticipate, especially crypto people who are like more.
It doesn't move at tech speed.
The high tempo. So, Congress takes a long time to act, but then people can't forget that once they do, that's not the end of the story. The agencies themselves have to write the regulations, and that can be a year and a half process. So you don't sort of never count your chickens in Washington, because it's just, there are a lot of things that can get in the way. It's a very long process. Mm-hmm. So that's such a lame,
it's not lame.
To face. It's, it's going to be a lot longer than people might expect.
Mm-hmm.
It's still so early, but the industry is maturing. It's interesting when we walk around the consensus floor. Every time I'm at consensus, it feels like a little more mature, a little more serious, more names that have been around for a long time, like Google, BlackRock, and so I think that will also have an impact on legislation and regulation. Do you think that?
I definitely think so. This industry is absolutely maturing. I've been with CoinDesk maybe 3 years, and in that time, it's sea change. I think the presence in Washington is much more professional and expansive. More. So many of the companies have their own people, but also the lobbying groups are many and significant in DC. And of course, we saw this past election how the campaign giving became such a huge element. That's, for good or ill, that's a sign of a maturing industry as well, when you start, getting into politics in that way.
Well, we also have news this morning that Coinbase is entering the S&P 500, so replacing Discovery Financial there, and so their stock is about $250 now. So we are seeing a maturity of the industry, corporations now doing huge mergers and acquisitions, gaining greater dominance over the crypto space. In Coinbase's case, they are acquiring Deribit to establish dominance in the crypto derivatives space. Robinhood, of course, announced that they are acquiring WonderFi. They're going to enter the Canadian market. Expansion. And so we are seeing a maturity of the market for sure in the major moves we're seeing with the corporations and the market capitalization that continues to expand. So very interesting to see where it heads.
Yeah, it's sort of a coming of age moment, I guess, for crypto, which will depend also on the U.S. policy, the establishment of U.S. policy. That's sort of been the last domino to fall, right?
I'm just going to say this. Is it kind of crazy how much we focus on U.S. policy, even though we're sitting here in Canada, even though our last conference was
Canada.
in Hong Kong?
We have been talking to a lot about Canada. We've got Mr. Wonderful coming up, so we definitely will hit up on some Canadian points there.
Now I feel bad because I'm blinders focused on U.S. policy.
There's absolutely nothing to feel bad about. I think, when you look at the size of the U.S. economy, when you look at the influence that the U.S. has on the rest of the world, it makes sense. But it's just an interesting observation, I think.
And world regulators have in the past been in the habit of following the U.S. when the U.S. would usually first establish regulations for an industry or sector, the U.S. regulators, the global regulators would follow along, and that's been the habit. But of course, as we've seen, it's been turned on its head this time.
Well, Jen, what I thought was interesting is that you said one of the reasons why Consensus is hosting in Toronto is because there was concern with the previous administration and their policies with respect to crypto, and the environment in the United States was hostile to crypto, and so there was a demand to perhaps get out of the United States, and that's why we're visiting Toronto this year. So that is interesting, and while we've been here, we've been able to highlight the fact that Ethereum was born here. There are other chains being built here. Bear Chain, for one. We had Smokey Berra, one of the co-founders of Bear Chain
I
here.
love the bear mask.
Yes. And of course, one of the interesting things he highlighted was the need for anonymity, and that's why he wears the mask. And we also have news this morning that in Paris, the daughter of a crypto CEO, a payments crypto CEO, had an attempted kidnapping. It's terrible footage that we saw in the streets of Paris in broad daylight. Kidnappers trying to take her grandson and this young woman and her partner were trying to, obviously get them off, and they were able to call for help enough for standers-by to help out. Thank goodness that happened, and they were able to just escape by the skin on their teeth. So very, very, very.
There are tremendous security issues still in this space that need to be dealt with, I think.
But no worries, folks. If you're coming to Consensus, there's high
lots
security.
Of security. You are
very safe.
You are safe here. I mean, Christine, I'm glad you brought that up, because I think anytime there's a showing of wealth, there's that concern, right? We see in celebrity culture, celebrities who show their wealth walk around with a lot of security. And I think people look at what's going on in this space. The Kardashian effect. Of course, Kim Kardashian was held at gunpoint
in Paris.
In Paris. I think she is in court sometime this week talking about that. And so, there is this showing of wealth in this industry. And people, I think, look at the price of Bitcoin. They look at these acquisitions. They look at the amount of money that's flowing in and out of this space. And I think that it makes sense, and I hope that folks who are public about their holdings and whose wallet addresses are out there make sure that they have the proper security and that their loved ones stay safe.
But I do want to point out, I mean, it's not anonymous, it's pseudonymous money. I mean, if people know the wallet addresses, they can be traced. So in a sense, I mean, the argument is there that if you're taking Bitcoin, other cryptocurrencies, it can be traced back to you. So it may not be the best way to steal from someone. If you want to steal from someone, use cash.
Or steal cash.
Steal cash.
Here's a PSA this morning for everybody. Steal cash.
Jesse, we spoke about what you did yesterday, but what are you getting up to today?
Well, we're talking about security here. My interest today is, one thing I wanted to check out is some of the discussions about hacking and cybersecurity developing as sort of a major element in the debates in Congress. I always bring it back to Congress, but it is one of the things the Democrats are raising as their primary objection to sort of some of the current language that's being pushed forward. So I'm interested to hear what the sort of the dialogue is on security, on cybersecurity issues.
What are you going to get up to today, Christine?
All right, so I will be doing a main stage session with none other than Ethereum co-founder Anthony Diorio. And of course we've
Canadian.
seen, Canadian, of course. And we've seen Ethereum take on the charge in the crypto markets and leading the rise, the bull charge that it was over 9% up during this week. It's continuing, and it was the most hated coin maybe a couple weeks ago. People were dumping on Ethereum. They were saying, the leadership needs some help there. They did have some leadership changes. They did have a Pectra upgrade. There was some enthusiasm and optimism about that. So it is seeing a resurgence, if you will. So we'll try to touch up on that. But what Anthony's specialty is he was really involved in the founding of Ethereum, the early history, and so we'll talk a bit about that and what significance that holds in where Ethereum is now. And of course, artificial intelligence is a big topic, and he's gotten into that. He's always on trend with the latest technologies, so we'll dive in further later this afternoon. And he will be on the desk later on today. And you'll be chit-chatting with Dave Portnoy, who's a very
interesting character.
Interesting character.
A very interesting character. Dave Portnoy is going to be here. I believe he's going to be on the main stage later today, and he's going to be at the desk. We, of course, did a pre-interview with him where we spoke a little bit about his dabbling in crypto for our audience who's watching.
Meme coins.
Well, and also Bitcoin. Dave got into trading during COVID. He acquired a lot of money, he lost a lot of money, he got into meme coins, he talked about meme coins, he's experimented with NFTs, he said he would buy a bunch of Bitcoin if it hit $40,000. And so we'll talk to him about that. We'll see how he's experiencing Consensus. It will be his first time at Consensus. I'll also be on the Brand Summit stage. Remember when we were always talking about the brands that are in crypto instead of regulation and real world assets? Well, those conversations are still happening. And we'll be talking about how brands are incorporating blockchain infrastructure into their operations. We're going to be talking about ticketing. We'll be talking about Deepin with Helium. They have a partnership with AT&T, and we'll also be talking to DJ Ski, who was at the desk yesterday, about his authentication platform for collectibles. So a lot of conversations going on here at Consensus that touch every different aspect of this industry,
I just want to add in
vertical.
there, if a lot of folks are interested in that Dave Portnoy interview, and he will be at the desk at 3:30 this afternoon, so be sure to check back in with CoinDesk Live when that happens.
All right, we are going to keep the ball rolling here. We are just getting started. We're going to be at the desk all day. Jesse, thank you for kicking things off with us. We are going to let you go, get to your busy schedule. Let's take a look at what's going on the Consensus showroom floor now.
Hi, my name is Debbie Soon, and I'm the author of Digital Mavericks, A Guide to Web3 and Becoming the Main Character of the Next Internet Revolution. I am here to talk to Winnie, the founder of Chip, a microchip manicure where beauty meets tech. Winnie, tell us what on earth is Chip?
So Chip is the microchip manicure. It's an NFC chip and press-on nails that allow you to share your socials by tapping your nail to your phone. The Consensus ones are really cute. They match little just gradient vibes, so very chill, very easy. Originally, we call it your hot girl business card, so you can link all of your socials, your custom links, portfolios, LinkedIn, Telegram, whatever, even Farcaster on that card. But it's also, we do it all on our app, easy to program as possible, so you're not using like NFC tools or there's no malicious links. Chip is one of the first things, especially one of the first products that is inherently for, the women, the gays, and the bays, and like, I'm all about kind of not protecting that, but I think it's really important to acknowledge that and be like, this is it's for the girls. We're also building like a new infrastructure within the Chip ecosystem, but it's called TapStack. So essentially that allows you to turn anything into a wearable wallet layer. Just kind of building technology on that, allowing like peer-to-peer payments, payment roll-ups that allow you to just like tap to pay with NFC. So we're looking at how we can build out that infrastructure and merchandise. There's so much merch that goes on, but like, do you even wear it? Is it usable? So how can we like ship your Consensus t-shirt and then you can use that to share your socials? I'm Winnie IRL on everything, so yeah.
Welcome back. Our next guest joins us at the desk now. Kevin O'Leary, chairman of O'Leary Ventures and co-host of Shark Tank, also known as Mr. Wonderful. Welcome back to the show.
Great to be here. Thank you.
Yeah, great to be here. So we're at Consensus in Toronto. This is the first time we've brought in Consensus north of the border. Talk to us about what's going on in Canada when it comes to crypto.
Well, I mean, it's kind of interesting that we would have it here because it's a beautiful convention hall, obviously. But Canada is going through a remarkable transition right now. It's been a very tough time for the last 10 years. It's collapse of the Canadian economy, collapse of the Canadian dollar, collapse of Canadian investment, collapse of Canadian GDP. There's never been a time like this. And unfortunately, it's because of Justin Trudeau. He was an idiot. I'm just sorry, but that's true. So now we have a new leader, and we have great potential. And I think.
What are your thoughts on Mark Carney?
I think he has. Well, first of all, he's not an idiot, not like Trudeau. So this guy has a proven executional skill. You may not like his policies on green initiatives, and some don't. I'm always willing to give a new leader 100% mandate. Give him a chance. But he's got a tough job because he doesn't have a majority. And so he's got to work with the Conservatives to find a path. After all, Canada is the richest country on earth when measured proven resources per capita. We're the richest country on earth run by morons. Here's a chance where you could get Carney to reverse that course. So he has his chance. But because if you look at the history of minority governments in the parliamentary system, whether it be in Britain or in Canada, it's not good. I mean, if you don't turn the ship around in 12 to 18 months, you're gone.
What are your thoughts on his stance on crypto policy? He hasn't really elaborated on that. And so when we talk about crypto policy in Canada, where do you see that headed under Mark Carney?
I'm very optimistic that he will follow the leadership of the regulator in the U.S., which has happened, really with the OSC, the regulator here, the prime regulator in Ontario. They're watching what the SEC is doing. Paul Atkins just took over the SEC just weeks ago. He's very pro-crypto. He's made that known. So I anticipate a very positive tone in Canada as well. And I think Carney, coming out of financial services, understands the potential of what crypto can be in providing, productivity in all sectors of the Canadian economy. So I would say he'll be pro-crypto. I mean, we don't know yet, but I'm going to cut him a broad swath to let him prove himself because he can do it.
And what do you think of his interactions with Trump? I mean, it seemed that Trump liked him and they had a rapport. And what do you make of that?
Well, it's a reverse to what the reason he's prime minister is a remarkable situation. Think about this. Trump and Trudeau had a toxic relationship because during Trump's first term, the first mandate he had, Trudeau kept throwing barbs at him and darts at him all around the world, insulting him in Egypt and India and the UK. And Trump didn't like that. And I guess Trudeau never thought he'd be back. And then when Trump got back, the first thing he did was reverse that same thing. And he started doing the whole Trudeau's a governor, we're going to buy Canada. I was just having fun. But I also learned that he hates Freeland even more. And so he just hated both of those people. And that's what caused this incredible antagonistic view of Canada, which let Carney go to Canadian people. And he was so brilliant at this. I have to hand it to him. He said, don't look at the track record of my party. Doesn't matter that they impoverished 25% of the Canadian population. Don't worry that we've wiped out the currency. Don't worry that our GDP is zero. That doesn't matter. What matters is this evil guy south of the border named Trump. I will save you. And it worked. It was brilliant. Now the problem is he's got to deliver. He's got to turn Canada around. And you want to support the leader, regardless of who it is.
You've got to be firm on the tariffs.
If he doesn't do it in 12 to 18 months, he'll be gone.
Were you surprised that Carney was able to kind of flip the country very quickly? When it comes to the vote, most of Canada was leaning conservative.
Well, I think he did a brilliant job in getting people to, because the Liberals were losing by 30% because of their track record. It was the worst government in Canadian history by the numbers. You don't have to get emotional about it. They wiped the Canadian economy out. They just did. And they just had the wrong policies at the wrong time. But it was remarkable to see. That just shows you he's a pretty good, he has good executional skills. And so we want him to do that within the country now. And let's see it happen.
What do you think will be the right approach when approaching tariffs with Trump? Because we see China has had a hard stance. You were saying throw 400% tariffs against China.
Yeah.
But now we've seen them roll that back quite a bit, this 90-day pause. And on other cases with Panama, with other countries, if they give in a little, I mean, they're going to be basically slapped by
Sure,
Trump. And
sure.
so what should the Canadian approach be?
Well, I called for 400% on China as effective embargo. I didn't want any trade with them to get them to the table. They came to the table in Geneva and they started the narrative now, which I think is great. The way to look at this tariff situation, right now, let's look at the China package for the next 90 days. 10% tariffs of American goods going into China, 30% Chinese goods coming in the US, of which it's 10, reciprocal 10, plus a 20% fentanyl penalty, which could go away tomorrow if the Chinese figure out how to stop sending the components of fentanyl to Mexico and the United States. And so that's a 10 and 10. The way to look at it from the financial perspective is most countries on earth have a consumption tax called a VAT tax. You're in Italy, you buy a handbag, you go to the airport, you get your VAT tax back. France, England, Canada, same thing. The US could never sell to Congress a consumption tax, ever. However, if you put a 10% tariff on reciprocal with every other country, you've effectively introduced a consumption tax. That's what Trump is doing. And most economies can function very well between 7 and 14% consumption tax. So if they end up in the middle at 10%, reciprocal tax with every country, including Canada, that's going to work. And I think that's where we're going. And unfortunately, right now, Canada is only 2.5% of the world's GDP, so we're way at the bottom of the list of what Trump cares about, because he's trying to do 60 agreements
We're
at
a
once.
top trading partner for the United
No, I
States.
know, but I mean, you got to get the EU done, India done, Japan done, and then Canada maybe. In the meantime, he's just parked us with 25% because he hated Trudeau so much in Freeland. And I can't believe she's still in government. I mean, I'm shocked.
She's transport minister now, right?
The best thing to do with her, and I would advocate this as a Canadian taxpayer, is pay her, but don't let her come to work. Let her stay at home and just do whatever she does. And she's horrible. She's the worst manager I've ever seen.
Why do you think he kept her in government?
I have no idea. If she was working for one of my companies, I would have fired her a long time ago. Look at what she did when she was finance minister. She is the most incompetent elected official in Canadian history after Trudeau, who was an idiot. So you've got, I can't say enough, but I'm just telling the truth, I'm being honest. She was absolutely, had no executional skills.
Do you still think Canada should be the 51st state of the United States?
No, I don't think that at all. I think we should have an economic union because we would be the largest economy on earth if we combined, do the same thing the Europeans did. A common currency, a common passport option. We don't give up sovereignty. We form an economic union. We protect the northern border against Russia and China. That's the signal that Trump has given. But he detested. I mean, I was there. I watched those two interact. It was brutal. It was. Ugh.
You're familiar with Trump, correct?
I've known the guy for 17 years. We came up together on television. He was on Celebrity Apprentice, and I did Shark Tank. We started the same month in New York. That was 17 years ago. Look, he is what he is, but I always tell people, look, don't listen to the noise, listen to the signal. Trump is bombastic. He says outrageous things. He tweets out crazy stuff every morning, but he has a signal, and the signal he has is, let's combine the economies. Not buy Canada. No one's going to sell Canada. No Canadians want that. But if you ask a Canadian, would they like to take their Trudeau peso and convert it into American dollars? 11 out of 10 Canadians would do that. No, I mean, the Canadian dollar is wiped out.
Should Canada have a strategic Bitcoin reserve?
I think they should. I think every country is going to use that in the same way that gold was used 100 years ago. I mean, I'm a believer in that, but you need policy. You need law for that. We don't have that. We don't even designate Bitcoin as a security or commodity yet. A long way from that happening, a long way.
Kevin, we got to let you go, but I want to come back to one thing you said. You said that you think the Canadian regulator will watch the U.S. regulator and what they're doing when it comes to crypto regulation. The last time you and I spoke, we spoke about stablecoin legislation in the United States. Right. The last Senate vote failed to pass. I want to get your thoughts on that. What do you think is going to happen? Are you still positive on getting stablecoin legislation by summer
I'm very
recess?
close to that bill, and they're taking another shot at it. There was 9 Democrats that voted against it in the last minute. That was purely political. Most states and the federal government see the merit of a digital payment system based on the U.S. dollar because most commodities on earth price discoveries based on the US dollar, including Canadian commodities, like oil, like gas, like precious metals and precious rare earths. They're all designated and price discovered in US dollars. And so I think that will happen. It will be an important legislative move to signal that we're going to be dealing with crypto. And I believe, and I'm still an optimist, and I've said this multiple times, that crypto will be the 12th sector of the economy within 5 years, because it's so productive to the rest of the sectors, just in digital payments. Just think about what happened when Robinhood bought WonderFi. You can now transfer currency right across the border without using a bank. That's a $1 trillion industry it's ancient, it's 60-year-old technology and really high fees. You now, if you have a wallet in Canada, you have a wallet in the US, you just do a transaction of a stablecoin. I mean, that's brilliant.
All right, Kevin, we got to let you go. Thanks for joining us.
Thank you very much.
Here at the desk. Kevin O'Leary will be speaking on stage at Consensus 2025 later on today. That was chairman of O'Leary Ventures. Kevin O'Leary, we are going to take a quick break. We'll be right back. Thank you.
Good morning, and welcome to Consensus 2025.
Let's check in on the top headlines in crypto today. It's Thursday, May 15th, 2025. This is a CoinDesk Daily Special from Toronto. We're coming to you from the CoinDesk studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments, building up its payment stack from on-ramps and trading infrastructure to now enabling commerce and asset management. President Donald Trump is on track to sign stablecoin and market structure legislation before Congress recesses in August, despite a recent setback, according to White House official Bo Hines. Speaking at Consensus 2025, Trump's crypto advisor expressed optimism about ongoing negotiations and defended the Trump family's crypto ties, denying any conflict of interest. The administration is also working on a strategic Bitcoin reserve, aiming to position the U.S. as a Bitcoin superpower and the crypto capital of the world. Meanwhile, Cantor Fitzgerald chair Brandon Lutnick personally verified Tether's reserves, asserting the stablecoin is fully backed and holds more treasuries than Germany. Lutnick's firm manages Tether's treasury portfolio. At Consensus 2025, he dismissed concerns about the company's transparency, stating its monthly attestations ensure accountability. He also predicted stablecoins like Tether will dominate digital payments, citing their stability and global adoption. Finally, Cardano founder Charles Hoskinson denounced crypto tribalism at Consensus, announcing the Glacier airdrop to distribute Midnight's Night and Dusk tokens to 37 million retail users across 8 blockchains, excluding venture capitalists. The airdrop aims to foster cooperative economics, allowing recipients to keep, trade, or discard tokens freely, with Midnight's mainnet launch expected later this year. Hoskinson emphasized a cross-chain model where developers pay fees in native tokens, enabling validators to earn rewards across networks. For more news in your pocket, download the CoinDesk mobile app, available on iOS and Android. Let's take a look at the chart of the day. Shares of trading platform eToro surged nearly 29% in their NASDAQ debut, closing at $67 after opening well above the IPO price. The company raised approximately $310 million by selling nearly 6 million shares at $52 each, topping its initial price range. eToro is the first major fintech to go public amid a lull in crypto and stock platform IPOs, setting the stage for potential follow-ups from peers like Robinhood and Circle. For more updates, head on over to CoinDesk.com. Let's now turn to one of our stages and take a listen.
And diagram of like players who are into the financialization element. And so you have to design your economy knowing that there are going to be speculators, right? They're somewhere in between the players, and maybe closer to the collectors, but they don't actually want the rare thing because it's rare. They want that rare thing because number is currently going up or whatever, right? And so like, I think you just have to add another facet to your game for those people and put in some tokenomics or what have you that sort of incentivize that behavior, but not too far in either direction. You know, you can put some rails onto it. Yeah, but at the end of the day, it's just another facet of the game. And I think that's what differentiates right now Web3 gaming from gaming, is because like there's another layer that you have to think about and balance. And gaming as a whole is already so tenuous, so you add that on, it becomes even more difficult.
Last few questions as we wind down. We're not legally allowed to be at a tech conference without discussing AI. So, Theodore, how would you say AI is currently impacting gaming from that you're seeing? And I'm curious for you guys of your predictions of down the road how AI will be changing the gaming landscape. Kick us off, Theodore.
Well, so for me, AI has two very interesting use cases in gaming. Number one is I was thrilled to see the PUBG ally, they call it, right? It's your teammate that you can go and ask them to find specific ammunition for you. You can chat to via voice and make your teammate do things, which also could, you know, in some instances during off-peak times help with, you know, faster matchmaking. But in addition to that, adds a whole interesting kind of quality to the game. But the second, less talked about aspect of AI that is very interesting to me is utilizing AI for anti-cheat purposes. There's, you know, a lot of cheats out there right now that are very, very hard to detect. Mm-hmm. But when you look at when a human, let's say, analyzes, you know, certain patterns and behavior of a specific user and what the headshot percentage is or other things like that, right? How a user moves in the game, how the crosshair snaps, I'm talking about battle royale shooter games, but how the crosshair snaps to a person's head, etc. An AI could actually detect with much, much, much higher accuracy what, you know, might be happening there in terms of cheating, unlike, you know, the current anti-cheat solutions. So for me, it's those two things, right? Your teammates being much, 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 much smarter and being able to actually be talked to and be given tasks to. And then the second one is, you know, the actual anti-cheat.
I love that. Min, give us a prediction or two for the space of like, give us a quick short-term prediction for Web3 gaming, and then let's say, let's go wild, 3 to 5 years down the road prediction.
Before, I do want to say something about financialization.
Sure.
I want to say that when you're doing blockchain gaming at this stage, you got to not think of the token as a fundraising mechanism, right? That's like key, because I think a lot of the failures of blockchain gaming in the 23, 24 era is like, everyone looked at a token as like, oh, I'm going to use this to extract money. If you're going to build a great game, you got to think about it a little differently. You got to think about it as part of the game. So that's kind of like my view on that. I think that we will see games that have like a deep integration of crypto that is so fundamental to like the economy, and I'm pretty excited about that. My suspicion, which is maybe bad for us as investors, is it's gonna be like a really small team, like almost like Stardew Valley style. I don't know if people know this game, but like it's a game that was some guy built over 7 years by himself, like kind of like Minecraft as well. Like it's one or two guys just like building, and because of AI, like they're gonna be able to build amazing product, but they're gonna really like integrate the crypto stuff deeply into the game. So I think that's gonna happen. I think it's gonna be something MMO style. Yeah.
And Koji, bring us home. Last question. Give us a quick prediction of what you see happening in the Web3 gaming space.
Well, I mean, I think AI is going to change the gaming space in general, right? Like, it's going to ramp up creativity like we've never seen. You used to have to build websites by like opening text files and writing code and then renaming them HTML and putting them up, or like people used to need expensive equipment to make movies, and now they're making them on their iPhones, right? Like, I think that the barrier to entry to creating games is going to be creativity and not sort of knowledge. You know, AI is going to democratize that, so you're going to see more interesting and fun games come out in like the next 5-10 years.
Guys, that was great. Thanks so much. Thank you all. Enjoyed.
Thank you.
Summit stage just now. It's one of the hundreds of speakers. We have over 450 speakers across 6 stages, 6 summits, over 200 sessions here at Consensus. Welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments through its acquisition of Helio. MoonPay now owns Solana Pay on Shopify. I'm Christine Lee, joined by my colleague, CoinDesk's managing editor of global regulation and policy. We've got none other than Nick Day. Nick, thanks so much for joining us. A nice reunion.
How are you doing?
Very well, thank you. And I'm hearing that we have some breaking news just now on Coinbase.
Yeah, so Coinbase announced this morning that they had some kind of a data breach where customers' personal information, including it sounds like social security numbers, bank information in some cases, things of that nature were breached. Cyber sleuth Zach XVT claims that they lost up to $300 million, not through Coinbase directly, but through the customers getting kind of social engineered with their private information being out in the public or in the world. Coinbase says that they got a ransom note for $20 million, and they are saying instead of paying that ransom, they are offering a $20 million reward to anyone who can provide information that would lead to the arrest of the perpetrators of this hack or attack.
Wow. Well, we love Zach XBT. I hope he gets on that because he's been known to follow the trail very well. And I'm taking a look at Coinbase stock right now. It's down about almost 8%. Just today also, it was announced that they just entered the S&P 500. So, I mean, that is a big milestone achievement for Coinbase. They're replacing Discovery Financial. Amid this crypto bull market, we're seeing a maturity in this space, but of course, at the same time, we're seeing a lot of financial crime. Earlier, we did talk about the kidnapping of a young daughter of a CEO in a crypto firm in Paris. Some terrible video online you see of the young woman with her son and partner getting beaten, but thankfully they were able to escape thanks to some standers-by who heard the commotion and were able to assist them. So it's a strange mix, unfortunately, of this incredible boom that we're seeing in the innovation, in the growth of the crypto space, but also the financial crime that follows it. Isn't that something that's always dogged crypto?
Yeah. I mean, the France thing in particular, like, I don't know if that's a new trend or what, but this is the 3rd or 4th incident that we've heard about in the last couple of weeks alone of either kidnapping or attempted kidnapping of people for crypto.
Well, I mean, okay, earlier we heard of a father who was kidnapped and ransomed by a crypto, he was the father of a crypto influencer and was found in the back of a trunk, I believe, and was thankfully found alive and was saved. And in the other instance, it was David Vallon, who is the co-founder of Ledger, and they kidnapped him and his partner and severed his finger. And to his credit, he had a bit of a morbid humor about it. He announced he was the 9 out of 10 fingers champion. But I mean, very gruesome crime out of France.
Little a weird turn. I mean, I know, like, it's not like kidnappings are new. Kidnappings for crypto are not new, but it is interesting or weird that we've heard about so many incidents in recent months about specifically trying to get crypto out of people by kidnapping them or, their loved ones or family members. It's not great, not a good sign.
But let's our focus with today, and especially with you, and is regulation. So we'll get into that shortly. But let's take a quick look at Bitcoin right now. The CoinDesk Bitcoin price now at $101,790. $101,790. Now just a bit down, about just about 1.5%. Let's take a look at the CoinDesk Ether price now at $24.96. Also just slightly down, about 4%, which really isn't much in crypto. So I would say that for the most part, the crypto markets have been doing well as of late. And so we'll continue monitoring the crypto markets as we go along. All right, meanwhile, the Trump administration has shown progressive resolve to bring regulatory clarity to the digital asset industry. When it comes to shaping the future of digital assets, what strikes the right balance between innovation and consumer protection is what we want to find out. Here to discuss are Marta Belcher, president of the Filecoin Foundation, and Catherine Dowling, general counsel and CCO at Bitwise Asset Management. Welcome, Marta and Catherine.
Hi, thanks for having us.
Thank you so much.
Great to have you here. So we are looking at U.S. policy, U.S. regulation, and now we're in a more crypto-friendly environment. But just of late, we've seen some press back from Senate Democrats on stablecoin legislation. So very curious to hear your thoughts on where this is headed.
We are hearing very positive things about momentum. I know we've had a bit of a dial back because of some of the political noise behind the scenes, really around aspects concerning investor protection and making sure that all the language is dialed in along those lines, and the noise around some of the Trump administration involvement in crypto. So we were kind of on a smooth sailing path until that noise came around. In the immortal words of Bonnie Raitt, let's give them something to talk about. In politics, you try not to, but we have good word that there's still ongoing dialogue and negotiations, and the hope is that we get something before Memorial Day.
I would add that I think it's important to note that the vote last week was a procedural vote, not a vote on the substance. So I wouldn't take that to mean that the bill itself will not pass.
Yeah, it's an important distinction because it is a procedural modality, not the actual vote.
Are you very active in speaking with policymakers, and if so, what are you trying to do in terms of education, guidance, and what are the priorities?
So I would like to say that I think we have a very narrow window to get legislation through. I think really the end of the year is probably the end of the crypto industry's window. It's a very narrow window, and I think it's probably existential for the industry that we get both stablecoin and market structure legislation in that time. After that, we have midterms. Much less likely we're going to be able to get anything through, I think, after the midterms or in the same year as the midterms. I think we don't know what we're going to see in the next administration in terms of backlash against crypto. So I think it's critical that the industry really comes together and gets legislation passed now.
I'm optimistic that we will get legislation. The dialogue has been about making sure that we get stablecoin first, then market structure before the August recess happens. And everything I'm hearing in the conversations that I've been a part of, that is all moving forward.
But is this becoming a bipartisan issue?
It is not. I think the noise around the edges is where there's the political drama, right? But I do find that is solvable, and I think both sides, and when you talk to both sides, it is solvable. I think that main road of getting stablecoin, there's dedication on both sides to it, which we saw in the last Congress as well. So this is just building on the last Congress, adding verbiage to it that makes everybody comfortable, makes everybody willing to come to an actual vote.
I would add, I don't think that any party can really be anti an entire technology. I don't think that a party can be anti-crypto or anti-internet, right, or anti any other technology if they're really taking the future of America seriously.
So some of the concerns that we heard, last week before the vote, a lot of them were kind of centered around the U.S. President Donald Trump and his forays into crypto. We also heard some of the lawmakers, led by Senator Ruben Gallego, saying that they are also really focused on things like consumer protection, making sure that there's no national security concerns being opened up by allowing stablecoin issuers to proliferate. And then yesterday, Senator Kirsten Gillibrand, one of the co-sponsors of the legislation, said that she expects that the Trump concerns will not be addressed, but everything else should be. Have you heard, is that kind of where we're headed? Are we going to see, maybe new legislation in the coming, or new text of the legislation in the coming days that would kind of be that, medium compromise for the lawmakers that are concerned with all these side effects from the crypto proliferation?
Well, that's what's happening behind the scenes right now with conversations together and apart to make sure that everybody's concerns are met, because people are they're taking their stand, whether it's on market structure, on stablecoin, making sure that their concerns are met and that that they're comfortable ultimately signing the bill. But it's a small fraction of the conversation where there's still fractions out there. As Mart has already said, that mainstream getting stablecoin legislation, it's not a bipartisan issue at this point. It's just those kind of side lanes of making sure that everybody's comfortable with the ultimate language.
Mm-hmm.
So one thing that strikes me is, Mart, I want to throw to you first here, but stablecoins were supposed to be the easy one. This was going to be the bill that would sail through. Market structure is the hard one. That's going to come up next. What does this portend for that debate that's coming up?
I'm really worried about it. I really am. I'm really concerned that we're not going to get legislation through this year. And as I've said, I think we have a very narrow window. I think the industry needs to be very willing to compromise. I think we need to be very careful not to have industry infighting. I think we're all going to need to work together and not expect the bills to be perfect in order to get them through. And I really do think it's existential that we get them through this year.
Well, there's the new market structure draft is out. There are areas open for comment. So right now, that's what's going on as well. Lots of dialogue about, okay, what's been added to this? We had Fit 21 as the foundation. What's been perfected? What's the focus? So that's what's going on now. So I think it's out there. So it's no longer an academic exercise for this Congress. That draft has started, and the debate is ongoing. I agree that we do have to keep hyper-focused to make sure that we don't lose that focus, because you can lose time on the floor and the other things come up around the world. So we have to make sure that we kind of keep the eyes on the prize and make sure that we continue that dialogue, comment where it's needed, and get the actual language in the bill. And hopefully we'll have that before the August recess.
What are your thoughts on this news about Trump's meme coin, the Trump meme coin, that there are small companies with ties to China, foreign companies, and in this particular case, this company announced that they're buying $300 million worth of Bitcoin and Trump meme token, and there's concerns around there about potential foreign influence and the presidency. How do you balance that out with the a need for desire for innovation, but
yeah, absolutely, and that is in fact some of the noise that's happening around the edges, and these, if true, and it's really hard to distinguish between the fact and fiction here, but if true, those are important concerns to make sure that we keep out of an ability to have influence, foreign influence, et cetera, and that is the noise that's going on. So it's important that it gets addressed, and it is getting addressed, but I would like it to not clutter the need to have this legislation move forward.
Yeah, I would add that I really do worry that will play a role in delaying legislation or, unfortunately leading to a position where we don't actually get legislation this year.
So I know originally, couple weeks or months ago, David Sachs, the White House Crypto and AI czar, and the chairs of the House and Senate Finance and Agriculture committees all came together and said, we think all these bills will be on the president's desk by August, something before the August recess. First off, is that still a realistic timeline? And then if not, what do you see as the latest date by which this stuff can move before we're in midterm season again?
I think that is the best option to get a clean bill forward on this topic. But if you can do kind of end of year tag-ons, which can happen, the Christmas tree lights, but hopefully it doesn't come to that. Hopefully we can keep focused and get there, because it's important.
The staff is moving very quickly, and I really hope we can get it done before August recess. I don't know if it's realistic. I think it's absolutely critical that it's done by the end of the year before we get into the year of next year's midterms.
Ladies, any thoughts on a strategic Bitcoin reserve? That is actually going to happen.
Yeah, absolutely. I also am optimistic that that will happen as well. And I think, I personally think it's a great idea. And I think it should happen. We, in this country, we have strategic reserves on a multitude of things. We have strategic reserve cheese, helium, right? It's basically in the global game of risk, why wouldn't we have a strategic reserve of an important asset? And I think it's a first mover advantage to declare it and to do it. And as we saw after that announcement was made, a number of other governments also started to look at that. There were other governments that were already looking at it. And then we also have had many companies jump in from a treasury standpoint to look at this as a Bitcoin as as digital as a digital gold, right? So I think it's important, and I think it'll move forward as well.
I think if there's a strategic crypto reserve, I really hope that there's objective criteria for what gets included, because I think it makes sense to include things beyond Bitcoin, but I think it should be based on objective criteria.
Yeah, Trump did sign an executive order for establishing a Bitcoin strategic reserve as well as a crypto stockpile. So I guess there are questions about how to acquire Bitcoin and what goes into the crypto stockpile. And I suppose other than that, what is key going forward with legislation is how to balance consumer protection with the innovation. And I'd like to hear your thoughts on how you strike that balance, as we see many in retail often lose out when there are these token launches and whatnot.
Right, and I think a lot of what's happened in retail in the past, when you've seen the headline grabbers of people losing funds, losing money, has actually been a function of the fact of not having the regulatory clarity and having really good viable options for investment where there is more transparency, right? So like look at even just the stablecoin bill itself, right? Having an audit of these, having reserves, having an audit, right? Having that ability as a potential investor to see through to that and make your choices on an educated basis. Now, if we have more viable products, my thought is that your retail investors will have better and potentially safer options. Still volatile options. These are, there's still assets you should look at from that perspective for your own investment choice, but there will be more information out there. So I think we'll have actually fewer incidents of that. So I think it's important, the investor protection, the devil is in the definitional details, right? So making sure that if you are asking a protocol to provide information, that they're actually in a position to do so. So that's also what's going on now with how we define it and who falls on which side of having to provide different information.
I would add that, I think a lot of the most egregious behavior that we see is already illegal, right? If you are committing fraud, it doesn't matter what technology you use to commit fraud, whether it's US dollars or cryptocurrency or pen and paper or the telephone. And so a lot of it really is already illegal, and we have to remember that as well.
Mm-hmm. So switching gears a little bit, we talked about this a bit on stage yesterday, but Marta, you are also the president of the Blockchain Association Board. That's one of the chief lobbying groups for crypto in Washington, D.C. And you've announced a new CEO.
We have. I could not be more excited about Blockchain Association's new CEO. CFTC Commissioner Summer Mersinger is going to be joining Blockchain Association on June 2nd, following stepping down at the end of the month from the CFTC. I think she is the perfect leader for Blockchain Association and for the industry's policy efforts. In addition to understanding the CFTC deeply and how to navigate financial regulations, she also spent a lot of time in Congress in both chambers as a senior staffer, including working for a long time with Senate Majority Leader Thune. So we could not be more thrilled. We think she's the ideal leader for the industry.
All right, well, congratulations, and thank you so much for joining us this morning.
Thanks for having us.
Thanks
so much.
All right, that was Filecoin Foundation President Marta Belcher and Bitwise Asset Management CCO Catherine Dowling. Meanwhile, will Drake make an appearance at Consensus? What do you think? Bettors on myriad markets are placing their bets on whether the King of the Six will be here with us. Let's take a look at what the poll says. We have 4 prediction markets on myriad markets, 3 of which are points markets, so for fun only. They are, will Drake show up in person at Consensus 2025? Will Eric Trump mention President Trump more than 3 times? And will MoonPay president Keith Grossman tweet more than 20 exclamation points during consensus? There is only one market that you can bet USDC against, and that is, will Bitcoin hit $110,000 during consensus? Join in on the fun at Myriad Markets.
Hello and welcome back to the CoinDesk studio live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. MoonPay recently made 2 historic 9-figure acquisitions in Helio and Iron, allowing it to build up its payment stack from on-ramps and trading to now enabling commerce and asset management. I'm Jen Sanasi, here with CoinDesk's Nick Day. Nick, I've been asking everyone at this desk why they are so excited about Consensus, and I don't think I've asked you yet, so tell me what's going on.
You know, it's been hard to believe it's day 2.
Yeah.
I'm so looking forward to going to bed on Saturday night. It's been good having a lot of conversations. My beat obviously is regulatory. It's nice meeting regulators, lawyers, people who are active and working on that part. At Consensus. Most of my conversations are on Zoom or via phone call or whatever. So being able to shake hands is actually genuinely a pleasure. We have a lot of regulators here that I did not expect. So far, so good.
Why is that so surprising to you?
Getting policymakers and regulators at a crypto event is not the easiest thing in the world. They don't always, sometimes they want to come, but they can't get permission from their entities because we're a crypto group. Sometimes they just don't want to come. But Consensus has always been like the one event where we've been able to find policymakers and regulators. This year, obviously, no exception. We had French Hill, the chair of the House Financial Services Committee, on stage yesterday, so that was nice. He and his predecessor, Patrick Henry, have been a constant presence at CoinDesk, and they're among the few lawmakers who have been.
Any representation from the SEC here? The reason I ask you that is usually at this desk we have SEC Commissioner Hester Peirce join us for at least one segment. I've noticed she's not on the schedule. I know she's a busy woman these days. Any representation from the SEC here at Consensus?
I don't think so, not this year anyway. We'll see if that changes next year when we're in Miami, but I don't think we have much in the way of U.S. regulators. We did have a couple folks from the New York Department of Financial Services, including Superintendent Adrian Harris yesterday. And I think, honestly, that may be, at the state level, may well be it.
Well, I want to talk to you a little bit about the SEC. Of course, we've had the SEC roundtables that have happened, I think, every second week of, leading up to consensus. I know you followed those very closely. Talking about the progress that's been made in the conversations the SEC has had during those roundtables with people in the industry, and how you are talking to your sources about how that might impact regulation.
Yeah, I mean, the conversations have generally been at the roundtables themselves, to some extent academic, talking about here's what this tech can do, here's what it has the potential to do, here's how we're looking at it, here's how you could look at it. Behind the scenes, I understand that a lot of companies and a lot of individuals are also talking to the SEC. They're meeting with staffers, they're meeting with commissioners, and trying to explain, at a practical level, here is all the stuff that we are doing. And the combination of all these conversations, both the roundtables and these private ones, is what I think will lead to whatever kind of rulemaking we'll see. New Chair Paul Atkins was on at the roundtable on Monday, the latest one, and said that the SEC has the ability to start all some of this rulemaking on its own. They don't need to wait for Congress to pass a market structure bill. They can get started. So we may well start seeing progress, or let me rephrase that. We may well start seeing these tangible signs of progress in the coming months.
If you're just joining us, we are coming to you from the CoinDesk studio at Consensus 2025. I'm Jen Sanasi, here with Nick Day, and now Paul Hastings' partner, Renato Mariotti, joins us at the desk. Renato, Nick and I were just talking about the SEC roundtables that you and I have watched together on CoinDesk over the past multiple weeks. Talk to us a little bit about how you are looking at what's going on at the SEC roundtables. I know we spoke about it yesterday here at the desk, and how that's going to impact rulemaking.
Yeah, I really think the SEC roundtables and rulemaking are almost on a separate track from the legislation. They're like two ships that don't pass at all in the night. So you've got the legislation in which the CFTC is paramount, everything's a digital commodity, and then we have SEC rulemaking, which, as Nick said, is trucking along on a separate track. It looks like they will reach the end zone. It's like the tortoise and the hare. They're going to reach the end zone before the legislation will. If the legislation ends up passing, then the SEC is going to have a lot of work to do to clean that up and try to harmonize their rules with the legislation. But of course, it's possible that we aren't going to have that legislation, in which case I think all going to be grateful that the SEC has been doing something in the meantime.
Renato, when you were at the desk yesterday, we were talking about the conversations you were having on the consensus floor about leaders in this industry and how they're looking at the two pieces of legislation that we have right now. We have stablecoin legislation, we have market structure legislation. Everyone who's come to this desk has been very positive, but you said that some folks are a little bit worried about what could happen. We had Kevin O'Leary at the desk this morning. He said he's very close to the stablecoin bill. He's still very optimistic that that's going to happen before August recess. But just give us a little bit of a refresher there, and how you are thinking. Have the conversations changed? Do you still feel the same way you felt yesterday?
Sure. A lot of people in this space really are concerned about market structure primarily. Yeah. Market structure, I was talking to a leader in the industry yesterday who said market structure is absolutely existential. If we do not get the market structure bill passed, it's essentially an existential moment for the industry. And I've also heard from a lot of folks, including some of the biggest names in the industry, that want to tie market structure and stablecoin together. They're arguing that there are ways in which the two bills refer to each other, which is true. But the bottom line is really that TradFi is very interested in stablecoins, but this industry is really focused on market structure, wants that to happen, doesn't want stablecoin to happen and not market structure. Well, what I am hearing is an increased concern and skepticism from some of the biggest names in this industry about whether or not that's going to happen. I had one, chief legal officer of a big company yesterday tell me that what he's concerned about is all the Democrats banded together, walked out on stablecoin, had their own counter programming. He thinks it's going to be difficult to disentangle the political issues from that, and that really throws everything up in the air, and they're really not sure what to do because they don't want SEC rulemaking to be the market, essentially the substitute for a market structure bill.
Nick, what have you been hearing?
Yeah, honestly, similar, not to the extent of existential crisis, but we were just talking with Marta and Catherine earlier on this studio, and if they don't pass, it is going to be a major issue for the industry. If one of the bills passes and market structure does not, it's going to be an issue of some sort for sure. The SEC can do all the rulemaking at once. The CFTC can do all the rulemaking at once, but there's always the possibility that a new administration can come in and undo or overturn whatever, launch new rulemaking that goes in a different direction if it's not legislatively prescribed. So I think that is one major concern. And the other one is that the status quo remains, that the agencies spend time on rulemaking but don't actually get to issuing these rules to publishing them, and Congress gets bogged down in we have a budget fight coming up at the end of the year. There's going to be passing the National Defense Act every year, so they're going to be distracted by other things, and then we're in midterm season, and the 2026 midterms are going to be to some extent not saying it's going to be a referendum on the president, but I imagine that's going to be a pretty big issue, and crypto is going to be not necessarily as high a priority for candidates, voters, etc.
Yeah, I mean, you could also imagine having these bills hanging out there may be good for politicians in Washington, because it'll incentivize and encourage others to continue to contribute to their campaigns, because these bills are still up in the air. But I think, Nick, there's a lot in this industry, a lot of folks in this industry who are concerned that if the midterms occur before these bills get passed, you're never going to get them passed, because ultimately, historically, the House majority will change in a midterm election. Of course, Republicans, I think, have a 1 or 2 seat majority at this point.
Very narrow.
Yeah, it's extraordinarily narrow. So realistically, there's a really good chance that there's going to be a new party in Congress that might require a recalibrating of that bill. So it's hard to get things done in Washington, and when you have the opportunity, when you're this close to the finish line, people want to make it happen. But I think it's fair to say that the trajectory of this industry is going to be determined in large part on how these bills play out in the next several months.
All right, we're going to talk more about that with our guests coming up soon. We are going to let Nick go. He's a very, very busy guy around Consensus. We're going to take a quick break. We will be right back.
What I'm talking about.
As the U.S. Senate stalls on advancing a stablecoin bill, House lawmakers have unveiled a sweeping draft to define crypto market structure. Joining the show now to break down where we go from here are TRM Labs Global Head of Policy, Ari Redbord, and GSR Global Deputy General Counsel and Chief Strategy Officer, Josh Rossman. Hello.
Hello. It is so cool to be in person with you. I feel
lovely.
like you are not a face on a screen. You are here. Huge show, huge floor, really exciting.
You know what I think we have to get out of the way?
Uh-oh.
Ari,
You did not run with me this morning. I mean, promises have been made. It was on live TV.
Every consensus we do this.
Miami 2026 TRM Run Club.
I got to start training now.
Right. I will say, in all seriousness, it was so cool. We had our biggest group ever this morning. About 60, 65 people showed up. We ran along on the lakeshore. It was cool, like policymakers, regulators, builders in the space. Having just like really cool conversations running. I mean, it's shockingly cool.
Okay, the most shocking part for me is that they can have conversations while running.
Hey, Paul Gruel, the GC of Coinbase, taught me this: conversational pace. So when people ask me like, "What is your pace?" It's conversational. We have conversations. We talk about family. We talk about building. It's very cool.
My conversational pace is walking. So
we had walkers.
Okay.
So Miami 2026.
Miami,
you heard it here.
We'll do
I'll think about it.
Why not?
Speak into the camera. You heard it here first. Miami 2026.
Conversational pace. I'm holding you to that.
All right. At the desk, we've been talking all about legislation. We were just talking about market structure. We were talking about stablecoin. But I think let's start with market structure. And Josh, I want to kick it off with you. What's your read on what's going to happen with market structure? Do you think that's going to get passed this year? And if it doesn't, what does that mean for the industry?
Look, I think the general consensus, and I think several speakers have been here talking about it today, is we first have to see what happens with stablecoin, unfortunately, and see where the bipartisan consensus is on passing serious legislation for crypto. And this is a great test case as we move to market structure, which is decidedly more complicated than stablecoins, which is ready to go, pretty clear. Yes, there's trade-offs in it, but the market structure bill is going to be much more complicated and have a much bigger impact on regulation over our markets. And so it's a long ways between here and there, but there is bipartisan support, which is rare, as we know. And with that, I think there is something to be done, hopefully by summer, in best case scenario.
Yeah, that doesn't sound like a super optimistic take. Looking at the market structure bill, one thing I find interesting, market structure bill, I think, gives the CFTC a very large role. I think the definition of digital commodities in that draft that was circulated, quite broad. So we also have, obviously, parallel SEC rulemaking, kind of operating on a different track. What is your take on the balance between the CFTC and SEC that's drawn in the draft versus, of course, what I think the SEC would prefer and will come out of their rulemaking?
Yeah. I mean, on the first read, and we're all still kind of digesting this, but I think ultimately it's striking a decent balance, maybe giving a little bit more deference to the SEC than you would have originally expected. That being said, what's incredibly important for market participants that GSR works with and in the area that we're in is it's now much clearer than it was in FIT 21 that the CFTC has sole authority over the secondary markets. And this was not there in FIT 21. So this is a huge step change and improvement from where we are before. That being said, you're going to end up in a situation where potentially ATSs under SEC jurisdiction get a little bit broader capabilities of what they're able to include from both a digital equity perspective and digital commodity perspective. And then also even something like notice registration, where you can notice register with the SEC, but not with the CFTC. So there's a little deference to the SEC seeming a little big brothery to the CFTC maybe. But from a general getting it right on the secondary markets, we're super excited where that is.
Just one thing to add quickly, I think you were getting to this, and that is this is why this is going to take some time. And the reality is we're still essentially working off whether it's a draft or whether it's sort of preconceived ideas about who is ultimately going to regulate or who should regulate the space, maybe even from the prior administration. And I think what we're going to see over the next couple of months is a real conversation between the SEC and the CFTC, which we've really never seen before, right? The two regulators get together and maybe even start to talk about hey, these are the things that we should be doing here vis-a-vis a market structure bill. These are the things you should be doing, and then work with the Hill to ultimately get this right. I think the one thing we have going for us, which we didn't have 6 months ago, and that is a regulatory environment that's favorable to the space while we work this all out, right? So this whole idea, we need market structure. I think that clients we work with every day, whether they're banks or crypto businesses, want rules of the road. But the reality right now is that the SEC is not only holding, roundtables, but they're having private meetings with the industry every day. And it's really extraordinary to see. And I think that the reality is we are going to see that play out over the next several months while the Hill gets this right. But this gives us a little bit more wiggle room than, say, we would have had a few months ago to have these conversations.
Yeah, but if we don't get this done before the midterm, will it ever happen?
I think it's an open question. You rarely get anything done. You rarely get anything done after a midterm, depending on the sort of ultimately the environment, particularly in a essentially second term situation like we're in today. So I think the challenge is we have to move quickly, but this is going to take some time. And to your point, stablecoin shouldn't though. Right, we're going to have crypto legislation in the U.S. and it's going to be stablecoins. I'm really hopeful. I think there's some great reporting today. Ellie Tourette tweeted that there's some concessions being made. It looks like there might be a draft where there's some agreement there. Let's move this thing forward. I testified before House Financial Services 2.5 years ago. Maxine Waters was the chair, and the first question she asked me was, do we need stablecoin legislation? Can we get this done? And I said, yes. I mean, like, we need this. It should have happened 2.5 years ago. It's easy. Every regulator in the world globally has clear rules of the road that are very similar to what we will ultimately have in a combined stablecoin bill in the U.S. Congress. So I think that needs to happen. And then let's work on market structure.
I think, Renato, you brought this point up yesterday. The difference between now and then was that there are very big players, very big banks and financial institutions that want the stablecoin legislation to pass, that want to be able to operate within the stablecoin realm, and maybe that's the difference. Maybe that's why this moves faster.
I mean, it's unbelievable. Like, if you ask me, like, sort of what are the really most important things happening in the space right now, the regulatory environment is certainly one. But equally important is the way we've seen these large financial institutions engage. You know, are they issuing stable coins? Like, look, we have now custody, permissive sort of custody guidance from financial regulators, the OCC and others. Like, that's exciting. And if you had asked me a couple years ago whether the banks would be like, wanting to be able to do these things and not only wanting to do them, but have legislation that supports it, I mean, I think that's probably, if I had to rank them 1 and 2, I'd say that's even more important than legislation right now.
Yeah, you also mentioned, I think actually Josh mentioned, SEC regulating ATSs and trying to come out with a regulatory framework for that. That's something that Chair Atkins mentioned, I believe, during the last roundtable. Any thoughts on what we can expect to see in that area from the SEC?
You're saying, sorry, on what do we expect with ATSs?
Yeah.
And the SEC? So look, I think what we expect is I think everybody wants is you be able to log into your one app and trade everything, right? Both from a retail side, but also from an institutional side. And that there's some unnecessary separations in the United States that don't exist in other jurisdictions. And so how do we make it easy through this regulatory process to combine these things? And you've heard Commissioner Pierce talk about this as well, as like you might want to see pairs between digital commodities and digital securities. And why not? I think that's something people are looking for, and so we should allow for that and not kind of create a line through potential markets innovation because of where the CFTC and SEC works off. And coming from my previous practice in traditional markets and prime services, there's a lot of areas where the SEC and CFTC work together, and we kind of move assets potentially back and forth. And I think there's a world for us here with crypto where these agencies are going to come a little bit closer together to regulate the space.
Ari, I'm curious to hear your perspective on the proposed market structure draft from an AML and compliance lens.
Sure. I think, and stablecoins also, I think there's some really key AML provisions in there. Essentially, stablecoin issuers are going to be required to have the same types of anti-money laundering, KYC controls that any business essentially is required to have today. I think that's what people often miss about this. We talk about needing legal clarity in the space. This is the one issue that's actually been pretty clear for years. If you are a crypto business, if you're a virtual asset service provider, an exchange, a custodian, a broker, you're required to have pretty robust anti-money laundering controls today. And I say this is not the Wild West, right? Like, so if you're a large exchange, if you're a stablecoin issuer, you're essentially a money service business and required to have these controls in place today. The stablecoin legislation, really genius what's in there today, codifies that. And we'll see, and there's very similar language in the market structure bill. So I think there's all kinds of much more interesting questions around the sort of truly decentralized space where I think there's open questions, and I don't know that we'll get to that for a while in terms of Congress or any global regulator. But I think right now it's pretty clear, and any market structure bill will treat exchanges, custodians, brokers, ATM, vendors as money service businesses, which is important. And it will stop bad actors or help stop bad actors, keep bad actors out of the ecosystem.
One of the things that I think is interesting about the current draft of the market structure bill is it gives spot authority on digital commodities to the CFTC, which I believe Josh mentioned a moment ago. So you could potentially have a DCM regulated by the CFTC trading spot crypto, trading crypto derivatives. Potentially, it seemed like there was a pathway in that to have the same entity also register with the SEC and potentially be allowing trade of securities at the same time. So I think we seem like we're getting a lot closer to that, nirvana that we were talking about a moment ago of all these, having one-stop shop.
Yeah, I think, look, from GSR's perspective as a kind of capital markets partner to a wide variety of institutions in the space, what are they looking for? They are looking for certainty so that they can invest in the future. And one of the pieces there is, what can I trade, where, and how? And even today, it's increasingly unclear, and the market's incredibly bifurcated. And importantly for us, the liquidity is bifurcated. And so the more we can get rules that brings the liquidity together, that's more robust markets for not only for institutional players, but for retail as well. And you're going to see better prices, smaller spreads, and that's better for the entire space. And so, to your point, clarity around bringing things together, bringing liquidity into the United States, where a lot of it's currently offshore, is a win-win-win-win. And so we're extremely supportive of those solutions.
I spend a lot of time with global regulators. Also, I was in Zurich last week at a conference, and I met with the Monetary Authority of Singapore. And you have the CFTC, the SEC, the Fed, the US Treasury, all rolled into one. And I think the biggest challenge that we've always had in terms of legislation, in terms of regulation in the US in this space, is there is so much overlap, right? And I think we've always had this tension around the CFTC wants to regulate the space, the SEC wants to regulate the space. I think if you ask me sort of what is the best thing this administration has done to date in terms of crypto, it is to basically force the conversation between these regulators to say, hey, you guys come up with something in terms of the executive order, and put people on top of these agencies, at the top of these agencies, who are willing to have that conversation with each other. We're never going to be the Monetary Authority of Singapore. We're always going to have this disparate landscape when it comes to financial regulators, but they should be talking to each other. And that's happening now in a way that it wasn't happening 6 months ago.
And it's a real credit to those agencies and the staff that's been put in place. They're taking an extremely proactive approach, not how to avoid regulation, but how to regulate correctly. And I think it's important for people to applaud the efforts that are underway.
Ari, Josh, we gotta leave it there.
Yeah.
Thanks so much for joining us at the desk, and we'll see you around the conference.
Thanks for having us. Yep.
All right, that was TRM Labs Global Head of Policy, Ari Redbord, and GSR Global Deputy General Counsel and Chief Strategy Officer, Josh Reisman. Bermuda has been one of the more forward-thinking jurisdictions when it comes to digital assets and financial innovation. Under the leadership of Premier David Burke, the island has built a reputation for regulatory clarity and progressive policy making. Premier Burke joins the show now. Welcome.
Hey, how you doing, Jen? Good to see you.
Doing great. Renato's here with me too, and you were just telling us that you wore orange for a very specific reason today.
Yeah, well, typically I'm in my Bermuda pink, but I had my reception yesterday, so I decided to go with the orange for, the orange pill. I even have my on-chain monkey socks on. You can't see them. Rocking and rolling today.
I got to ask you, this is not the first time that we've chatted at Consensus. Why do you keep coming back to this event?
Well, Consensus holds a very special place in my heart. The very first consensus I was at was 2018, New York Hilton, the zoo, Lambo's outside, but at that point in time, I remember I was granted an audience on the main stage, and I had announced to everyone that that Friday in Parliament, we were going to be passing or introducing the Digital Asset Business Act. Fast forward 7 years now. Bermuda is now a very mature jurisdiction. We've attracted global names that are able to do things under our regulatory framework, which is, without question, second to none globally.
So we've been talking a lot today about some of the changes in the U.S. when it comes to regulatory landscape. Of course, the United States is not the only country that's trying to catch up to Bermuda, ironically. How do the changes in these other countries potentially impact Bermuda's ability to attract business?
So I guess what I would say is that it's nice to see that people are trying to catch up. And I was in a panel earlier, and they were talking about forthcoming legislation in the United States, hopefully. And I says, we've had stablecoin legislation for 7 years, and it is working. But how those the changes in other places will impact us is that we feel that that is just helpful, because we know that we have a particular role to play in Bermuda, and the more countries that come on board understanding how to regulate digital assets in a good and proper way to allow innovation, I think is only beneficial for us as we press forward. So we know that a lot of people have copied what it is that we've done, referred to what we've done. I mean, we've been talking, whether it's with the OECD, FATF, even in-house financial services as way back as 5 years, sharing what it is that we've done. So we're perfectly comfortable for people, coming up to speed as well, because it's only better for the industry globally.
I want to build on what Renato just asked. The U.S. really trying to figure out legislation and regulation, trying to keep crypto companies there in America, American-made companies, I think is kind of the notion that President Trump uses. We have places like Hong Kong, we have places like the Middle East also trying to attract builders. How do you think about attracting builders to Bermuda when there's this real competitive race to keep innovation within the borders in these places?
Well, I think what's interesting is that Bermuda, of course, is a very small jurisdiction. And so we're not expecting to have, multiple offices, multiple persons, all the rest. We know where we specialize, and where we specialize is in providing regulatory clarity when it comes to digital assets. So you take it back, when I said we introduced in 2018, in 2019 we gave regulatory clarity for derivatives, in 2021 we gave regulatory clarity for lending and staking. Now we're moving on to digital identity with federated identity, making sure that we provide regulatory clarity for that, and also moving forward with artificial intelligence. So from the perspective which we had, it is just making sure that we are not, to give Canadian hockey parlance, going to where the puck will be rather than where the puck is. And so we're looking very much forward because we want innovation to still happen. And companies are coming to Bermuda to serve international markets using our regulatory regime, which is, as I said, second to none.
So, I want to build off what you just said. You talked about going to where the puck will be as opposed to where the puck is now. You've been an innovator in the past. We talked about at the first consensus that you were at, where you were sort of out in front of the United States and many other jurisdictions. What are you doing now? What's the next frontier? Where can you be ahead of the, not only the United States, but all these jurisdictions that Jen's talking about? Is there a particular legislation that you have in mind? You mentioned AI that you're working on now.
So the next three things for us, number one is digital identity. This is something that we said that we were going to advance and we passed this year, where we're going to allow we're licensing identity issuers, viewing identity as a regulatory issue, not as a technology issue. So people issue identity all the time, the credentials of which they issue, those type of companies will be licensed, so we know that the government and other persons can rely on them for financial transactions. When it comes to the matters related to DeFi, one of the things in which our monetary authorities are already piloting currently is embedded supervision for DeFi protocols, so we can actually regulate the world of DeFi, which is important as this thing's press forward. And then finally, onto the space of artificial intelligence, we are looking at how we deal with the licensing and registration of agents, especially if they're going to be doing items that are related to financial services. So there's a number of things in which we're continuing to press, and our regulator is very open. We share everything on our website, bma.bm, so people can look at what is taking place and can respond to the various papers which we're putting out to make sure our regulatory regime works for industry.
I want to touch on AI a little bit. Will Bermuda be the leader in AI legislation? Are you hoping to take that lead again?
No, I don't think so. I think the world of AI is too broad for a small jurisdiction like us, and there's large jurisdictions that are doing things, and I think that happens more in a global context where they're talking about the data rules, et cetera. We know that we are more rule takers in that aspect, but where we know that we can excel is artificial intelligence use within financial services. What does that look like? How are those type of items regulated, and making sure that the risks to consumers are protected? And so from that aspect, I think that's the niche of where we can play, rather than looking at boiling the ocean.
You know, you made a really smart comment there a moment ago, I thought, where you were talking about, you had an understanding of where Bermuda could be, let's say, within AI, right? You know, this space, the crypto space that we're talking about, has also changed. It's matured. Now, as Jen mentioned a moment ago, all these other jurisdictions are coming. Does Bermuda's role, let's say, in 2027 or 2028, look different than its role in 2018, and how does that change? How are you changing your regulatory framework or your strategy in order to meet that?
So I don't actually think it'll be different. I think that the benefit of being such a small jurisdiction is that we can make changes a lot quicker. I mean, one of the things that people always say, Bermuda moves at the speed of a startup. We have to, because we need to make sure that we are ahead. And the fortunate thing that we have, when I say that our regulator is the best digital asset regulator on the planet, it is because of the fact that for the last 7 years, we've had no turnover inside of our regulators. So they know everything, they've seen everything, they understand. And it's important to note that we not only do just pure digital assets, we're also doing innovative things in insurance as well. And so when we're talking about that, when we're talking about the yield-bearing stablecoins, we're talking about using stablecoins as collateral for insurance transactions and the broadening of the financial services landscape. It's not just digital assets, it's what can you do with digital assets to make broader financial services more efficient and better? And that is where I think we'll play. So we look at it as a broad digital finance portfolio. Crypto is certainly a huge part to play inside of that, but it is the types of things that are enabled in the broader financial services marketplace, which we're really excited about.
Premier, we're going to have to leave it there. Thank you so much for joining us at the desk, and we'll see you around the conference.
It's a pleasure to see you as always. Thank you for having me. Best wishes.
Thank you.
That was Bermuda Premier David Burke. Our next guest joins us now. MoonPay co-founder and CEO Ivan Soto-Wright joins me at the desk. Hello.
Hey, how you doing?
I'm doing great. You have some big news to announce this morning. I'm going to hand it over to you. Talk to me about what you announced.
Yeah, well today, MoonPay Mastercard. So very big announcement for us. Really, MoonPay is all about building the backwards compatibility to the existing financial system. Right now, the topic that's on vogue is stablecoins. Every conference you go to, you're probably hearing about stablecoins. They're a really big deal. They're essentially dollars on a blockchain. Anyone in the world can receive stablecoins at a fraction of the cost of the traditional financial system. And so we've made a big bet on investing in stablecoins, investing in the infrastructure, and now we're taking it to the next level. We want stablecoins to be spendable. So we partnered with MasterCard. We're embedding virtual accounts everywhere through our partnership with Iron. And the next step from there is those virtual accounts are immediately compatible with MasterCard. So 150 million merchants or places where you can accept MasterCard, now you can use your stablecoins.
You'll be able to use your stablecoins. That's incredible. I'm curious how, you mentioned it, stablecoins are very much in vogue. Everyone has a stablecoin strategy. How are you thinking about competing with, I guess, PayPal when it comes to acquiring customers, getting them to spend their stablecoins? What makes MoonPay the place to be?
Yeah, so we definitely don't see PayPal as a competitor. We actually see them very much as a friend and a partner. We're actually the exclusive partner of Venmo inside of the vast majority of crypto wallet applications today. Really, if you think about MoonPay's core product offering, it's on-ramp. So you have a cryptocurrency wallet, you want to put money inside that cryptocurrency wallet, you want to use your debit card, you want to use your PayPal, you want to use your Venmo. And so for us, it's actually broadening the reach of PayPal's solution everywhere where MoonPay is integrated. So when it comes to stablecoins, though, our goal is to be agnostic. We want to power as many of the stablecoin providers in the ecosystem today. MoonPay has always been agnostic in terms of crypto assets, and so we see ourselves as an orchestration layer. We see ourselves as a place of infrastructure to make it easy for people to get the cryptocurrencies that they want.
Ivan, what does the future of stablecoins look like to you? I mean, when you go to work every day, what's the future you're building towards?
Yeah, well, if you think about just even remittances and how broken it is, 800 million people receive remittances outside the US, family members abroad sending money to people in other countries. If you think about the traditional system, it costs up to 6% to receive money through legacy payment rails. With a stable coin on a blockchain, someone can receive it in seconds. It's 24/7. Massively reduces the cost, right? You can do it at a fraction of a penny. And so for me, it's an upgrade in the technology. If you think about the legacy financial system, we had all these different payment systems that didn't communicate with each other in different parts of the world. The blockchain is a shared language on the internet. So for me, it's obvious that this technology will be adopted. I think cryptocurrency wallets are going to be embedded into pretty much every major application. There'll be standalone cryptocurrency wallets. You'll see them inside of fintechs. And so for us, it's providing those rails. It's providing the picks and shovels to make it easier for people to access it.
We talked about the MasterCard news. I know that you had 2 9-figure acquisitions this year as well, in Helio and Iron. We just talked about the future of stablecoins, but talk to me a little bit about MoonPay's strategy. What are you building?
Well, we're building the future of payments,
Yep.
and generally I think we're seeing as a theme this year, consolidation in the crypto industry. So I think from our perspective, we are in a position where, very fortunate position where we're cash flow positive, profitable, and so we're looking to scale up our business. How do we scale up our business quickly? Through acquisitions. And so Helio we did earlier this year because we saw that the next step for using a cryptocurrency wallet is you actually want to be able to spend from your cryptocurrency wallet directly. So Helio powers companies like Solana Pay, so embedded into things like Shopify, you can connect your Phantom wallet, immediately transact and buy normal goods and services. So right now, one of the amazing integrations was with the Solana mobile phone. If you want to buy your Solana mobile phone, you can use Solana Pay, you can use USDC, you can use Solana, and immediately check out. And the experience for them was actually saving millions of dollars relative to using the legacy payment providers. And so they actually turned on Solana Pay exclusively. So that was a really big win for us. The second really was this movement around stablecoins. We see, the future of MoonPay. We built these really incredible widgets and SDKs, which we embed everywhere. But the next step will be more enterprise customers want full white label solutions. They want full API-driven solutions. They want headless solutions. And so we see Iron as kind of like our Braintree moment at MoonPay, which is going to these enterprise partners, removing the MoonPay branding, just giving them the functionality. And so that was a really important acquisition. It also enabled us to accelerate this partnership that we announced with MasterCard today.
Ivan, we got to go, but before we go, I have to ask you about a prediction market that we have running during Consensus.
Love it.
We have a prediction market running on Myriad Markets, and one of the markets is, will Keith Grossman tweet more than 20 exclamation points during the Consensus
event?
I
don't know if I can comment because I might make the market if I tell you guys what's going to happen.
I
mean, Keith's a pretty excited guy, so I would maybe bet, but I can't. I'm not gonna share too much because we got a prediction market going. That's some insider intel.
It's a points-based market, so it's only for fun. I think probably if you go over to Keith's X account, you could
I mean,
make
he's
a
the most
pretty
excited
good
person
guess.
I know, and it's a pleasure to have him on the team. He's awesome.
Ivan, thanks so much for
Thank you
joining
so
me at
much.
the desk. I look forward to seeing you around the conference.
Great.
That was MoonPay co-founder and CEO Ivan Soto-Wright.
Can't keep up with crypto? Never miss a market move with our new mobile app.
The crypto world moves fast, and staying ahead means having the right information at the right time. Track the tokens that matter most to you. Add them to your watch list and get instant notifications on price movements and all-time highs. CoinDesk award-winning journalism now in your pocket. Be the first to know about breaking stories, regulatory updates, and market trends. Tune into the latest CoinDesk podcasts and videos to gain insights and stay updated on the ever-evolving market. Cut through the noise, curate your newsfeed and alerts around your interest. Get the insights you need without the distractions you don't. Download the CoinDesk mobile app today.
Welcome back to CoinDesk Live. We are coming to you from our studio at Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. Our next guest is a professor at Vanderbilt Law School, where she focuses on how markets, law, and emerging technologies intersect. As governments and regulators race to keep up with innovation, she's helping shape the conversation. Yesha Yadav, welcome to the show.
Thank you so much, Jen. Thank you so much, Renata, for having me. It's a pleasure to be here. Consensus this year is amazing. I've lost my voice. So congrats to you guys for making it incredible.
Well, talk to us about what you're doing here. I know you spoke on a panel called Shifting the Crypto Litigation Landscape. For those who couldn't attend, talk to us about maybe the aha moment or the conversation you were having on stage.
You know, the aha moment here is that the expectation for most folks is that regulatory risk is now dialed down, that we have no more enforcement that anyone has to worry about. But what this panel was trying to do was trying to highlight that this picture is actually a lot more complex. Even though there is federal sort of relaxation and enforcement, the states are stepping in, right? So we're seeing a lot of enforcement from states coming in. My co-panelist, Ryan Van Grack from Coinbase, he was discussing Oregon's action against Coinbase, and there are a number of other states here who are getting into the mix. In addition, of course, one can't forget private class action. So in the absence of having federal legislation in this space, we're seeing a lot more interest from states in getting into the game. CFPB, the Consumer Financial Protection Bureau, stepped back. So again, the states are coming to fill in some of those gaps. So the picture is more complex here, Jen, rather than meets the eye.
Well, as Jen knows, that's a topic very dear to all of our hearts here on the show. We talk a lot about state enforcement. Of course, there's a lot of legislation now pending in the states. Illinois, for example, has a licensure bill that looks like it's on track to pass. By all accounts, that's going to happen. There are other states, like California had a bill that came out last year. Do you see us having a patchwork of regulation, and how is that going to interface with attempts at the federal level to regulate?
Well, you know, the question really is that, you know, states are working to create some rules, but in addition, they're working to do enforcement. But the enforcement picture here, what takes priority in this space? Now, what one is seeing is a very complicated political picture. The states are stepping in as the federal regulators are coming, you know, stepping back. And in some ways, you know, in trying to put potentially some spin to protect consumers in ways that may be regarded as somewhat novel in terms of theories that are being advanced. So the question is how much resources are going into that enforcement relative to the rulemaking. How far is the rulemaking going to progress? And furthermore, you know, are we going to get 50 different types of rules here? And that's also a complicated picture for the companies to have to comply with. So, you know, this is not an easy environment to do business. Litigation, tons of rulemaking happening at the state level. How are we going to get actual federal framing in here in place so some of the burden from the compliance side is potentially lifted?
Yeah, what you just said was interesting. That's not an easy thing to navigate, right? When you have states all making different rules. How would you advise crypto companies that are building right now in this regulatory landscape? to look at what states are doing, to building, and to remain compliant?
I mean, I think one of the most important things is to be good to consumers, right? I think one of the things that's going to exercise the states and where they're going to look to get involved is potentially where consumers and people in their state are going to get hurt. And unfortunately, in recent months, we've seen, for example, with the meme coin frenzy, people have lost money, people have been hurt, and prior to that, obviously with FTX and other things, people have suffered. And state legislatures, state politicians are under pressure to make sure that doesn't happen. And so one thing here is to put every attention possible to protecting consumers, giving them good disclosures, helping them, custody their assets in the safest manner possible, to remove any potential incentive state legislatures and attorney generals may have to come after crypto companies in this space. It's good habits, good hygiene, and making sure you put consumers first.
Yeah, you mentioned meme coins a moment ago. Of course, I think the SEC notably called those collectibles. Right. They're like Beanie Babies. Don't you expect to see, now that you mentioned the CFPB has been shuttered effectively or mostly, all that talent is going to the states. Don't you expect to see a lot of state enforcement actions around meme coins in the months to come?
Right?
Yeah.
So as exactly you said, Renato, right, the SEC has pulled back in the space. The CFPB is very much disbanded and is working to figure out what happens next. And so states are seeing this as a place where they are going to step in. And when one looks at California's statements, when one looks at other states that have, emphasized harm to their own people, they're under political pressure to act as well in this space. And so definitely we're going to see states advance. The question is, what kind of theories of the case are they going to use? What kind of rules within state laws are they going to harness in this space? But one can absolutely expect the states to see this as an opportunity for them to make a mark on crypto regulation, crypto enforcement, and to be seen as potentially a leader in this space.
My question for both of you before we wrap up here is, what does that mean for folks who are issuing meme coins? What does that mean for people who are going to pump.fun and storing up a meme coin very quickly? And what does it mean for influencers and people on platforms like X who are promoting these tokens?
To be very careful. Even if one thinks that the federal regulators have pulled back, don't sit easy and think it to be an invitation to just do whatever you like at the cost of everyday people and the environment as a whole. I think the ecosystem is really tired of pumpy meme coins. I think there's been a saturation in this space. A lot of capital has gone into meme coins that could otherwise have gone into more, to interesting, viable, real projects. And so I think the ecosystem too is tired of this, doesn't want necessarily to have this seedy side to things. And so for people who are looking to get into this and issue meme coins, having weird locking schedules for coins and token drops that go awry, right? Be very careful, because states are looking and states are potentially really going to get into this space pretty quickly.
Renato, anything to add there?
Yeah, I would just say that what's really important in my view on meme coins is to watch your statements. Be very careful about the statements that you're making to the public. Be very careful about the statements you're making to people who may potentially be buying your meme coins. The representations you make will be used against you by state regulators, so it's very important to be clear. It's even more important to be accurate.
Could not agree more.
Geisha, thanks so much for joining us at the desk, and we'll see you around the conference floor.
Thank you so much. I'm going to try to not lose more of my voice.
Yeah.
Incredible place. Thank you so much.
That was the Vanderbilt Law School professor, Geisha Yadav. FastX is a blockchain ecosystem offering trading wallets and NFT marketplaces. Recently, FastX has emphasized global growth through regulatory alliances, opening a Dubai office to expand in the Middle East and the North Africa region. Joining us now to discuss is Vardan Kachatrian, Chief Legal Officer and Board Member at FastX. Welcome.
Thank you.
Thanks for being here. Now, I got to ask.
Thanks for having me.
I got to ask everyone who comes to Consensus to compliment us. Talk to us about what you've been doing here. What have you been enjoying? What have your highlights been at the event so far?
To be honest, it's the third year that we are actually attending Consensus, and it's getting better every year. I just love the fact that a lot of great minds and companies are coming together every year in different places this time already. And it's great to just meet a lot of industry leaders and friends and, build the future of crypto together.
So just a moment ago, Jen mentioned that you've opening up in Dubai. Obviously, there's been a lot of successful entities there, like Deribit and so forth. That's made that a hub, I would say, for crypto exchanges. What is it about that market that makes it such an attractive place for a crypto exchange?
Well, Dubai is quite friendly in terms of crypto environment. There is a regulatory framework, and the comprehensive one actually, not just regulating some part of the crypto, but trying to kind of touch every aspect of it, and it's developing. They introduce new laws, regulations covering real-world asset tokenization, not only just crypto exchanges, and some part of DeFi's and tokenizing real estate. So for that purposes and geographically, it's a great place. We set up our holding structure there. We have an operational entity there, and it's great to work from there.
Now, we mentioned a whole bunch of different regions there, and I want to talk to you about your strategy for ensuring that you are compliant across these different regions, right?
Yeah.
Some regions have more comprehensive structures, some don't, like you just mentioned. How do you think about that, and how do you push forward?
Yeah, it's quite sophisticated, as you may tell, because crypto is a global thing, and you're touching a lot of different jurisdictions. It means that you also need to be compliant with all these jurisdictions, right? The requirements and stuff. So it's quite complicated, but some things are quite similar, but some things are quite different, and there are new laws all the time coming up, Let's say MiCA regulation in the European Union, and you have to be compliant with that. The requirements are not very clear. There's all the time some clarifications. So we are trying to be engaged with a lot of our outside counsels, our advisors, to be compliant in all jurisdictions that we are serving customers.
So I mentioned a moment ago Deribit. Of course, they were, I think everyone knows by now, have been acquired by Coinbase, $2.9 billion acquisition. You're seeing, I'd say, intensifying competition in the exchange space. How does FastX differentiate itself? How do you compare yourself to some of the others in that space?
Yeah, I think the crypto is getting into the stage when things are getting a bit more mature. Getting closer to TradFi's bigger steps, when the incumbents can acquire other big players and become even bigger. And in this situation, you need to be quite, it was well said. You need to be competitive. And to be competitive, you should offer something that kind of bridges the gaps, makes things easier for the users, more user-friendly stuff, more secure, more regulated probably, and I think that's where you can have more competitive advantage, because use of crypto, it's still not that easy. It's a lot better than it was 3 years ago, 2 years ago, even 1 year ago. But I think the most important thing is to make it more seamless for the users that are very new to the crypto, and that will help also for the adoption, because only very small portion of the global population is crypto friendly or are into crypto. So we need to just bring more people rather than try to steal clients from others, but you need to kind of help support the adoption of crypto, and that's how also to become more competitive in the market.
We've talked a bit at this desk about consumer protection. I know that FastX emphasizes this robust security protocol for user assets. Talk to me about, from a legal perspective, how you are working to protect your users from things like fraud and scam.
Yeah. So we are there for like over soon to be 3 years. So and we have seen a lot already. And crypto is such a thing that you're targeted in all different levels, right? From physical assaults and batteries till some kind of phishing or attacks and cyber attacks. And for us, it's a central point because the client's assets are the most important. The customer is the most important thing for any crypto company, and to protect their assets is our priority. So we use a lot of robust systems and security protocols to protect the client's assets. Let's say segregating them, keeping in cold wallets, in more sophisticated infrastructures, and I think like that's the most important things. One of the most important things also to create a trust for the customers.
Recently, FastX introduced its own wallet, I believe, right? This was just a couple of weeks ago. Why was that important? You talked a moment ago about the importance of drawing new people into crypto, making it easier for them. How does your wallet product do that and differentiate itself from other wallets?
So basically, as a centralized exchange, you keep the client's assets, but sometimes clients prefer to have their private keys with them, and we want to also help them to have this opportunity, right? And also provide it in such a way that they don't leave the infrastructure, they don't leave the ecosystem. So that kind of gives them like the power to control their assets, but in the meantime to stay with us.
Vardan, thanks so much for joining us at the desk. It was such a pleasure chatting with you, and we hope you enjoy the rest of the conference.
Thanks for having me.
Thank you.
That was FastX Chief Legal Officer and Board Member Vardan Kachatrian.
Very nice.
Video sharing platform Rumble recently disclosed the plan to adopt a Bitcoin treasury strategy and allocate up to $20 million of its cash reserves to Bitcoin. It will also be launching a crypto wallet in partnership with Tether later this year. Rumble CEO and founder Chris Pavlovski joins the show now. Hey, Chris.
Hey, thanks for having me. Great
How's
to
it
be
going?
here. It's great. It's great to be in Toronto. This is actually where I grew up.
This is also where I grew up.
Amazing. I was actually born in Toronto and raised in Brampton, just outside
Me
town.
too!
Really?
Yes!
Oh.
I don't know if the audience needs to know our whole life story, but we'll talk about that after. But let's talk about the Bitcoin treasury. Maybe that's a little bit more interesting to more people than our history. You recently bought 188 Bitcoin for $17.1 million.
We're now at 210 Bitcoin,
Okay.
so it's up a little bit since the last. Well, we just released our earnings last week, and we
Okay.
reported at 210.
210 Bitcoin. Talk to me about your Bitcoin strategy.
So we announced the Bitcoin treasury strategy late 2024. Once the new administration in the United States came into place, it was a no-brainer. I foresaw that regulation and proper regulation would come forward, and it was something that it's pretty easy to do. Took it to the board, got it approved, up to $20 million in purchases of Bitcoin, and now we have 210 Bitcoin as of today. So, for Rumble, it makes a lot of sense. We're really tied in a lot to the Bitcoin community. We just took a huge investment from Tether. They're one of the largest shareholders now with a $775 million investment in Rumble, and we're launching the Rumble wallet later this year. So everything in the crypto and the Bitcoin world is very, very in our ethos. So.
Were you influenced by Michael Saylor at all?
I was. Definitely. He definitely had an impact. I've been a huge Bitcoiner since at least a decade. I'm one of those guys that lost a lot probably in an old computer back in my parents' basement, back 20 years ago. Well, not 20 years ago, but 15-ish. But it was, I put a tweet out, it was probably late 2024, asking if we should add it to our balance sheet. Michael Saylor tweeted back at me, and we ended up jumping on a call the same day, and he told me kind of what he's doing. We're not deploying the same strategy as Saylor, but it was definitely an inspiration to get that on our balance sheet.
I want to turn now to the partnership you just mentioned with Tether. I know that you're launching a Bitcoin and stablecoin wallet with them. Talk to me about how you plan to, how you plan to launch that and how you plan to compete with the likes of Coinbase.
Yeah, so Tether invested in us. We closed the transaction in February, and one of the main things that, being in the free speech world and them being in the freedom, the financial freedom world, it was a perfect marriage. And one of the things that we plan to do is build in partnership with Tether a Rumble wallet. So both Tether and Rumble are, both our development teams are working on this Rumble wallet that we're planning to launch in Q3 of this year. We just announced that last week, and it will have Bitcoin, USDT, and XAUT, which is Tether Gold. And the way in which we plan to compete, we plan to bring the wallet to all the users on Rumble. Rumble has north of 50 million active users a month on the platform. We sold in the last few years, we sold upwards of $800 million worth of gold to our users through sponsors. And we feel like there's a real opportunity to get them to use the wallet, adopt Bitcoin, adopt USDT or XAUT in the same way that they purchased gold over the years, in the same way that our audience is very aligned with that Bitcoin ethos. So, anything from gold to Bitcoin is something that they're very, very eager, but also it's very new to them. It's not a really highly adopted audience in that space. So we have, I think, a very unique opportunity to present the wallet on the Rumble platform, allow creators to receive payments in Bitcoin and Tether, also allow users to tip and subscribe using Bitcoin and Tether. So kind of really bringing it to the vast audience of Rumble in a way that really integrates with the creator community and integrate that into the creator economy for the creators. So that's our approach.
I was going to ask you how the wallet and the treasury kind of align with what Rumble does for creators, and you've answered that now. Talk to me about your long-term vision for the creator economy. When you go to work every day, what's that future that you're building towards?
So I think like the best way for Rumble to succeed, we've done a great job succeeding over the last, since about 2020, we grew a lot in late 2020 and then and onwards. But the best way to really capture the creator community is to really help them monetize better than any other platform out there. And up until now, it's been advertisements, it's been tipping, it's been subscriptions, and we've kind of bring all that together. And I think what's missing out there, you don't see Facebook, you don't see Instagram, you don't even see YouTube, but no one's really integrated any crypto, any type of Bitcoin strategy to the creator economy and the creator community. So our approach is to really take it the next step and be the lead in integrating that. And I see from like 3 to 5 years from now, I believe that will overtake the typical advertising models and the typical subscription models, or it would be a blend of it all. But I do believe that that Bitcoin will be a very big part of that, and Rumble will be in the lead of stepping forward to introduce that to the masses. So I see that as a very big way in winning for Rumble. And obviously, if we're talking about where is Rumble heading as a platform, I do see that the convergence of mobile phones and television and long-form watching of content is eventually going to displace cable television as we know it. OTT will kind of take over slowly. It's not going to be like an immediate death to cable television and network TV, but I do believe that platforms like Rumble will slowly take chunks and chunks away as audiences get older, and the young generation is more in tune with the cable cutting and more in tune with watching content on over the internet. I think that's where we're going to have a real opportunity in 5 to 10 years from now, and that's what we're kind of situating ourselves to be at the forefront of.
I agree with you there. I want to broaden the conversation now and talk about Canada for just a second. You said that you were born in Toronto. At this desk, we've talked to a lot of folks who are Canadian who are making waves in the industry. We had Kevin O'Leary at the desk earlier. We were chatting about how Ethereum was born in Toronto. What do you think it is about Toronto and even more broadly Canada that kind of is a breeding ground for innovation and advancement in tech?
Yeah, it's a great question. Like, there's been a lot of great talent that's come out of Toronto. Rumble's a huge success story. I think it has to do with, you know, in the early days of starting up a business at Rumble, no one was giving us handouts. No one was helping us out. You didn't have VCs lining up at our door. In fact, VCs turned us away. And what that forces an entrepreneur like myself to do is to really figure out how to run a business on your own with your own wallet, and it makes you very disciplined. So I think that because there isn't that access to capital that you'd get in the United States for Canadian entrepreneurs, they're forced to think a different way and really be innovative in how they set up their businesses, and it sets them apart from the rest of the world because we don't get that access to capital, but we have to use our own money. So I think it's the fact that we don't get handouts here that easily when doing, you know, working in the space that I'm working in, or these other successful entrepreneurs in Toronto. So I think it really comes down to the fact that we're forced to learn and build a business from the brick by brick from the very start without any help.
I guess also when you don't take handouts, you don't take unnecessary risk. You make sure that you're very thoughtful about the next step because it really is your own capital, your own sweat, your own equity going into it.
No, exactly. You have to be extremely thoughtful. Every penny you have counts so much, so you want a return on that, and you think very deeply on how to spend that. And then that was the story of Rumble. We didn't get our first investment until J.D. Vance, the Vice President of the United States, invested with Peter Thiel back in 2021 of May. And that was already when Rumble was quite large at a $500 million valuation. So in the earlier stages, we didn't get any investment. So it wasn't until then.
Chris, thanks so much for joining the show. We'll see you around the conference floor.
Yeah, thank you very much for having me. It's been a pleasure.
That was Rumble founder and CEO Chris Pavlovski. Let's head over to one of our stages now, and take a listen in.
So we're expecting these to be going on sale next year, and the game probably released, we're hoping early next year, but we'll see on that. So thank you very much.
Please welcome to the stage Anthony Diorio and Christine Lee.
Great presentation, Anthony. Thank you so much.
Thank you.
So we've been friends for quite a bit, so this is a real pleasure for me to be presenting with you. And just based on your history, it seems you've always had a goal of helping people achieve individual freedom, liberty, and considering the landscape where we're seeing decentralized entities as well as centralized entities in the AI space as well as in the crypto space, is there would you call it a war that is going on between decentralized information versus centralized information? Where are we in that conundrum, and where will it progress?
I don't think it's a war, or at least I don't see it as a war. I see it as different options and different value benefits for each option. My company's called Decentral, so my focus is on decentralized technologies, but I'm also not an extremist where I feel that everything should be decentralized or everything will be. And I think there's choices and options, and those options are going to suit different people. I mean, I've learned over the years that banks are a relatively safe place to put money if you want to be secure. And sometimes holding your own money or being in control of your own digital assets also has its risks and security risks and things like that. So I see both sides of it, and I'm not in any way saying, you know, everything's got to go decentralized. And I just think that, people have choices to make based on different features and options, and sometimes the centralized means are good as well.
All right. You know, everyone knows you as one of the co-founders of Ethereum, so definitely want to touch up on that. Right now, Ethereum is at just over $2,500. It just surged $1,000 over the past month. Previously, it was there was a little FUD on it because Solana was ripping and ready to go in the last bull cycle. But I would like just to get your sense of, you know, when you guys first started Ethereum, did you have any conception that the price would just be where it's at right now and where it will continue to go?
We had the hopes, and there was as it kind of was getting momentum very early on in 2014, there was that kind of feeling that it could be a really big thing. But at that time, the thinking of, what if it could get up to $5? You know, it was something like 25 cents that we set it at the very beginning. And the thinking, if it can get to $5, that's pretty interesting. Then it was like, what if it gets to $100? So there was, you know, a lot of, there was like a movement that was starting with it very early on, and we could sense and feel that it was picking up. It was a very, very committed community involved, still is, but there wasn't thinkings of what the market cap would be, I don't think, that high back then, but there was definitely hopes.
Did you ever think that it could compete with Bitcoin as a store of value?
I don't know if I ever really considered that much. I saw them as two separate things. I'm a big Bitcoin proponent. I think Bitcoin's got its place, and I have said that I do think eventually Ethereum has the possibility of overtaking in terms of market cap, but I definitely think there's a lot more utility value.
Do you still think that?
I could be wrong on it, but I think there's a possibility. I just think with the amount of use cases and the value that Ethereum is allowing to be created, I think has that opportunity with that sense in order to possibly overtake or...
Well, it was built to be a better version of Bitcoin, no? In a way, with the smart contracts.
Yeah, I mean, it was meant to do something that couldn't be done on Bitcoin, and it was smart to do it as something separate. But I don't know if it was meant to be a competitor to Bitcoin. It was meant to be an alternative, which is what a lot of these other ones are. They have their features and benefits, and Solana's got its benefits to it. It's definitely newer than Ethereum, but each has its benefits, each has its users, and each provides its value and use cases, and there's a lot of choices for people to be using.
You know, early in the year, there was a little criticism about the Ethereum Foundation and the leadership, and that perhaps it was too centralized and relying on Vitalik Buterin, one of your co-founders. And Vitalik came out and said, yes, I have sole decision-making authority over the board, and there were some leadership changes. And I'm just wondering, you know, when you were part of that early history, how did you see this going, and are you surprised that it has this criticism of being somewhat centralized, and where does that come from?
So way back, there was 8 founders. We each had a vote. Vitalik had an extra vote to do a tiebreaker. That's the way all the decisions were made back then. Over time, founders left, and Vitalik's the sole person as part of the initial founding team that's still with the project. Early on, I'd say that Vitalik didn't want to have wanted more people to be making decisions, I think. So the fact now that he's the individual that's doing it, I think is a big change than what was initially planned. But I also feel that there's a lot of risks. The board initially was a real struggle back in 2015, I think it was. Some members were brought in to be an official board for the nonprofit, and that had a whole big issue and problem, and they had to get removed, and there was a lot of internal problems, and it's not the first time that Vitalik's had the sole responsibility, but I think he is Ethereum, the idea, the concept, and I think he's the one that's driving things, and if he thinks that that's the way that it should be at this time, then I'm supportive of what he's doing with that. But I wouldn't have seen it being the case years ago, but we're 10 years later right now. So it is where it is right now, and if he thinks that's the best thing for the project, then I support him for that.
Can we ever consider Ethereum as really decentralized if it has so much control from one individual?
I don't think he has, he can say things, but he doesn't have the control still. I mean, it still gets down to the people running the network that have that, but he is a very, people will listen to him, and people do listen to him. So I still think it's decentralized, but if he's got that kind of decision making for the foundation and things, then I think that's okay. But at the end of the day, it doesn't come down to him to make the full-on decisions.
What I also found fascinating and what I love is that Ethereum was born in Canada, in Toronto, right here. And Canada had this huge opportunity to call the second largest cryptocurrency by market cap home and capitalize on innovation, but you guys actually went to Switzerland. And so I'm curious about what your thoughts on Canadian regulation, Canadian crypto innovation, and what can be improved upon if need be, and if there was an opportunity lost in Canada.
Well, I definitely think there was an opportunity lost. We just didn't feel comfortable setting it up here and the time it would have taken to set up here, and we were fortunate enough to follow the lead of a project that set up in Switzerland. We kind of used their roadmap, and we were able to do it very quickly. We were able to do it with the structure they have there, the cantons, the local governance structures in Switzerland, where we could literally go to the government and apply and get approved very quickly. So it made a lot of sense there, but it is unfortunate that we couldn't do it here in Canada, and it didn't make sense to at the time. There were just so many question marks about people being responsible for a project that wanted to raise capital globally, unsure about how the token, the coin would be looked at the way that we were putting it out there. So setting it up under the structure in Zug, Switzerland was the best approach for that. And I don't say it's any better right now in Canada. It's most of my colleagues have left Canada, unfortunately. I'm here and doing my business here, and I don't have any intentions of leaving. It's my family's here, but it's not easy, and it's not easy to be in the crypto space because you're under a microscope, and it's really not set up very well in Canada here to be supporting entrepreneurs and supporting projects in groundbreaking technologies. So it's been a challenge. It's been a challenge for my colleagues, and unfortunately, just so many have made that decision to go elsewhere.
What are your thoughts on Mark Carney, and if there were any way to improve innovation in crypto in Canada, how would you manage that?
I don't have much thoughts on him. I just don't and haven't followed too much about his stance on crypto, if he has a stance. I mean, I had been following what Pierre was doing, but that's a moot point really right now. So I can't specifically with Mark Carney know enough. I don't know enough whether or not I think it's going to be beneficial or it's going to be negative. I do think that Canada tends to follow a lot of others. So with maybe more advancements of what's going on in the US, we're going to pick up on that as well and maybe make some changes. But I don't think it's a very good environment right now, and I think most of the focus being on tariffs and things, I'm not sure if crypto is going to get much attention at this time.
Mm-hmm. So you have an incredible history in pouncing on emerging tech, from geothermal drilling, which was one of your early ventures, to Ethereum, to now artificial intelligence and Andiami. Tell me a bit about that journey, those pivots, and what are you looking for when you're trying to search for your next project?
So I have computer background. I was building computers when I was 8. I was on bulletin board systems with modems during dial-up times before the internet. So when the internet came about, I understood that democratization of communication and information was what was happening with that. But I was going through university at that time. I really wasn't set myself in the business world to really take or utilize the growth of the internet back in the early 2000s. But when Bitcoin, and I heard about Bitcoin in 2012, it was really a perfect opportunity for me to take my knowledge of decentralized tech and my business background and start building. And it's been nonstop building since then. Now, with the advent of AI, the vision that I've had of a one-person company or with very few minimal inputs to be able to create very large customizable projects with very few people is what the focus has been. So over the last 2 years, we've been building a project called As You Wish, which is a platform that is carrying out that vision for us of how can we work with a few people and create really customized global projects and very complicated systems using digital agents that abstract the functions of business into digital technology. And we've been building something that allows you to just kind of type in what you want, and we built these pipelines in a way that our agents work together to create very sophisticated outputs with very little human intervention or needed. So an idea would be sales team that doesn't actually needing people, or marketing team, or all the functions that you would usually be associated with needing hundreds of people to do a project like on Jami. How can we bring it down to very few people and using more digital tools to carry it out? So a lot of work in the AI space right now, and it's exciting. It's really exciting what we're building to do this project. So it's like a platform to build platforms. And that's been the focus for the last 2 years, is how can I have a small work team but be able to still carry out large-scale projects that have very customized physical and digital areas that we need to build, but using technology to do it rather than needing the human capital to do it.
You know, what does that create in terms of a future for us? Will it eliminate jobs? Will it give us more productivity, or ultimately just flood a marketplace and make it difficult for people to operate within, because there's just so much going on? I wonder what your vision of a future with artificial intelligence will be.
I think it's still up in the air of how it's going to go. I think there's going to be more productivity, but I also think there's going to be an impact on jobs that are not creating the value that maybe can be put into AI. So I don't know where it's going to go, but I do think it's going to be a radical change, and we're just trying to stay at the forefront and build in the technology. But I think it's going to be quite disruptive, but I still can't say that I have it. I know, will the productivity outweigh the lost jobs? I'm not sure. So every time you think that that's going to be the case, you know, it ends up that the productivity that's being made for creators to build and do things gives people more tools to create the next things and the bigger things. So I'm still not certain.
And we spoke earlier about decentralization versus centralization, but a key reason you're trying to build these nodes as well is to give and empower people to be more decentralized and be able to
be more sovereign,
et cetera. And so, and essentially, your hope is to make these blockchains more decentralized, right?
Well, make the blockchains more decentralized and have less reliance on third parties like providers like AWS. So there's just way too much infrastructure that is relying on cloud providers right now, because it's very challenging and difficult for people to run nodes. So our goal is to make it super simple. And these computers are meant to be like gaming consoles. We're for gaming. These are specific hardware components that are meant for running blockchain nodes, thus allowing people to be more sovereign, people to send their own transactions, but hopefully be in more control of their identity, run their own AI services on their own machines rather than sending your private information to ChatGPT or other services. So similar characteristics of blockchain is with the AI stuff. We want to give people more freedom to be in control of their digital life, and also then putting in AI tools to also do that as well, with less reliance on companies that are actually taking all your data and information, and who knows what they're doing with it. So
I guess that's what I was getting at in the earlier question of, this war between centralized and decentralization, because if all these protocols are running on AWS, really this seems decentralization is on a spectrum.
It's not something that's talked about very much, but I think it's a really big problem. I mean, AWS saying tomorrow that they're not going to allow Ethereum to be run anymore could be a catastrophic thing, or a government saying that's not allowed anymore, and them being forced to do that would really put Ethereum into a bad position, and others. It's not just, there's so much being run on the cloud right now that I don't think people understand and recognize that it is a weak point and could be a very difficult situation. So our goal is to kind of provide an alternative and hopefully shift people away into their own machines and create an alternative that lowers the reliance on cloud providers to turn it truly into a more decentralized space.
Okay. And tell me a bit about this Quest for Liberty game. Tell me the creation process within that, and I guess it goes into the theme of helping people become self-sovereign.
Yeah, so the game's called Quest for Liberty, and it's as I mentioned earlier, you have these physical kits that get sent to the players, and they need to solve puzzles, and the puzzles are around the importance of obtaining that liberty and that freedom, the quest for liberty. So along the way, we're hoping to engage with the audience and players about the importance of people being a little more...
How are you designing these games? I'm just curious, because a lot of your creativity is...
It's going to be with As You Wish. So the platform that we're building allows for very complex, customizable outputs, which is what we need to do because every kit is tailored to each individual player. So there's a lot of customization per each player, but in order to do something like that, we need to build this platform that'll enable us to create this physical digital game that we're putting out, which I don't think has ever kind of existed in the way that we're doing it. So it's the platform that we're building in order to build this is the whole point of As You Wish.
And is each game tailored to you? And
to the player.
It's kind of build your own...
You have your own avatar, your own character in the video game, your own character in the books, and you're solving puzzles related to your story. So it's extreme customization of physical goods. And then the ability to chip the boxes so that they're one of a kind. You're not going to want to sell that thing that's kind of tailored and made for you, the player. So hopefully to reduce the secondary markets on the kits too. So.
Anthony, we're out of time, but I do want to get one more question in, which is if you could give advice to aspiring entrepreneurs out there, some life advice, what would that be?
What I've done is always base things on, I think integrity and principles, and from building our wallets, which were non-custodial, they were wallets that wouldn't allow people to, or would allow people to survive us if that ever happened. If we went out of business, they could still have their keys and export it out there. So I set my principles really early in the space to try to align it with the themes of decentralized technologies. So user-controlled things. So building out the principles and then carrying out and not succumbing to things that end up having you have to change your ways and go down a different path. So some people change because of investors. They got investors, and then their goals of what they want to do kind of shift towards where their investors doing. So I've tried to only fund my own projects and not take outside capital, which is challenging. But along the way, hopefully it's sticking to your principles and doing things that aren't leading you into situations where you need to change and do things that you don't necessarily want to.
All right. Stick to your vision, stick to your principles. Thank you so much, Anthony.
Thank you.
All right.
Good afternoon. Welcome to this week's episode of Crypto in America. I'm Gerald Gallagher, and we are recording, if you didn't notice, live at the CoinDesk Live studio at Consensus. And we are joined by our guest today, Ari Redbord, Global Head of Policy at TRM Labs. And we're super excited to be here.
Thank you so much for having me. I am incredibly excited to be here with you guys. As Ellie and I have talked over even the last month or so, it's just so cool that you guys have gotten together. It's really fun, I think, for people who have been around this space to see people that they've admired for a long time kind of get together and do something really special. So congratulations. It's absolutely awesome.
Thank you.
Thank you.
Ari.
We always like to start off by asking our guests, what does crypto in America mean to you? So we've got to get your take.
I know you haven't been doing this very long, but I am a regular listener, so I definitely.
Oh, okay, so you were ready.
I'm anticipating the question. But I actually thought I'd tell a story around this. So I do these TRM run clubs all over the world. And Consensus has probably been the place where they've leaned into it the most. And we had about 65 people show up this morning in Toronto to run with me. We ran through the city, past the CN Tower and the Lakeshore. And it was this really incredible group of, there were regulators with us, there were policymakers, there were investigators, and we'll talk about sort of what we do, law enforcement. We had builders really from across the space. We had traditional financial institutions, right? Crypto businesses, we had Fidelity. That to me is what crypto in America is. It is like these really, really smart, thoughtful people coming together and building really transformative technology. So you always want to start with the tech when you're talking about what we're building, but I oftentimes start with the people that are building it, and it's probably been my favorite part of being a part of this space.
So I have to ask, did you have enough hats?
We totally had enough hats, but barely. As Gerald is a regular contributor to the TRM Run Club.
It's a great time.
And very fast
I was
for your
ask,
audience out there.
Is he ahead of the pack? Or?
Yeah, he's usually winning these things, get the medal at the end, the whole show. No.
I told you last night, I will join that run club once I get back into running. I used to be a good runner back in the day.
I'll cheer on the run club.
Absolutely. But it really is. It's like the running is like, almost secondary to the conversations I'm hearing out there and even the connections people are making. It's like, hey, what are you building? Where are you doing it? And it's like, and when I think about crypto in America, it's very much like, I want this to be the place. Crypto is global, right? The nature of cryptocurrency is cross-border value transfer at the speed of the internet. But I'm an American. I worked in the U.S. federal government for almost 15 years. I want this to be the hub, the epicenter of what people are building, and it's fun to be with that group.
Have those conversations evolved in the last 6 months from, are you being sued, to what are you building? Is that something you've noticed?
Dramatically.
Okay.
I think that the conversation has completely shifted over the last 6 months. And I think in a couple ways, and I'm sure we'll dig into this. I mean, you are my go-to source on all things regulation. You know that. It's
no pressure.
So if I need up-to-the-minute news, I go to you. So you can speak to these things. We talked about this on TRM Talks recently. But I'd say that the other thing that's really exciting is, I was in New York a couple of weeks ago, and I met with many of the largest financial institutions. And they're talking about custody. They're talking about issuing a stablecoin. And this is why you need clear regulatory frameworks, because it's important for builders to know the rules of the road, but it's also important for these really large conservative financial institutions that I think are going to be really important players in this space to lean in. So I think the conversations have gotten much more real, from hey, this is something we should be thinking about as an institution, to this is something that we should be doing today. And I think that has to do with the better regulatory environment in terms of the conversations.
When you're having these conversations with banks, what are their main concerns? Is it when they're meeting with TRM labs, right? You guys root out the bad guys. Is it mainly how do we avoid fraud? How do we avoid bad guys coming into the system? What are they saying to you?
I think it's a couple different things. I think you certainly have that, hey, if we're going to do this, we want to make sure we're doing it in a compliant, safe, secure type of way, right? They read about all the hacks and the other types of sort of cyber activity that's happening in the space.
It's always the bad headlines
and
in
they
crypto,
want to
right?
avoid that.
Everybody takes notice
famously so, for sure. And just I guess pausing for a moment, I am constantly talking about illicit finance within the crypto ecosystem, and I often sort of always come back to say, look, we're really talking about 1% of overall activity within crypto. We put out a report
1%.
about 1%.
That's it.
Okay,
that's pretty amazing.
So so any conversation, I always try to start with that. I'm on the main stage today talking about the Bybit hack. I'm going to start by saying, look, this is actually a relatively sort of small issue when you talk about overall activity. But that 1% is pretty existential when you think about North Korea, weapons proliferation, when you think about all these scams and pig butchering and other types of fraud where people are losing their life savings.
Right.
So I'm okay with 1%. I think that's a really great number, but I am still allowed to be super focused on that 1% to try to even get it down from there.
Yeah, so Ari, I'm curious, in the context of what you guys do at TRM and security and how those institutions want to work with you, as an individual, I'm my keys, my coins, right? I'm good. What other security do I need? What do you guys actually do to implement safeguards? How do you guys make institutions feel comfortable? And tell us a bit more about what you guys are actually doing on the ground.
No, I really appreciate that. So a couple different things. We work with a number of different clients across the ecosystem. So every US federal law enforcement agency uses TRM today. They're using our software, they're using our data, and what they're doing is they're building investigations. They're tracking and tracing illicit proceeds, whether it's from a ransomware attack, right? They're using TRM to track and trace the payment. Is it from a hack, right? They're tracking and tracing those funds leaving Bybit or leaving the Ronin Bridge, ultimately to build an investigation. They're following scam proceeds, right? And that's sort of the fancy graphs that you see us put out everywhere, right? Like, this is what this looks like within the tool. But then you talk about financial institutions or crypto businesses. The largest in the world are all using us as a compliance solution. They want to make sure bad actors are not engaging with their platform. They want to make sure they're not sending funds to a scam address, to an address associated with terrorist financing. And we're building this enormous database of fraud and financial crime to allow investigators to investigate, but also compliance teams to stop bad actors. The other sort of interesting wrinkle, and this is very much your world, is that regulators use us today. So think SEC, CFTC, US Treasury, but then globally. And they want to understand, what are the risks within our regulated ecosystem? Are you getting a license, right? Eventually, we're going to have a federal licensing regime in the US. We don't have that today. They have that in Singapore and Dubai and all over the world. But New York has that today, right? So New York is using, tools to for licensing determinations and ultimately supervision. So it's an important piece to all of this. But I think it's just what I tell people all the time. You talk about the crypto headlines being all bad. The reality is that, like, crypto builders, people building this space, want to keep bad actors off of their platforms and are even if you don't care deeply about the national security things that I've spent my career working on, you care about the ecosystem. And if North Korea can steal, funds at unprecedented speed and scale, the system, people aren't going to put those funds on that DeFi protocol, on that exchange. So that's why I'm 24/7 with this stuff. We want to keep this ecosystem safe.
Do you think that the scams and hacks are increasing during this current market cycle, or have you seen them kind of alleviate compared to previous ones in like 2022 and 2021?
It's a really great question. I don't know that there's a really close correlation between illicit activity and the market. We certainly see, bad actors being able to steal more money when Bitcoin is sort of, higher value. We do see a lot more scam activity, but we've also gotten a lot better. We run a website at TRM called Chain Abuse, and Chain Abuse is the largest reporting database for fraud and scams in crypto. We've had 1 million+ reports, right? But what's cool about it is you can go on there and say, hey, I'm about to send funds to this. Is this a scam? Law enforcement uses it for lead generation. So, like, we've seen VASPs, cryptocurrency businesses, exchanges, get a lot better at compliance too. I would say, over the last couple of years, we've only seen the percentage of illicit activity in crypto decline. But we're still seeing, look, North Korea stole $1.5 billion from, the Bybit exchange a few months ago. We put out a report that they said they stole about 800 million last year. Right, so one major hack can completely skew these numbers, and that's really where our focus is. How do we stop that from happening in the first place? How do we seize back those funds for victims?
How do you square that if you were to testify in front of Congress, in front of the Senate Banking Committee, and Elizabeth Warren asked you, well, all of crypto is a scam. They're all stealing money and laundering money.
Yeah.
What would you say in response to, well, the Bybit hack did just happen, but really it's only 1%?
Yeah, it's a great question. And what I would also tell her is that we're laser focused on that 1%, like I told you, and so are the businesses that we work with. And it's not just the centralized space. The leading DeFi protocols are all using tools in order to ensure they're not sending funds to sanctioned actors or engaging with sanctioned actors, that they're not engaging with terrorist financiers. So the ecosystem is very much doing that. I've testified twice before House Financial Services on this exact issue. And I always start with, like, the promise of crypto is this idea of cross-border value transfer at the speed of the internet, right? You can now send larger amounts of funds faster than you ever could before. That is great for remittances, for humanitarian aid, for payments, right? But it's also great for bad actors who now want to move larger amounts of funds faster than ever before. But the difference between crypto and the traditional financial system, you know, when I was a prosecutor, I spent about 11 years as a federal prosecutor at the Department of Justice, and I investigated cases involving networks of shell companies and hawalas and high-value art and diamonds and real estate. Like, there was no TRM to track those things. Like, you talk about the opaque corners of, like, shadiness.
Yeah,
That is where people move funds. Bulk cash smuggling, right? You know, you see people, like, move suitcases filled with cash. So what I would say to Elizabeth Warren or anyone else is that we have visibility over these transactions in ways we just never did in the traditional world, and can track and trace the flow of funds on an open public ledger. And that allows us to actually do compliance and investigations better than we ever could in the traditional world.
So let's talk a little bit about, I want to get to the regulation that we have going forward, the way the crypto industry is going to be regulated. You just mentioned your time in Treasury. Let's talk about, like, what is the regime now? I mean, in a sort of post 9/11 world, we're talking about Bank Secrecy Act, right? We're talking about money transmission. What are the current laws that, you know, these companies, these clients are worried about, you know, in the existing structure?
Yeah, absolutely. I guess I'd start with, I think there is this really interesting conversation going on right now, and it's been going on for maybe 2 to 3 years now in the crypto space. I think the original Tornado Cash sanctions in August 2022, is that right, or 21, started this conversation. And you mentioned post 9/11, you know, that's when I really started as a prosecutor, and that conversation was on city streets and in airports, right? What amount of privacy are you willing to give up for security? And now we're having that conversation in the digital space. Right. And I think it's a really, really important conversation. But right now, in terms of, like, regulation, and even the legislation that's pending, whether it's stablecoins or market structure, it's about the centralized space. And, you know, people talk about crypto famously as the Wild West, or there's no legal clarity. And that's true when you're talking about, is it a security, is it a commodity, sort of the questions that you grapple with all the time. I have the benefit of actually having relative clarity on these issues in the anti-money laundering space. And that is, if you are a crypto business, right, if you're an exchange, if you're a broker, if you're a custodian, you are a money service business for purposes of FinCEN, which is the Financial Crimes Enforcement Network, which is part of the U.S. Treasury. They're the Financial Intelligence Unit, the anti-money laundering regulator. And what they say is that you have to have compliance controls in place, right? You have to have policies and procedures. You have to use tools like TRM. You have to respond to law enforcement subpoena. So I say all that to say, like, the BSA regime that exists, the Bank Secrecy Act, which is the U.S. money laundering statute, exists today and is already required of the centralized space. There's all kinds of really interesting questions around what this means for DeFi, and, you know, maybe for another day, certainly for another, like, Congress, in terms of where they'll try to figure this out. But I think the reality is that, like, centralized crypto businesses have these obligations today, and I think have very much leaned into them, right? Like, they're like, hey, we own that. We have compliance teams. I mean, I did a panel a couple months ago with a compliance officer from Coinbase, and she described, it was an audience of banks, right, compliance professionals at banks, and she described what in my mind was a more robust compliance program than any of the banks sitting there in the room had.
Wow.
In fact, I asked the crowd, it's like, are you surprised to hear that from a crypto business? Like, raise your hand. Like, every one of them had raised their hand. So I think these businesses are doing a good job. There are gaps in jurisdictions that don't have controls. Russia is a great example. You know, a bunch of other sort of offshore entities. But you talk about crypto in America, they're doing a really good job with compliance today.
We are.
Yeah, I actually have a bit of a hot take follow up here.
Please.
So I want to know there's concepts in law school where, you know, the system is designed around maximizing sort of the greater good and not sacrificing, you know, individual benefits. Do you think, like, I guess there's been some talk about whether or not the BSA, like, went too far?
Yep.
Do you think, and we see a lot of sort of TradFi, you know, money laundering, even under the rules that we have now, is it working?
Yeah.
Like, yeah.
No, hot take for sure. Well, actually, that was a question. Like, I'm sure you have a hot take that
I
comes
need
out
your
of that
hot take.
question.
I need your hot take.
Then Gerald will
Yeah.
Look, I think there's a lot of really interesting questions around the BSA. If you actually, this is maybe like getting a little bit ahead of us, but what you've seen from the Trump administration is a bunch of different guidance, letters, kind of proclamations from SEC, CFTC, Treasury, and DOJ. And what they're really saying is, like, we want to be smarter about the way we regulate and enforce regulation. And I think some of it goes to your question, and that is, like, the BSA feels to a lot of businesses, and this is not a crypto issue, this is any financial institution issue, it feels like boiling the ocean. Like, we're supposed to look at every possible thing, and what they all have done is basically they file these SARs, suspicious activity reports, on just about anything and everything. And I was a prosecutor, and I was on one of these SAR task forces where we were supposed to look through piles of SARs trying to find a needle in a haystack. And I think my view of the BSA is that, like, there's a lot of very good in the BSA, and we have to stop money laundering, right? I mean, this goes back to the cartels of the, the 80s in terms of drug cases and, all the money laundering that was going on with, a lot of the issues, quite frankly, the Trump administration is focused again on today is how to stop these guys from laundering the proceeds. But I think there's a lot of good in the BSA, but I think that we have to be a lot more focused and targeted on where we do risk management and compliance. You talk about a risk-based approach when you talk about implementing the BSA, and what that means should be the actual risks that are out there, not sort of this boiling the ocean type of stuff. So I think that, like, hopefully that's a semi-decent hot take on your question, and that is like, I think actually we need to modernize it. We need to make it a lot more targeted, but I do think there's a lot of good that still is in there, at least in the, sort of the way it's was originally formulated.
Talk about boiling the ocean or like throwing the baby out with the bathwater, as it were. We saw the DOJ recently roll back some guidance that, frankly, a lot of anti-crypto folks, a lot of anti-Trump folks weren't happy about, because on the face of it, it seemed, crypto has this sort of free reign and they're not going to go after bad actors anymore, which actually wasn't the case. It was just, we're actually not going to go blanket after these DeFi software developers, right? We're going to focus on bad actors and we're going to focus on the scams in the space. I mean, was that something that you at TRM were encouraged by? Is that something that you were surprised by?
Yeah, no, I think you kind of like wrapped my answer to the question into your question. Well, you're very good at this. It's great. I could ask you the same thing. Look, I'm always looking at all of this very, very carefully. And I mentioned it wasn't just DOJ, it was Treasury and SEC and CFTC. And it's really like what you're starting to see is a consistent view across the administration. And I'll dig into the DOJ specifically in a second. But I think what you see is like, hey, we want to move away from regulatory enforcement against otherwise lawful crypto businesses that just need rules of the road, right? Like, how can you go after a business for registering or for unregistered securities when they don't know whether what they're registering is a security or not?
Right.
And I think that, like, at a high level, that's what the administration is saying. We're going to, at least for now, move away from regulatory enforcement against lawful crypto businesses, Coinbase, Ripple, OpenSea, all the ones, Uniswap, and we're going to focus on bad actors. And for me, as long as the focus continues to be on bad actors, then I think that's exactly where we need to be. So in every one of those, proclamations, guidance, letters, it was exactly said, we're going to move people from enforcing on lawful businesses to focusing on, CFTC said this explicitly, to fraud, which is like literally a mandate for the CFTC. For the SEC, securities fraud, right? And DOJ said, I think they even named terrorist financiers, ransomware, darknet I mean, these are more my categories, but like darknet markets and truly bad actors. So I think that's what's happening. Just like real quickly on the DOJ part, I worked really closely over the years with many of the trial attorneys who ended up on the National Cryptocurrency Enforcement Team. There was no National Cryptocurrency Enforcement Team when I was at DOJ, but these are really some of the best prosecutors in the world, and they're really good at their job, and they're absolute experts. And in my mind, as long as they go back to their respective sections, whether it's fraud, whether it's the money laundering and asset forfeiture section, whether it's the computer crime section, or national security, and go after real bad actors, and that's exactly like what should probably be happening. And from what I hear from folks, that is the mandate, at this point. But I think that, like, it's a little too early to know, like, are we going to keep doing this? But I will tell you, if it's any indication, I even saw a case come out this morning, a pretty significant crypto case out of the District of DC, they are going after real bad actors. And I think we'll continue to see that.
Do you think the regulation by enforcement era during the last administration was fairly put? Or as someone who was in the DOJ and then, left and went to TRM Labs, how do you kind of look at that, and were you upset with it, or did you think it was fair at the time?
I don't think it's fair. I think that, like, these regulators are also put in a really difficult position where, like, if you're a regulator, you have authorities. and you're supposed to be using those authorities. I do think that like it's a lot easier for, I was very lucky. I was at DOJ and I was at Treasury, where it's actually pretty clear what we were supposed to be doing, and that is going after actual bad guys. And I worked in the I originally worked in the Bush administration, in the Obama administration, the first Trump administration, and left at the end of that administration.
Which one was your favorite?
You know what you have to say,
People,
right?
people would kill me if I said this, but my favorite U.S. attorney I ever worked for was an extraordinary woman named Jessie Liu, and she was Trump's appointee in D.C. in the first Trump administration. And I would say that like when I think about the people who were really focused on going after bad actors and giving us the authorities we needed and the real push and support to go after bad actors, like that was definitely great U.S. attorneys across the board, but she was the one that I think of. She's a partner at Skadden now and still doing a lot of like cool stuff. Yeah.
Yeah, I want to talk about the role of regulators here, right? Because we're moving into what's happening now. We obviously really appreciate the efforts of the crypto task force you mentioned. We're getting a lot of I guess proper sort of scope from a lot of these regulatory agencies now under this administration. And the worry, of course, from a regulatory clarity standpoint, is that the pendulum can swing, right?
Totally.
So you have Gensler kind of vastly expand the mandate, and he's showing up on CNBC doing enforcement actions, and I guess that's great. That we have this clarity now, but what's the difference between getting sort of regulatory certainty versus judicial certainty versus legislative certainty? Like what should we be prioritizing as an industry for that clarity on a long-term basis?
Awesome. So his role in this podcast is to ask like the really like good legal questions.
Oh, he's our legal brain.
He is our legal, in-house legal, not legal advice though.
You always need a lawyer. Yeah, this is not legal advice.
He's a lawyer, but not yours.
Yeah.
Exactly.
Lawyer, not your lawyer. Yeah, I think that's why we need legislation. We have to codify the current environment to the extent possible. And what I do think that like, I don't like the term permissive, because I don't think regulators should be permissive to fraudsters and scammers and things. I've heard that term thrown around. I want to say I like thoughtful, like trying to craft legislation or regulation in a way that stops bad actors and allows lawful users and then allows this sort of ecosystem to grow. But I would say like we have this thoughtful regulatory environment right now, and which gives us a little bit more time. So there's no more time on stablecoins. Like, please, Ellie, tell me they're going to do this. Like,
we'll see.
Okay, but there is
I saw a lot of tired faces in DC yesterday. A lot of tired faces.
Just follow her on X and you're fine. But I do think there's a little time on market structure right now. Like, it's early. I do think they're going to have to figure out where the SEC and CFTC, and I'm not sure like what was decided a few years ago in a different environment is like necessarily where we're going to land. But I would say that what you're describing just gives us a little bit more time for that. But we absolutely, in the next 2 years, need to codify what like legal clarity will look like for the space, because I think we're more and more pulling regulators back from being able to interpret statutes broadly, right? And that means we need Congress to be more clear.
Yeah.
Maybe now we want regulators to have a little bit more leeway, but that's the problem of like our 4-year cycles,
Chevron
right?
for me, but not for thee, right? Yeah.
And I will say I really hate that, right? Like to me, we're a country that has lasted hundreds of years. We're going to last hundreds of more years, and it's because we have a system of checks and balances. This is something that belongs in the legislative branch, and in part because we have changes every 4 years, whether we need them or not, and we have to make sure that we have some guardrails around that.
I want to ask you a question, and it might sound really silly, but I think it's important to define what is a bad actor. Because I think there are people in this industry who think they're operating in a way that is lawful and or not malicious, but they are actually bad actors.
Great point.
And then of course there's the obvious bad actors that we know and don't love. But how would you define it?
I love that question.
Great question.
I use the term a lot, and maybe I don't define it enough. I use bad actors, I use illicit actors, I use threat actors. It's like very much like
actors.
These are the national security. Yes. Well,
but they're not the stage
and we only have one actor.
Stage actors.
So I'm so distracted by that interaction right now. So I would say, look, I think there's a spectrum of bad actors. I'm very lucky in that I get to focus on the very worst of them. It's like when you ask me like what keeps me up at night, it's like North Korea's cyber criminals. It's ransomware attacks. It's child sexual abuse vendors who are accepting cryptocurrencies. I think it's the very, very worst of the worst. It's the category that you said we all know who they are. It's like we all know who they are. I think there is a different, there is another group, and that is something I think you see regulators really focused on. We met with the SEC task force a few weeks ago, and I thought it was a great conversation, and it was very different than probably what they're having with a lot of other folks, where they're talking about, hey, help us define a security, help us define where's the distinction, for us it was very much like, hey, how do we stop market abuse, right? You're going to be regulating crypto markets, securities markets, and I think we see a lot of folks who are taking advantage in maybe not like a truly illicit way right now, but manipulating the market, whether it's these meme coin launches, whether it's other wash trading, stuff that is criminal. I mean, a lot of this is wire fraud, but a lot of it is a little bit in that ambiguous way. If I had to, it's interesting. I've never really defined it, but if I had to, it's like, people who are attacking the ecosystem, and there's some very clear ones, and there's some ones that are sort of less clear today. The reality is that we're seeing a lot of bad actors who are looking to crypto to launder funds, and you even see money laundering as a service now, right? Folks who are just out there who are taking funds from a hack, taking funds from ransomware, working with networks of these pig butchering scams, working with cartels, right? Cartels, are using crypto really only because they're working with sort of money laundering as a service organizations that are helping them launder funds. So
why do that?
I don't even know if that was a good explanation, but
no, it was good.
yeah,
it's
a spectrum.
Yeah. Why do that though when the blockchain is transparent?
Yeah, it's a great question. I think because you can move larger amounts of funds faster using crypto. And it really depends on who you're kind of dealing with, right? I was on this Netflix documentary called The Biggest Heist Ever.
Oh, wow. Casual.
Which is, no big deal. It was great. And it was actually a really wild experience. It was the director and the team behind Tiger King and 100 Foot Wave Firefest. It was really a surreal type of experience. But that is the story of the Bitfinex hack and this really colorful couple, Rasul Khan and thing. Yeah. And I bring it up because they had a very different MO than most cyber criminals that we deal with, because they didn't want to get caught. So you ask about the transparent nature of blockchains. It was literally like this. You talk about Les Miserables. It was Javert and Jean Valjean tracking funds across blockchains over years, and different obfuscation techniques, and they're hiding in darknet markets and using mixers and privacy coins, and they were doing everything they could to not get caught. Why? Well, we found out because they were sitting there in New York City and could get arrested, which they ultimately did. North Korea is very different. So they know that the blockchain is transparent, and they're just trying to move funds as fast as they can to off-ramps to use them. And when we are able to work with law enforcement to seize back funds, however much that is, they just see that as the cost of doing business. So I think that's the paradox of crypto, and I think that it's a little disingenuous, and I've been guilty of this. I've been out there all the time saying hey, bad guys should never use crypto because we see every transaction. And that's true, but the reality is they can also move funds faster and in larger amounts. And that's why we have to just get better and better at what we're doing.
Yeah, let's talk a little bit about why we know who they are, right? Because so you and I have had this conversation before about you can go on-chain all day, right? And you can do a lot of tracking and tracing, and I can say this wallet's connected to that wallet. There's some great sleuths out there, some great sleuths, with you guys. But it seems like interaction with on and off ramps, sort of interaction with the traditional financial system, is where a lot of these people make mistakes. Is that kind of how you guys?
No, you nailed it. I think there's just parsing that a little bit. It's fun. I'd say that Gerald and I when Gerald and I run together, I get my privacy maxi fix. But it's I really do, because he always asks these really good questions around kind of what we do. And I think one thing that's always really important to explain is that we do not associate alphanumeric addresses, crypto addresses, with individuals. So I don't say hey, that's Ellie's crypto address, right? We associate them with threat categories, all the ones I've mentioned, ransomware, North Korea, darknet markets, and we associate them with entities. So we say, hey, that belongs to Coinbase. We know that belongs to Uniswap. That belongs to Binance. The only way that law enforcement can connect Ellie to her address is if they go to that cryptocurrency exchange and they get her KYC. We do not have that, right? We are literally entirely on-chain. But that also means that we lose visibility when funds go off-chain. So we lose visibility when funds go to an exchange. We lose visibility when funds go to a network of Chinese OTC brokers that are being used.
So the exchanges don't work with you then?
They do. So yeah, absolutely.
Okay.
But then they know that information, right?
Okay.
So we're able to see, hey, this is an omnibus wallet that belongs to a cryptocurrency exchange, and here's all the funds in there, right? That's still because that's on chain. But exchanges have order book data just on their platforms.
It reminds me of the election campaign finances, right? Like we couldn't track the funds going through the exchanges to, super PACs and Trump, but we could track them through the on-chain
100%,
donations,
yeah.
right?
When I often explain this, a lot of it is like, hey, blockchain analytics like TRM, it's not a silver bullet. We're amazing. I mean, to all of your questions around visibility on blockchains, we're amazing at tracing transactions, and we're better than we've ever been at it, right? Tracing through mixers and in privacy coins and different types of things. But the reality is that like law enforcement, national security agencies need to use other tools when you're really going after the bad guys. And my view has always been you have to go after North Korea by like actually going after North Korea, not going after crypto businesses.
Yep.
And I think we're seeing more of a focus on that. Chinese money laundering organizations are used to launder funds from North Korea hacks, from cartels, from pig butchering scams. We need to go after those networks.
Can you define
and that's not on chain.
Pig butchering scam for our listeners?
Absolutely.
Thank you.
It's a really terrible term, and different people have a different view of whether to use it or not. I do use it because I think it does shock the conscience a little bit and like gets people thinking about it because it's really awful. Basically, what one of these scammers will do, it's like every one of you have gotten one of these text messages probably this morning. Hey. Hey, baby. Like, want to golf today? I get sometimes like, what? I don't golf. But it's like they're trying to start a conversation with you. They want you to say like, who is this, right? And then ultimately they build a relationship, sometimes romantic, and it ultimately over time will end in a crypto investment scam.
Right.
They'll say, hey, I don't know if I made a lot of money, like I'm doing really well with this thing, and ultimately the victim will send that scammer funds. And oftentimes there's websites, sometimes that look like Coinbase, right? Coinbase is spoofed, Binance is spoofed, all the time, and they'll send funds. Oftentimes the scammer will then send more funds back because ultimately they want to show a return. So you send more.
It's the cost of doing business.
Cost of doing business, but you're going to get it back in
right,
spades.
Yeah. Right.
And ultimately the reason that the sort of pig butchering, which comes from a Chinese term, is because you're fattening up the pig. Yeah. Ultimately to butcher it. And it's really like an epidemic. It's one of the saddest things. There's a former prosecutor from Santa Clara, California named Aaron West, who I think is like one of the leading spokesmen for victims in this space. But it is one of the saddest things when people realize that they have been scammed. The FBI, we've worked with the FBI for about a year or so on an operation that they call Operation Level Up. And what they've been doing is literally going door to door to warn victims that they are going to be a potential victim of one of these cases. And why do they go door to door? Because when they call on the phone, people don't believe that it's true. When a crypto exchange reaches out or a bank reaches out, they don't believe it. Well, I love this person. This person loves me. I know them. It's like, well, you don't. But like, that doesn't scale. The FBI knocking on people's doors, warning them doesn't scale. So I think education, so I'm always like psyched to get to talk about this because I think that you have to educate people. Just don't engage with that in the first place. Like swipe, delete, block.
It's
yeah.
crazy. I get people messaging me on Twitter quite a bit saying, hey, are you messaging me from another account asking me about how to trade well or, sign up to your crypto investing platform? And I said no, and I have to literally put this is my only X account in my Twitter bio. And sometimes people ignore that and they copy it, and it happens every single day.
I mean, I'm sure you see it's really, and like the one thing you really hate, I get all the time, like I have a colleague, Christian Chesky, who's one of the leading crypto investigators in the world. He leads our global investigations team. And recently he and I someone sent an email with our names in it saying like, basically pretending to be us. But it was like, it felt fairly legit, like, let us help you.
Yeah.
And we were asking for like $5,000 or $10,000 to help recover funds.
Oh.
Yeah.
And I put a thing out on Twitter or LinkedIn and said, hey, we don't do this. I would certainly never ask for your money. Like, it's just, but then like when you feel like you somehow had a part in it, it's like
awful.
the most heartbroken. People are losing their life savings this way.
Yeah.
But again, like you talk about how do we do this? We have to go after the scammers and the fraudsters and we have to go after the countries that are allowing them to do this,
Yeah.
not after the crypto businesses that are like just part of like the story here. Yeah.
So that's it's a great point because you are the global head of policy, right? And we're talking about going door to door with the FBI in the United States, what we can do to crack down on that here.
Yeah.
But as you point out, like we can know that it's coming out of North Korea. North Korea seems to have turned this into an enterprise. They're not going to shut this down anytime soon.
Yeah.
How are other countries dealing with this? Like, is there as much of an emphasis on stopping this, or is it sort of just a part of the system? Like, what are you seeing globally?
I think from a scam perspective, it's very much like a lot of this is happening in the developing world. So in India, in Southeast Asia, you talk about Cambodia, Laos, Myanmar. These are countries where they have these giant scam compounds where people are literally being human trafficked and forced to send these messages. So
I've heard this.
It's and it's you go look at these things. I mean, it's pretty evident what they are. There are bars on the windows. I mean, they're really, really horrible stuff. Again, I mentioned Erin West earlier. She's gone over there and has like tweeted, put videos out there of like actually seeing these places. So the victims are really mostly in the West. I was talking to folks in Singapore and Korea and Japan recently, and they're also seeing a lot of this activity, right? So, but I certainly say that the developed world is really the target of this thing. And in order to actually stop it, we have to go after like the infrastructure that's enabling it.
Right.
So go after the gangs that are doing the human trafficking. Go after the money laundering organizations, because we're not going to do this by like, look, we're a blockchain intelligence company. I love to trace everything. We're not going to trace our way out of this thing. It has to be education and going after the infrastructure.
How frequently do you find that if you are a victim of these scams that these people actually get their money back?
Yeah, it's a really good question. It's hard.
Yeah.
I think the reality is really, really hard. Like every week I put something on our website that talks about like, how law enforcement use blockchain intelligence to ultimately investigate and seize back funds. So I'm always looking for like these examples. It's a real challenge. I think the reality is like cyber criminals are moving very, very quickly. They're moving to exchanges where they're off-ramping the funds. I think that cryptocurrency exchanges, law enforcement, really need to continue to get better and better at this. And I think this is going to be important even for legislation, right? Stablecoin issuers have capabilities in order to burn and reissue funds to victims. And I think we're going to see a lot more of that happening. We have a partnership with Tron and Tether called T3, where we have worked with law enforcement to seize back, over 200 million in the 7 or 8 months that this has been operational. Many of them have been in the pig butchering scams, and it's because a centralized service like Tether has the ability to freeze assets and then ultimately reissue them to victims. But it's a real challenge, and I don't want to whitewash sort of like the wins there. I think sadly I say I'm so sorry to a victim more often than I get to say like, hey, we were able to work with law enforcement to seize back funds.
Yeah, it's so tough. Can you talk about Treasury's role in what could be upcoming legislation? I feel like we have a lot of focus on the SEC and the CFTC when it comes to crypto, right?
Yeah.
Treasury is actually holding roundtables with industry this week, which I reported on Monday. How do you see the Treasury being involved going forward?
Sure, I am here, so I couldn't be there, but TRM will be at a roundtable this week with
I figured.
with Treasury because they're really focused on these issues. And one of the reasons I was very proud to work for Treasury in the first Trump administration, and like really proud of the subject matter experts that are there now, are I think they're really like doing the right things, and that is like going after the real bad actors within the ecosystem. And I know that like there's obviously a lot of conversation around sanctions and the role of sanctions and IEPA and Tornado Cash. But the overwhelming majority of sanctions actions that OFAC has taken over the last 3, 4, 5 years have been going after what I would consider to be like the illicit underbelly of the lawful crypto ecosystem. So they've done sanctions against darknet markets. They've done sanctions against, quite frankly, darknet mixing services, Helix and Bitcoin Fog, that are like not Tornado Cash. They're not lawful users on these platforms, right? They're created in order to launder Bitcoin for criminals. They've gone after non-compliant cryptocurrency exchanges. The largest in the world was Garantex until global law enforcement took them down a month, or I don't know. My time in crypto is very difficult to, but maybe a month or 6 weeks ago. But prior to that, OFAC sanctioned them a couple years ago. The UK sanctioned them. So I say that like from a sanctions perspective, I think they really are doing a pretty good job targeting that illicit underbelly. And then FinCEN, I think is going to be a really key part of stablecoin legislation or market structure, and that is like you're going to be required to have Bank Secrecy Act type controls in place, compliance controls in place, and FinCEN will have an opportunity to do some rulemaking. I think it'll be interesting to see how much leeway they have, and to me, the more clear we can be in the legislation in terms of what is really expected. But one thing I think is like you hear crypto people say from time to time, like no one knows what they're talking about in the government, or like there's no expertise, or we need to educate them. And I'd say, like, from my experience at Treasuries, like, there's a cadre of people at FinCEN, at OFAC, at TFFC, which is the policy shop, that are really true subject matter experts. We might not agree with everything that they do, but they're deep in this technology.
You mentioned Tornado Cash. What do you see the outcome of the Roman storm case being?
That's a really interesting one. I don't know. I think the that is definitely not what I'm going to speculate on. I will say that that DAG memo from DOJ makes pretty clear that we're not going after services anymore that are being used essentially to facilitate illicit activity. I think that the government probably has a very strong case based on sort of like, I don't know, I have no inside baseball, so like email evidence or whatever it is that they're trying to tie these developers more closely. But I think it's very clear that Tornado Cash is a service, and if we're now going after just bad actors, then we'd be going after North Korea, who, to be very clear, use Tornado Cash at scale to launder funds. But let's go after North Korea, not necessarily the services, and that seemed to be what the DAG memo, the Deputy Attorney General memo from DOJ was saying to do. So the answer is I don't know, but it feels like we're maybe not heading down that road. I don't know. We'll see.
Yeah.
Interesting.
I want to talk about that in the context of Tether. You brought it up.
Yeah.
They're famously sort of compliant and compliant with law enforcement, but not necessarily on the, they're backed by something. In the new stablecoin legislation, we have proof of reserves as a feature there. Do you think that they're going to have the same role in the ecosystem here, or are they going to have to make some changes, or what do you think will happen there?
Yeah, I don't know enough about sort of like what their books to know like what they're going to have to do to get compliant, or if they are compliant today. So I would never like kind of go there to speculate there. I do think that any issuer of a U.S. dollar-backed stablecoin should have U.S. regulatory commitments and should be overseen by U.S. regulators. When I was a prosecutor, one of our major jurisdictional hooks was correspondent banking. If you're a foreign bank, but you're using our financial system, then we essentially could assert jurisdiction over you. And I know it's a hot take, but I think that this is a hot take. But I do really believe that if you're taking advantage of the stability of the U.S. dollar, whoever you are, and I think Tether has really leaned into compliance, has really leaned into investigations and enforcement, has come to the U.S. and met with the president and done these roundtables. But I do think it's really important that you come within the regulatory perimeter, and every indication seems that that's something they want to do.
Yeah, well, there's a lot to keep eye on there, Ari.
Lot
Thank you so
going
much
on.
for coming on.
Oh
and
my
I would
gosh.
be remiss if I didn't say this. Happy birthday, Gerald.
Happy birthday, Gerald.
So, I mean, we have to sing, so should we sing happy birthday?
On air, off air. I don't know. I think we'll save it for off air. Thank you so much for coming on, and thank you to
Awesome.
CoinDesk Live.
Thank you.
Thanks so much for having me.
Thank you.
Yep.
Cool.
Philosophically, how do we think about the world? He's a hard asset guy who's been building some of the most valuable real estate projects around the world. And we started talking about data centers. And I remember he was like, I understand that world. I understand HVAC. I understand electrical. He's like, I grew up on facilities while building. And so we really bonded around that. And then when it transitioned over to Bitcoin and crypto, I was like, tell me why. Why are you so passionate about this place? Why are you so involved? And it really had to do with their journey and their belief in people controlling their own financial freedom and people being able to wire. And so I think that was the big kind of connection point of this is someone I really, really respect. This is someone that we could build something incredible together. And we saw an opportunity to have Hut 8 be the business that is building a energy infrastructure platform, enabling future technologies that push humanity forward. And we can take the business, the Bitcoin business, inform American Bitcoin to create one of the best Bitcoin accumulation vehicles that is not only able to go and buy, but we can actually mine at a discount that people can buy for and accumulate. And so incredibly, incredibly grateful and happy to be in this partnership together and be building this business together.
Well, first of all, how are you, Canada? It's great to be up here. We love you guys very much. No, honestly, had we not gone through the hell of U.S. politics, I probably would have never been in this world, right? I didn't understand the crypto world, and my entire life has been building the tallest skyscrapers in the world, the best golf courses, residential buildings, commercial buildings, office buildings. And it wasn't until the very same group that was attacking my family for no reason whatsoever other than political beliefs started attacking a crypto community that it really drove kind of two people who might not have always been like-minded together, and that partnership has been absolutely amazing. I mean, absolutely amazing. We have come to love the crypto community, and I think the crypto community has really come to love us, and we're so proud to be a big part of it. But American Bitcoin to me is everything. And when we came up with the name, I said one thing. I said, listen, it has to have the word American in it. It has to have the word Bitcoin in it, and hence a pretty simple permutation off of that, American Bitcoin. And I think the ticker symbol we hope to use is ABTC, which is has a nice little ring to it. You guys are probably seeing it around the halls of this place. But I met Asher, and they are so phenomenal at Hut 8 at the data center game, and that's exactly right. I kind of understood it. I understand land, and I understand concrete slabs. I understand buildings. I understand energy. I understand cooling. At the same time, I really believe in digital gold, which is Bitcoin, right? I believe in the store of value. And I also realized kind of through some of that political weaponization, some of the limitations of real estate. Real estate has created tremendous wealth for our family. At the same time, real estate can't be transferred. It's very hard to sell, especially in kind of, the domain I play in, right? I sold a hotel a couple years ago. It took me a year and a half to literally transact that hotel because you have title reports and you have managers that have to go in, and you have escrow agents, and you have all sorts of things. You've got lenders, you've got complicated documents. And I'm sitting there saying, here's an asset, it can't be moved, it's very hard to transfer, there's very few people in the world that can go and buy a hotel that's $500 million or a commercial building, meaning your pool of people who actually can acquire an asset at any one time is very limited. You constantly have to manage it. You constantly have to watch operations, right? And then all of a sudden you've got this kind of digital asset, which you don't need to watch, you don't need to manage. It's easy to transact on. It's 24 hours a day, 7 days a week. It's global. It's instantaneous. I can have a glass of wine with my wife on Saturday night, and I can be transferring, or trading a currency, right? That's modern day finance. That's an unbelievably pure store of value. And so I really fell in love with everything that Bitcoin has become. I really fell in love with so many of the people in this room and this industry. And I certainly fell in love with Hut 8 and Asher and Mike and Matt and the entire team. They're so good at what they do. And you're sitting there saying, hey, if I can mine an asset for literally a third the cost that it's trading right now, and we can do that in America using the lowest cost energy anywhere in the world, hey, we're onto something really good. And you're doing that with an asset that appreciates at 60% year over year, has been one of the greatest stores of value probably in the history of humanity. That's an awesome combination. And so I don't think I've ever been more excited about a project, and I'm honored to be together with these guys.
And a lot of things to be excited about. You mentioned the ABTC ticker. One of the bigger news items to come out of this week as well was the announced or proposed merger with Griffin Digital. So for my next question, what led to this decision to the merger with Griffin Digital specifically, and what benefits will accrue to Hut 8 and American Bitcoin by taking ABTC public?
One of the key areas of American Bitcoin's growth trajectory was to be a publicly traded entity that investors would have access to, and we'd have access to the capital markets to be able to scale and grow at a rapid pace. And we knew the largest shareholder, Anchorage Digital, if they're out there, shout out to you guys. And we've done a lot of work and business together, and we've created a great relationship. And we said, look, we're looking to take this business public. we want to take this business public through an existing mining business, and Griffin was a smaller mining business, and we said, we'd like the fastest path to being able to do so, to be able to really get to the final goal of where we think we can grow and expand this company in the capital markets. And that's what has allowed Hut 8 to be so successful. And we wanted the ability for Hut 8 to focus its infrastructure, its capital, and its shareholders on energy and energy infrastructure. And then for American Bitcoin to be one of the purest Bitcoin proxies and businesses out there.
Anything to add, Eric?
No, I think that was all very well said. I mean, I think maybe the only thing I'd add is actually the speed at which we've done this is incredible. The speed at which we came together, the speed at which obviously the reverse merger happened, and the speed at which we're going to get to market, I think is going to be pretty unparalleled for any public company. And I can tell you there's a team over here that works 24 hours a day. I wish I could see our chats back and forth that literally go back and forth all day, every day, Saturday, Sunday. I think the speed of execution of this company is going to be unlike anything that the capital markets has ever seen before. And I think that should give us a great advantage in an asset where it really is the race to kind of the top, right? And guys, I can tell you this just from kind of my other hat, my real estate hat. I go all over the world. Every single day I'm traveling, I'm on a plane. Everybody in the world is trying to hoard Bitcoin right now. Everybody. I hear it from sovereign wealth funds. I hear it from the wealthiest families. I hear it from the biggest companies. I mean, the adoption of it is incredible. I told this story, I was at MENA in Abu Dhabi, and I told this story right before I got there. A good buddy of mine runs one of the biggest banks in America. You can probably guess which one it is. They run a very, very large office for that bank in the wealthiest suburb of New York, right, in Greenwich, Connecticut. And he always said, a year ago, he was saying, hey, Bitcoin's funny money. Crypto's funny money. The other day, he goes, Eric, where do I buy this incredible kind of, cryptocurrency? Where do I buy Bitcoin? How do I get into this world? And so every single day, guys, I'm telling you, people who were kind of staunchly against it, people who didn't understand it, people who were closed-minded, people who were kind of rhinos to traditional finance are coming around in a massive way. And I think the kind of spike in Bitcoin is going to be significant. And therefore, it really is kind of a race to the top right now. There's a lot of people who are running very, very hard at this mission. And I promise you, we're going to beat them in that marathon.
Asher, this next one goes directly to you. You were talking about some of the benefits of having two companies in the public markets with regards to accessing capital. And Hut 8 has described this partnership as a way to execute kind of a two-pronged business strategy where y'all can focus on Hut 8 and energy and infrastructure, AI and HPC, while American Bitcoin really hunkers down to focus on the Bitcoin mining side of things. So can you speak to these synergies and the strategic choice to specialize either business segment?
The one area as we were thinking about the formation of American Bitcoin was what allows this business to be one of the best exposures and proxies to accumulating Bitcoin. And as a traditional miner, the issues that you face are you have to invest in lower returning assets. And what do I mean by that? Land, substation, steel for buildings, those are assets you invest into, and you're not expecting a payback in 2 years to be able to return that investment. And it's okay because it's a lower risk asset that you're investing into. And then you're investing into ASICs and ASIC compute in Bitcoin, which has a lot more volatility, as we all know, but has completely outperformed the market if you look back historically. And so for us, we said, how do we create a pure play entity that is able to utilize Hut 8's energy infrastructure platform? We have a large team. We're able to utilize that team and have low SG&A, low manpower, and really maximize Bitcoin exposure and maximize the dollars that we raise into ASIC and Bitcoin investments. And so that's kind of the beautiful synergy between the two companies. Obviously, Hut 8 is a large shareholder in American Bitcoin, and we care about the value of that company growing and increasing. And I think it's this beautiful harmony where now we've been able to kind of unlock two areas of our business where if you were to ask me last year, hey, why aren't you guys growing? Why aren't you growing? Because I was like, every time we spend $1 in Bitcoin versus data centers, I have one person in my ear, the other person in my ear saying, why are you doing this? Now we can unlock that potential and really scale at a fast throughput. And I think, as Eric's mentioned, you've already seen that in a very short period of time since we've shared the news with the world.
Eric, this one goes to you. So you have a background in real estate and development, kind of the foundation of your family's business. And prior to American Bitcoin, it was originally established as American Data Centers, Inc. before the rebrand. So what led you to establish American Data Centers, Inc. and later rebrand it to focus on Bitcoin mining specifically?
Well, honestly, it was my introduction to Hut 8, and guys that really truly had a 3-year jump on what we wanted to do, maybe more, right? This is a company that already had the data centers, they already had the energy contracts. Listen, the data center world is really going to take over, right? And you see it all over. Every single country sprinting toward it. I just came back from the Middle East. I was there all last week. I was in Abu Dhabi. I was in Qatar. I was in a bunch of countries. I was in Saudi. And every single one of them, they're all talking about data centers. They want to win the race. They want to win the data race. They want to win the robotics race. They want to win the energy, production race. Data centers makes so much sense, right? That's just the future. That's the future of technology. That's the future of how we operate our business. That's the future of, obviously, robotics. People are embracing it every single day. They're falling into kind of the AI game more and more. And so obviously I wanted to get into that game. It makes a lot of sense. At the same time, there's a long tail to getting into kind of hard data centers. No different than there's a very long tail trying to get into hotels, right? You want to build your first hotel, and you want to build a true collection. That takes, years and years and years, if not, decades and decades. So there's something that we also believed in together, and we believe that's, in digital gold, in Bitcoin. And we believe that we had the cheapest energy anywhere in the country, so much of it coming out of West Texas. We have a president of the United States that actually believes in having a proper energy policy in the United States of America, where he wants the cheapest energy anywhere in the world, because that's going to fuel all the innovation that we're talking about right now. And it's, hey, how can you take kind of the data center company that you have right now, and how can you accrete real value with, again, as I mentioned before, an asset that's accreting 60% a year over year, and it's one of the fastest growing assets, one of the fastest and most in-demand assets in the world. And so it was really kind of putting two pet projects for me together. And the relationship's been amazing. The harmony in our thought process is incredible. The speed of execution, as I mentioned before, and the speed at which we're running toward this building and this business, and really what we're creating is second to none. And I'm really glad I didn't have to start this thing from scratch. I'm really glad I found Asher and Mike, who are damn good at what they did, and allowed us to kind of focus on something that I think will even be more creative than truly the data center world.
Yeah, a tricky business to just break into overnight, right? It's great to have guys like Asher at the helm. So, Eric, you mentioned West Texas. Obviously Hut 8 is building a massive site there, the Vega site, and with the American Bitcoin brand, and also just building in America becoming a theme as we enter 2025 and go into 2026. Why is Hut 8 and America Bitcoin focusing on the U.S. as its locus of growth?
Well, you're probably looking at them, right? I think we're pretty aligned with the United States of America in a lot of ways. And listen, guys, we have the greatest country on earth. We have a country that's determined to lead the modern kind of financial system, the modern digital revolution that we're seeing take place. And as a family and as a country, we're sprinting toward that goal. You also had a place, and I always joke, right, because I spent a lot of time in a lot of countries around the world. I mean, go try and mine Bitcoin in France. Go try and mine Bitcoin in Scotland. I have projects over there. You're just never going to do it. The energy price is too high. And so you have an administration that's focused on low energy prices. You've got a country that's got some of the greatest energy reserves anywhere in the world, and then you have Texas, right, which is maybe a great combination of both those things, right? Some of the best energy policies, some of the most pro-energy policies, some of the greatest natural resources on Earth, which yields kind of the lowest price, right? Which gives any Bitcoin miner an unbelievable strategic advantage. And so it made a lot of sense for us, for me as a person who obviously adores our country. It made a lot of sense geographically and clearly, obviously based on the priorities of our nation kind of moving forward. It made a lot of sense to have it in the United States of America.
And there's something as well to the American mindset in the knowledge base. I mean, we've met with incredible partners around the world, and they've talked about, for example, you brought up Vega. What are you building here? Vega is one of the most innovative Bitcoin mining facilities out there with a 200 kilowatt per rack density. That's more dense than newest NVIDIA chips in terms of the GPUs for AI. And so they said, how are you building this for these costs and these timelines? And so I think a part of American Bitcoin and Hut 8 is how do we take some of that knowledge, that technology that we've built, and how do we share that with different places as well. So it's to really be a beacon where we can drive not just hard assets, but intellect and knowledge and intellectual property and share that across the world as well.
Well, gentlemen, we got about 2 minutes left, so one last question will be lightning round. Already coming out the gate strong after launching at the end of March. What should we expect from American Bitcoin for the rest of the year, especially as we approach that Q through tentative launch date for the public listing?
We're not stopping. I mean, every time I'm with Eric, all he wants me to make sure we know is if he's going to be a part of it, we've got to be the biggest, the best, and the fastest. And so we're sprinting. We're growing the business. We want to be one of the best Bitcoin companies out there. American Bitcoin will be one of the largest miners, one of the best Bitcoin accumulators, and then also a brand that people can trust and build around. And so we're going to keep sprinting just like we have. We announced the brand 6 weeks ago. We announced our go public on Monday, and we're going to keep moving forward at that rapid rate.
Well, I agree with all of that. Listen, I think there's 2 races in the Bitcoin game, and one of them is being won by Michael Saylor, who's a great friend of mine and Asher's, and a guy I've known for 25 years. We've been longtime friends. That's the accumulation game. And then I think there's the game of who can mine it the cheapest. And I think both those people can win in very different ways. And I think we're going to accumulate a tremendous amount of Bitcoin, but I also want to be the person who's mining it by far the cheapest. You know, when everybody else is going out to OTC and they're buying Bitcoin for 109,000 or 102,000 or 103,000, you know, I want to be the guy who's mining it for 37,000 or 38,000 and doing it, you know, on mass scales. And I think if we can win that race, we've accomplished the goal. And so we do have the goal to be the biggest. Asher and I talk about that all the time. So we better be the biggest. We better mine for the cheapest. And I think we're going to have a hell of a company, and incredibly proud of this venture.
Yeah, and I'm going to give a shout out, as you mentioned, to Saylor. We were saying we both individually were talking to him about how he's really pushing Bitcoin forward and what he's done at MicroStrategy and how he's been getting snowballs rolling. And he's like, I was like, ours happen to compound together and before bigger ones start rolling and growing. So I think the beauty about this industry is I don't see other companies as competitors. I see them as all of us leading a frontier into a new industry that we're bringing to the world. And that's the beauty about this ecosystem, the beauty about everyone here is we should all be working together to unlock what I believe is a better way for us to do things and not living in a historical world. And so I think there's an amazing opportunity for us all lead in our individual rights and to work together to bring the future here.
Fantastic. Go chase those megawatts, gentlemen. Thank you so much.
Okay. All right, welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. Through its acquisition of Iron, the platform now provides multi-currency treasury management for enterprises and marketplaces that plan to hold or enable crypto payments. On this special edition of Gen C, I am joined by Kraken Chief Marketing Officer, Mayur Gupta, and Galaxy Chief Marketing Officer, Sebastian Benkert. Welcome to Consensus.
Thanks for having us. Thanks for having us.
All right, guys. Thank you for being here. Mayor, we were just on stage. Sebastian, you were there before. First off, any ideas of consensus? Is it your first time? What are you thinking about it? Any vibes you've been feeling in the space itself?
Well, I'm loving the energy. It feels very crypto conference. There's a lot happening, and you see all kinds of personalities and characters, which is amazing. But so glad to be here. Thanks for having us, and love the conversation. I love that. There's a lot of conversation in crypto right now about the substance, about the utility, about what it means to people's daily lives. So it's fantastic to see this year that being the ethos, that being the direction for where things are going.
Sebastian, any insights on the conference?
I mean, I have to give you guys credit. You took a little bit bet on a new city, right? Moving. Yeah. That's always a little bit nerve-wracking. I spoke to the team yesterday, but I've been blown away. The turnout's great. Timing is always a factor, right? You can't really, but if the market is doing what it's doing right now, everyone feels better about this space, and I think you can feel the energy. I mean, I agree with you. There is a lot of good things on the horizon for us.
I think it was 2 years ago at Consensus. During Consensus was when the Three Arrows Capital issues started to come out. Yeah. And literally we saw all the assets start to go down during it, and you're trying to keep a good face.
The room dropped a little.
Yeah, literally. But we're in a very different time right now, as we know, and we just had Eric Trump on our main stage. For both of you, I would love you to tell me just, think about last year and the building that both of you do, Galaxy and Kraken, and just a change in tone from 2024 to 2025, new administration, new sort of relationship to crypto assets, especially in the USA. How does it feel to be building in this time right now? Mayor?
Yeah, it's exciting, but anyone who has fought through, especially the last bear run, feels we deserve it. We needed it, we deserve it, the category needs it, and most importantly, for the first time, I think the masses need it now, because I feel what's happened in the last 15, 16 years is the technology, the infrastructure, the ecosystem of crypto has finally arrived at a point where we are now building on top of it applications and utility and use cases that are not only relevant to the early adopters, not only relevant to the developers, they are now relevant to normal people. With everything that's happening on stablecoin, with everything that is happening, like at Kraken, we've just launched Kraken Pay, with a massive focus on the ability to send any asset, fiat, crypto, equities to anybody, anywhere in the world. So more and more of that, it feels super exciting, and it also feels that we are here now to stay, because I've always said that if the category fought through resilience in the last tough bear run, I think the community and the world at large now absolutely believes that this is going to keep going on.
Sebastian, any thoughts?
I mean, if I had to summarize in one word, it's clarity, right? If you think back last year, we were cautiously optimistic. Bitcoin around 60,000 or so, I'd say. We were heading into an election season, but there was no legislation, there was no regulatory clarity, accounting rules, banking, all of those were problems. Galaxy, we're focused on the institutional space, right? So we're bridging a little bit traditional finance to the digital economy. That's our sweet spot. A lot of our partners, counterparties, clients are institutions, and they, more than anyone else, require clarity for them to actually take the risk or really lean in on the space, and I think we're finally there. We see the sentiment shifting in DC, the right conversation are being had. We have regulatory clarity in Europe, in other places of the world, and that's really important. And so that is what sets us apart from where we were last year. The price is one thing, momentum another, but really that clarity that we need in order to invest and build and attract more capital, I think that's, in my opinion, the key differentiator.
Yeah.
Let's talk about also the changing nature of the audiences. We spoke about this a little bit. Backstage I was talking about having a child. When I talk to my daughter and the idea of earning points in a game, and being able to buy digital things, very easy. When I talk to my father, it's a different conversation, right? So Sebastian, I want to start with you. If you're trying to describe why someone wants to put $1,000 into a token about a dog with a pink hat, on, and why that matters to this audience. How do you explain digital assets?
I think the comparison that we hear over and over again, or what in my opinion makes a lot of sense, is if you compare it to communication, how we made communication flow as very freely through the internet, right? Money and value should flow as freely as information and content does today. And so if you talk to your grandparents and they try to understand it, it's really, well, if you write a letter, it then goes through multiple hands, takes several days until it arrives. You can't track it. There's no transparency. There's no fee. That's how, like, what the internet has done with email or other online communication, right? To communication, and money should do the same thing. Is money and value is like the oxygen you breathe to have your brain function. And every banking system, every government really requires a stable monetary system, and blockchain technology, removing intermediaries, making things more efficient, more transparent, accessible. That's really what it's all about. And so I usually draw the comparison to communication, thinking about the internet. People can relate to that, have experienced it, and have seen the impact.
Yeah. I've used that too a lot. I think it's a great metaphor. Everyone's seen through our lifetimes what internet's done to information, and money was untouchable in a way. You know, it's pretty much in the custody of very few people. But there's one other way that I explain the power underneath that as well is, you know, I read this somewhere when I was joining Kraken about a vending machine, you know, that has no bias. So when you go to a vending machine, it has a set of program that has inputs and outputs. And if you put in the code, and if it's 65 cents, you put $1 in, it gives 35 cents to everybody. And doesn't matter who you are, it operates the same way. Now imagine the world's financial ecosystem operating that way, where you have smart contracts, you have a set of inputs and outputs, you remove the bias, you remove the prejudice, and you provide equal access. The one difference in that metaphor I explain is, assume it's not managed by any single entity, and it is just out there. So I think there's a tremendous amount of permissionlessness, reach that this technology gives, that gradually, as we are building stuff now, that our grandparents, our kids are starting to see and understand. And that is what I feel is the inflection point for our category in this wave, building on top of the infrastructure to bring the utility, to remove the friction and the barrier that has existed for so long, so that the value becomes more obvious and visible, and the technology becomes more and more hidden.
Yeah.
Just to build on that, because I think it's a great analogy. I mean, you're both part of the global dollar network. I think we all are big believers in stablecoins here. So is part of that the assumption that, in essence, anyone's dollar from around the world can come in, and any currency's 35 cents can come out, right? And how do we normalize that? So I guess I'm wondering for you, I feel like this conference has been almost dominated by conversation around Bitcoin and mining, and then also conversations about stablecoins.
Yep.
I look at stablecoins as just the internet's money, and that it should be interchangeable, freely flows, and that we are in a time where we're just on the cusp of the idea that we can be anywhere in the world and a dollar can be a dollar. So what do you, when you look at what's happening in the stablecoin world, for both of you, Mayor, when do you start? What gets you excited about the possibility with stablecoins?
Well, first of all, I think stablecoin is the best, very timely innovation/product that we all needed, because it truly converges the stability that population, the non-early adopters, the stability that they expect and want from a fiat currency, but with the transparency, global reach, security, 24/7 ability of blockchain, of crypto. So it's a perfect mix of those two things. And I feel that there is no better bridge. Yes, there are ETFs, which is going to bring the next wave of passive crypto adopters, but stablecoin is an incredible bridge to bring people who are hesitant, who are on the peripheral, and this is a way to just come into crypto, enjoy and understand the value proposition. And also, like Sam, you and I were discussing, see, the value proposition of stablecoin differs by geography, because for us, let's say in a country like Canada or the US or the UK, stablecoin is still getting access to fight the volatility and getting access to DeFi. For many parts of the world, stablecoin is a way to hedge against corruption. It is a way to hedge against system, where you can lose all the hard-earned wealth that you have. And it is a way to send money back and forth, if you have family all around the world. And very soon it's going to be a standard way for payroll and much higher yield than we are used to seeing in the traditional system. So the value proposition of stablecoin, I think, is that catalyst that crypto needed to make it easier for the normal people to understand.
Sebastian?
Yeah, I agree. It's what I love about stablecoins, and you will agree as a marketing guy, our job is to abstract away complexity and message really clearly. Stablecoins is a perfect product market fit for digital crypto, right? And everyone sees it and agrees it's the best way to transact in US dollars, right? And so it's poised to become the cross-border payment solution. I've no doubt about it. The growth is there. You've seen 35 trillion or so in transaction last year already, more than Visa and MasterCard combined. You see MoonPay announce their partnership with MasterCard just today. That will drive more mass adoption. Really what it helps is for people to understand what's the value proposition, how does it really appear in my life. We saw the ETFs, very understandable investment vehicle, mass adoption for Bitcoin, Ethereum, and other digital assets for people that may not have immediately opened up a wallet and bought crypto directly. You have companies like Coinbase being included in the S&P 500. You will own it. You will have exposure to this space if you like it or not in your 401k if you buy the S&P 500. So that is what drives mass adoption. And then shamelessly, I'm going to plug this here, but we're listing on NASDAQ, uplisting on NASDAQ tomorrow, May 16. So Galaxy, let's see, took Coinbase 4 years to be included in the S&P 500. Let's see how long it will take us. But we're extremely excited, and that really is another element where people will enact and get exposure to this space organically, and then from there learn. And so stablecoins is this perfect example of how we have a product that fits and will touch us every day as we're using it.
I think it should not be a shameless plug. It's a very proud plug that we are all very happy for you guys, and we need more and more of the brands to show up, because it only adds to the credibility, the legitimacy of this category. And more institutional players, more and more retail users believing when that happens.
Yeah, agree.
And first of all, Sebastian, I want to get to you guys listing for tomorrow, but just to dive deeper, Mayor, when we were on stage together, you said something that really gave me chills almost, which is in really the global South, and you're using India as an example. Crypto can be life or death for people because of the opportunity for corruption in a lot of these places. Money can't be trusted. And then what happens when you can trust that the dollar or the yuan or the euro is a dollar, a yuan, or a euro? And then I think about the next place of it, which is, the network state of Taylor Swift is a giant landmass digitally of people passionate about the same thing. And if Taylor wanted to have a Taylor coin that also had a treasury of 1-to-1 in whatever currency they wanted, the system is there for us to continually now go back and forth between whatever people's passionate values are, whether they are about a country, whether about a brand, a personality, or just a movement they believe in. And I mean, I see a future where there may be thousands of stablecoins, as long as, again, the treasury is there to back it up, where we shouldn't have to care about whether it's USDT or USDC. They've done the hard work. Yep. But I mean, do you think that we're getting to a point? We know PayPal has their own, but will every brand or influencer or personality in the world say, I can hold my treasury because people by holding it, it's a badge value of my support?
Yeah. See, first of all, you're absolutely right. Blockchain has given the infrastructure to democratize what in the past or up until now only belonged to states, or very powerful entities. Yeah. There is a democratization of that has happened, whether that is memes or anybody can launch their own blockchain and things like that. Now, of course, anybody can do it, but the ones that are able to tie that back to value, convenience, and trust are the ones that are going to survive and win. That is no different from, look, in the non-blockchain world, there are a lot of brands that have loyalty points. not every loyalty point means the same thing. So at the end of the day, it goes back to this being a technology ecosystem where as long as you as a business are able to find a way to constantly disrupt yourself, put the user at the center, leverage your ecosystem to add value, which is, for example, Kraken started as a crypto exchange, as a centralized crypto exchange. We are now very vehemently evolving ourselves into a technology platform, still rooted in crypto, leveraging our liquidity to now distribute that liquidity with different use cases, where just 4 weeks back, for the first time, we launched a SaaS platform called Kraken Embed, where Europe's second largest neobank called Bunk is now leveraging our APIs and Kraken's infrastructure and security to make crypto trading available for their users, where their users don't care what is the underlying engine, right? So there is that seamlessness, there is that removal of friction to add value ultimately to the end user.
Sebastian, so what are your thoughts on fully movable, fully programmable money? And you guys are going public tomorrow, or coming out on the markets. How does this inform Galaxy's future?
Well, we're addressing it. Like, if you know Galaxy, we have a pretty broad, I would say, like offering on the digital asset side, right? So we're focused on institutions mainly, but we're also very active in the venture space. We're a big venture investor, so a lot of the things that we've been talking about, whether some of our portfolio companies, whether it's M0 or Rain, working on payment solutions with stablecoins and stablecoin platforms, helping for the scalability, we're super excited about, and that's like a way of how we're staying at the forefront, even if we're not building it ourselves. The other area where we're very excited about, that's a little bit separate from, but it might be a good transition for this conversation, is we've been a big Bitcoin miner, and we're now transitioning Bitcoin mining into AI infrastructure, right? So we announced a partnership with CoreWeave. We have a big mining facility, 800 approved megawatts power capacity. About half of that CoreWeave is taken on to power their HPC computing, and we have another 1.7 gigawatt under study. So our goal is to really become one of the largest data center infrastructure providers. Now, how does that fit into digital assets? Well, number one, it diversifies our business, right? So we're less volatile, very important for our shareholders as we're entering the largest capital market. But there is a future where those two areas also will come together. And as we're talking about payment solutions, seamlessness, how do you connect? You have AI allowing us to accelerate. We're in such a massive acceleration of content creation, of automation, and we're just going to get faster. How do you verify? How do you authenticate? AI generates, and a crypto blockchain will help to verify and authenticate, right? And so those two things will come together. That's, I think, one of those areas we're very excited about and focused on, and now we're really operating in two of what I would describe the most disruptive innovation platforms: digital assets, blockchain technology, and then AI.
All right, well, thank you, Mayor and Sebastian. It's all the time we have. That was Kraken Chief Marketing Officer Mayur Gupta, Galaxy Chief Marketing Officer Sebastian Bankert. Guys, thank you for spending so much time with us.
Absolute pleasure. Thank you for having us.
Thanks, Sam.
All right, so the question is, will Drake make an appearance at Consensus? Toronto is the home of crypto, tech, and Drake. Folks on Myriad Markets are placing their bets on whether the sixth god will be in attendance at Consensus. Let's take a look at what the polls say. All right, so we have 4 prediction markets going on right now. Right now, it looks like 12% of the audience right now believes that Drake is going to show up. Not sure if I believe this yet. I bet the opposite, but we'll see what happens. We also have some other prediction markets. Will Eric Trump just got off stage? Will he mention President Trump more than 3 times? I have not listened to that one yet, so I can't tell you if that happened. In addition, we do have, will Bitcoin hit 110,000 during Consensus? Not looking great right now, but we're getting close. We hit almost 103, 103.5. Right now, I think we're around 101 in a little bit. Regardless, join in on the fun with Myriad Markets, Myriad.markets. Check that out. Anyway, I am joined now by Crypto in America podcast host Eleanor Tourette. Eleanor,
Hi.
Great to see you.
Great to see you, Sam. How's it going?
It is going great.
Good.
Eleanor, how has this Consensus been for you? What's been going on? Give me your quick heat check.
It's been great. So I've actually been coming to Consensus for nearly 5 years. I started in 2022. Is that 4 or is that 5? Time is so weird in crypto. It goes a lot faster than anything. Anyway, my first consensus was in Austin in 2022. And I remember coming and I was just like starstruck by everybody because I really got into the crypto space at the end of 21. So like that 2022 one was still very new, and I was up on watching all these CEOs on stage, and I actually got to sit down with Charles Hoskinson of Cardano. He was very nice to me and let me kind of shuffle in with my microphone and let him, I asked a few questions, which was really nice. So anyway, long story short, I've come a long way, I think. I've now hosted a couple of panels at this consensus. It's been a really nice experience, so I thank you for letting me be a part of it.
Of course.
But it's great. I mean,
well, we
so
are
many people
going
here.
to take a quick break, and then we are going to have some amazing guests coming up. So with that, we'll throw it to the break, and we'll see you guys soon.
Ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered to you.
All right, Hut 8, originally known for its Bitcoin mining operations, is evolving into a diversified digital powerhouse under the leadership of CEO Asher Ganoot. The company secured a $150 million investment from Coatue Management to expand into high-performance computing and AI. Additionally, Hut 8 has launched American Bitcoin, a new mining venture in partnership with Eric and Donald Trump Jr. The company will go public via a merger with Griffin Digital Mining. Joining the show now is Hut 8 CEO Asher Ganoot. Welcome.
Thanks for having me. Appreciate being here.
Thanks for coming.
Yeah, thanks for coming. You just got off stage. You and Eric were there. Tell us, how did it go? What did you guys talk about?
It was great. I think I love being in a conversation with Eric because it's just natural, it flows, and we can just talk about kind of what we care about from the heart, and I think it was a great conversation. I hope people liked it as well.
You certainly had a good crowd out there.
Yeah, it was great. We got a lot of Americans, Canadians, we got everyone supporting. I love it.
Right. I'm curious, and something that we ask on our Crypto in America podcast is, first of all, I'd like to ask, what does crypto in America mean to you? It's such a hot topic right now, obviously. It's coming back. Everybody's very excited about it. What does it mean to you from a CEO perspective and from this perspective of just launching this American Bitcoin mining venture?
I think it's the ideology of what America stands for, and I think America has always been a pioneer in technologies and innovation, and in crypto, over the last kind of 4 years in the past administration, it was really hard to build here, right? As an entrepreneur, as a builder, you always had to try to justify your existence and explain why you were doing the things that you were doing, where I think in the era we're living now, the most exciting thing I have right now is I'm so excited for all the builders out there. People who have ideas, who want to be entrepreneurial, and who want to go and execute. And so American Bitcoin and America, I think, stands for leading this industry now and taking that big transition and saying, you know what, we're going to help drive this industry forward. And with American Bitcoin, we obviously want to have large-scale mining operations in America, but we also want to share that technology with people around the world and share the ideology of America around the world.
I was always so interested when the mining sort of started to leave China, and who was going to step up to take this just golden opportunity, and America really stepped up in that respect.
That's right.
So now with American Bitcoin, yeah, it sounds like you're really trying to bring the American mining message as well to the world. Are you guys working with any of the other miners? How are you looking at what's happening in America specifically around Bitcoin mining as a service?
As we think about Hut 8 and American Bitcoin today, Hut 8's vision and focus is to be an energy infrastructure platform. We're big believers as technology has evolved, so too has its consumption of power. And so the air conditioning system, for example, was a huge technological revolution and one of the biggest consumers of power. You have crypto, you have AI, and so we would like to be at that intersection of power and technology. What that means is that American Bitcoin, who owns ASICs, who owns Bitcoin, will want to place its servers at this infrastructure and be able to mine and get a return. We're really innovating and building some of the leading technologies around the infrastructure stack. And so for us, what this means is the ability to create some of the best infrastructure at scale in the US, and the conversations that we've been having more globally, saying, can we bring this to your area and help you utilize your energy that's not being used to give you an asset class that is only growing and expanding?
So I want to dive in. So you guys are creating this merger. I think it's your plan is to go to close Q3 this year. So as you take American Bitcoin public, what's sort of the message you want the average consumer, the average investor to take away? Is it that American Bitcoin is here, or is it that this is an industry that actually has such a growth arc that how could you not be in it?
So twofold. One is our goal is to be one of the best businesses in mining, accumulation, and scale in the Bitcoin ecosystem and be a trusted brand. And that's first and foremost, and I think the rest will come. I think on the ecosystem part, and I talked about this on stage a little bit earlier, I love this industry because you don't have to compete against each other. The pie is growing, and the industry is at its still nascent phases of growth, where everyone should be working together to really lead us into this new frontier. And so I think about all the people at this conference, all the people in the industry, as friends of mine, and saying, how can I help, how can we work together, and how can we build together and really bring this industry forward, and hopefully do a lot of that in America.
What do you hope to achieve with your IPO, hopes to go public? I think a lot of tech companies, a lot of crypto companies, obviously sat on the sidelines for many years when it came to the capital markets. You guys have this opportunity. What do you hope to achieve for American Bitcoin by going public?
So I started a company actually called US Bitcoin Corp, which is funny because people are like, why don't you just keep US? Why did you go to American? ABTC was, we like that ticker. And so US Bitcoin Corp merged with Hut 8. Hut 8 is a publicly listed company on the NASDAQ and on the Toronto Stock Exchange, so fitting for where we are today. And so as a business, being able to be in the capital markets has allowed us to have a lot more exposure and ability to grow and scale. For example, as you mentioned, Coatue came in as a shareholder and investor. And so with American Bitcoin, it's really to accelerate growth and scale and then continuing to grow. And I think everyone's seen what Michael Saylor has done with MicroStrategy and the demand that has been out there for different financial product offerings to help him accelerate his scale. And so that's why we're very excited in taking American Bitcoin through this next phase of growth.
Now, is that the goal, to be like MicroStrategy?
I think the goal is to be a little bit different, right? And the difference is I think Michael is the leader in what he's created. He has created an industry and he's been a leader and he's been great at getting adoption, people to come in. I think for us, what we think is beautiful about mining is instead of just buying it at the market, we could mine at a discount, right? And so there are times where it makes sense to buy ASICs and go for those returns. But unlike just being a pure play miner where you mine at all costs, there are times where you say, you know what, it's not the right time to go and buy miners, let's buy Bitcoin. And so it allows us to focus on the fundamental core of what our business is, which is growing Bitcoin per share in our accumulation, rather than when we were a miner, it's how many exahash you have. And the argument I always had with people was, this is not the right time to buy. When I took over as CEO of Hut 8 last year, I was ridiculed for a quarter or two of like, buy new machines. I'm like, it is not the right time. We're not going to return these machines at this price. And then we waited and we built energy infrastructure, which is a long lead time item. And then for us to increase our fleet, I mean, we almost doubled our fleet in a matter of a couple of months because we had everything prepared. And so I think that is the beauty about American Bitcoin, is the mandate is very clear. It's, we believe in Bitcoin, we want to accumulate Bitcoin at a low cost, and we're not going to do it through a single strategy. We're going to have a multi-pronged approach in executing that strategy.
So Asher, in 2013, I bought a butterfly miner. I put it in my office. Some friends and I each put $200 in. We were able to get about 5 Bitcoin out of it before it was obsolete. And at that time, it was about $1,200. But I remember just the idea in my head, psychologically, of having to keep up with now we got to buy the next. And I just said, this was a great experiment, super fun. We all still have it. Fantastic. What does it take to keep a mining operation going these days, and how competitive is that around the world?
You have to be at an institutional scale. Unless you have smaller operators that have access to really low cost power at small scale, which is great as a hobbyist, as a business. But at scale, what matters is a lot of our sites are located at power generation facilities. We have a 280 megawatt wind farm that powers that facility. We have another 200 megawatt wind farm we're launching right now that powers the facility. And so we're operating at scale. I mean, we have full software engineering team, data science teams, operating teams that run the dynamics, trade around the energy volatility, and you can't do that as a smaller operation because it's a lot of high quality, skilled people that you're hiring to run these operations. Actually, the site that we're launching, called our Vega project, we actually have former Microsoft data center operators coming in and operating that space. And so you're seeing this evolution of growth and scale. And for us, it's how do we be the lowest cost operators of these facilities? And that means that we're one of the lowest cost builders. That means we're being really thoughtful in how we procure the chips and the ASICs. And then the main operating business is how do you manage your revenue against your volatility of your energy, with both of them are volatile assets. And so having a really robust ecosystem technology in order to do so is what has allowed us to be at the leading frontier, and we'll continue to do so.
Yeah, you actually answered the question I was going to ask you next, was just to elaborate on what Eric said on stage about being the biggest, but also the cheapest, right? Because it's expensive to mine Bitcoin, but you guys are going at it through the technological route and using that resource as a way to bring costs down.
Yeah, in the last couple quarters at Hut 8 in our public disclosures, I mean, we've been mining for $30,000 to $40,000 a coin, right? And so that's a great cost in order to mine. And so I think that's the beauty, is if you have some of the newest generation machines that you're really, really profitable on, you say, you know what, I'll mine a little bit more because I have so much margin. If you have a lower kind of efficiency machine, as you know, with the cycles, with the butterflies, then in some areas where we have high energy volatility, we can actually curtail a little bit more, drive down that cost of power, and still remain profitable. And so that's a really, really important kind of scope, is when you have this much infrastructure, you're able to manage how you make profit out of that infrastructure. And I think for us, like, our goal is not, let's just say we're going to go be the biggest and then that's how we're going to win, because we feel like a lot of people have burned a lot of money doing that. Our goal is, how do we be the biggest, but also cheapest and most efficient? And that is the core. And so we'll grow, but we'll grow at a controlled rate, and we'll grow when it makes sense, and we'll actually buy Bitcoin when it makes sense. And I think the beauty as well is, when we were a Bitcoin miner, there are 3 decisions. Are you selling all of your Bitcoin? Are you holding it all? And then it's like, what? You don't make money? How can you hold all your Bitcoin? Or are you doing a little mix between you sell to cover your operations and then you keep it? I think because American Bitcoin is an accumulator of Bitcoin, we're not selling a single Bitcoin. And so then people are like, how are you going to manage your operations? If you're spending $30,000 to $40,000 to mine a Bitcoin, how do you pay for that? I'd much rather pay $30,000 to $40,000 to get a Bitcoin than pay $100,000 right now. And so it's just a different way of accumulating, and that's the mandate of the company.
And I assume in a world of AI, then you start to take all of this infrastructure and all this data and start to balance it out automatically.
Yeah, so our team's already working on that, and we're integrating a lot of kind of the new technologies into how do we operate more efficiently, how do we control each individual chip on the machines and each hash board. And so we're very, very excited. We're big believers in crypto, we're big believers in AI and robotics, and all of that is fueled by energy. And so that's why you have these 2 businesses, Hut, which is focused on energy, and American Bitcoin, which is focused on Bitcoin.
What do you hope to see out of the Trump administration in the next, I don't know, 2 to 3 years that will, you think, really help your business take off? Is it a strategic reserve? Is it clearer rules of the road? What are you looking to the administration for you guys?
I honestly think more important than all of that is, what is the culture of the people in America on the appetite to want to go build new businesses. And when I go out and I visit our sites in Texas, or we have a site we're building in Louisiana, I feel like there's this reinvigorated belief that we're going to lead a lot of these industries forward, and there's all of this excitement, and there's this pride and this nationalism. And I think above all else, if you're able to keep that and maintain that and grow that, I mean, I bet on America and the American people more than anything else, and if we create an environment for people to build, I mean, I'm extremely excited as a builder here and as an entrepreneur, and I want a lot of people to say, you know what, I'm going to go take the risk and go build something amazing.
All right, thanks, Asher. That's all the time we have. That was HUD 8 CEO Asher Knutz. If you are joining us, we are coming to you live from the CoinDesk studio at Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. Building on MoonPay's vision for the future, the platform recently acquired Helio and Iron, enabling commerce and asset management. Let's turn now to X and take a look at what people are saying about Consensus on social media. John McPherson here. I got to pose with the Enron home use nuclear reactor. I am hoping this thing isn't real, but you never know.
You never know.
Maybe that's how we solve Asher's energy problem. If you're a Consensus with us in Toronto, or if you're following along at home, please share your favorite moments with hashtag Consensus2025, and hopefully we'll repost it on air as well. Here's one final one. Adev Aaron said, everyone's glued to the charts, but the real shit happens in conversations no one's recording. Consensus 2025 isn't about price, it's about energy, builders, and early signals. I'm here to catch what's coming before it trends. Let's see what's brewing this week. We cannot agree more.
Oh my goodness, now that's my favorite.
Well, anything with a Shiba is going to be
anything with an animal,
cutest.
let's be honest.
All right, follow our channels at CoinDesk, at Consensus 2025, and we will get into it. All right, let us get to our next guest. Our next guest is from Gunzilla. Gunzilla is one of the top Web3 game studios. It created Off the Grid, which is a top-tier game that broke barriers for Web3 games. Gunzilla's chief visionary officer is director-screenwriter Neil Blomkamp, who's known for sci-fi titles like District 9, Chappie, and Elysium. Joining the show for more is Gunzilla Games' Director of Web3, Theodore Argonaut. How you doing, Theodore?
Doing fantastic. Thanks for having me here.
So, Theodore, you were just on stage with us a little earlier. Yep. You kind of opened the day at the summit around gaming. How are things going with Off the Grid? Tell us what's going on in the world of Gunzilla right now.
For sure. Well, several interesting things to report. Number one, since early access that was just launched last October the 8th, we have now accumulated over 16 million unique wallets and over 600 million, so over 500 million transactions. So absolutely phenomenal results. What's even more interesting and exciting for us is that we have the majority of these wallets, the majority of these people are traditional folks that have never touched Web3 before. And as a result of our very, very user-friendly and transparent onboarding experience, we can give folks access to Web3 without them having to interact directly with the Web3 components. What does that mean? You download the game on Xbox or PlayStation. We're the first ever blockchain-enabled game on console. You download the game, you load into a game, and it's a regular traditional gaming experience. You don't need to set up a wallet, you don't need to swap any tokens, you don't need to on-off-ramp any fiat. Now, at the same time, as you are extracting items or earning items in the game, it's not a play-to-earn game, we call it play-to-own. You are actually indirectly interacting with NFTs that are stored on-chain, that are deposited directly into your wallet that we set up for you. So, I anecdotally, right, have some very, very interesting conversations that I've had with folks that I play with. I love to load into the game and play with random people, and I always ask two questions. I ask, how did you find out about us? How did you find out about the game? And what did you play before? And in 9 out of 10 cases, it's people that played traditional Battle Royale games before and like Off the Grid better, never heard that it's Web3, never heard that it's blockchain, and simply played because they love the game. So that's probably our biggest accomplishment and that we're most proud of.
Amazing. So the reception has been good then?
The reception has been absolutely fantastic, yeah.
That's excellent. I always think of that as kind of how the internet started, right? Like there's this sort of invisible online world that takes us to Google, takes us to any kind of website we want, but we don't think about being on the intrawebs, right? And now it's almost like we're integrating Web3 into everything that we do in our lives, whether it's gaming, whether it's payment rails, and the goal is to really just not even think about it, just have it be a normal thing that we just do. And
absolutely. I always say that in the future, nobody's going to be talking about Web 2, Web 3. People will simply say gaming or finance, right? It has to be like the experience that you have on an iPhone. You open an app, you complete your task, you consume your entertainment, you close the app, you're done, right? That's where you have to meet people.
And Theodore, I was thinking about the first sort of wave of play to earn, and the Axie Infinity sort of conversation that was going on. Some people got really excited, but there was a backlash from traditional gamers at that point because they felt like people could just buy their way to the top. I watched a number of videos of gamers playing off the grid, and some of them mentioned the Web3 in the beginning, but what was interesting is almost all of them by about 10 minutes in are just playing, right?
Correct.
So they're just enjoying the fact that it is a top-tier game. I'm wondering, how do you manage the communications around, yes, we have a marketplace. We're not the only game to have a marketplace. We just happen to have one that has a Web3 background. Is this about educating those traditional gamers into a new way of thinking about the assets that they're playing with? Or is this about getting sort of the Web3, we have 10,000, 12,000 people here to be playing more games because they're probably playing them anyway?
So I think there's a couple of answers to that question. Number one, it isn't about Web3. It's about having an engaging gaming experience. And what technologies you use to make things more engaging for people is really somewhat irrelevant. But we firmly believe that asset ownership should be at the forefront and at the core of gaming. I have some anecdotal stories myself out of my own life where my two older boys were really, really deeply into Fortnite as teenagers and played it all the time for 4 years, spent several thousands of dollars of their own hard-earned summer cash and Christmas money, etc., on skins. And inevitably, when they moved on from the game and wanted to play something else, my oldest comes to me and says, "How do I get my money back?" I'm like, "What are you talking about?"
That doesn't work like that.
I'm like, "No, you can't get your money back." He's like, "But I own these assets." Right? For kids these days, digital asset ownership is the most natural thing in the world. Many kids want, for Christmas and birthdays, V-Bucks for Fortnite instead of real-world skins. Instead of real-world clothes. They want the skin because it literally gives them more social status in middle school and high school, etc., than actual real-world clothes do. So we started getting into what a EULA is and that you don't really own anything and that really just renting these things. They couldn't believe it. They were shocked, right? So at the core of the user experience should be asset ownership. And it is simply much easier to accomplish utilizing blockchain technology. It's also easier to make it transparent and trackable and traceable so people can verify. If you say there's only 999 of X, right, they can actually verify it themselves and see it and then determine what does that mean for them in terms of rarity, in terms of what they want to sell it for, in terms of what they want to buy it for. So that's really at the core of what we do. And in order for a person to interact with that, they don't need to know what the underlying technology is. So to answer your question, it really isn't relevant. Now, we do have some people, there's a whole team of gamers that built a team around Off the Grid that I was speaking to that said, hey, there's like I think 80 members or so, they said, we never touched crypto wallets before. Now all of us are rocking crypto wallets as a result of playing Off the Grid and getting exposed to Web3. But that's not our goal. Our goal is to simply provide a really entertaining gaming experience and provide people with the best of breed tools to have a good experience. Shroud actually said it really well, and we changed the narrative. Like last year when we launched, it went from NFTs are a scam and crypto is a scam to, oh, it's totally optional. Shroud said that why spend millions of dollars building a Steam marketplace when you can simply use blockchain technology for it? And that was kind of a really eye-opening moment for a lot of gamers to say, well, if I'm not forced to do anything, if I don't have to directly interact with any of that stuff, why does it matter? And it's true, it doesn't. So now if a person at some point in time does want to monetize the gaming experience, they have some ultra-rare assets, and there's this button, say, export to OpenSea or sell in OpenSea, they'll be curious and they'll be like, oh, okay, well, then they're willing to learn, what the steps in interacting with our peer-to-peer marketplace that's built right into the game.
How are you guys thinking about regulation? I think about regulation a lot. It's kind of my weird, I'm nerdy about it, I guess. I believe that even gaming's being attacked. So how are you guys thinking about regulation now under this new administration, under this friendlier?
Well, so for instance, about kind of ecosystem participants, because we're not like your usual, Web3 game where it's just like anything goes type of a thing. Of not being allowed to withdraw any tokens, only being allowed to withdraw NFTs after completing KYC is a result of a very, very thorough regulatory analysis.
All right, final question in crypto. So there's no one better that I could ask that question. Do you believe that narrative?
Stumped him.
Six words.
You'd be like, yeah.
I believe that Web3 projects need to be extremely, extremely careful how they navigate that. Because if you simply talk about play to earn, if you simply talk about, oh, you know, you're going to make all this money from playing this game, you're going to lose them. Right? The $5 billion marketplace in CSGO too, that's great, but it should never be the main focus. So it's a yes, but it depends on how it's approached kind of an answer.
All right. Well, thank you, Theodore.
Thank
that was
you.
Gunzilla Games Director of Web3, Theodore Agranat. Wyoming is poised to make history as the first U.S. state to launch its own stablecoin. The commission aims to launch WYST soon, with testing already underway. Joining the show now is Wyoming. Why create a stablecoin for Wyoming?
There are a lot of benefits associated with the stable token that we intend to deliver to the citizens of Wyoming. The benefit of bills to create a legal ecosystem that allows creativity, innovation to foster. They brought on board a team headed up by Director Apollo, who kind of designed what the infrastructure is going to look like and the new railway system that we hope to deploy across the state of Wyoming.
Your governor has been very forward-thinking. I had the pleasure of talking to Governor Gordon at the Digital Chambers event a couple, I guess.
First and foremost is that our stable token will be governed by law. So not policies, not rules within an organization, but by the statutes that have been already legislated. Documents, all of our work that we've been putting together is all transparent out there. And what we're looking to do is also the reserves that go behind it have one of the top.
Because people in Wyoming are probably carrying around some dollars or some credit cards.
Yes.
So the use case specifically, and how did that benefits Wyoming's economy? Could you just explain that to us?
Sure. As far as I can see, immediate settlement, reduction in cost, monetization both from the businesses and also the citizens of Wyoming, being able to have their cash at immediately, and also the transparency of all those sectors. There are about 11 sectors in an economy, as you can see from the S&P 500. So healthcare, financial, biotech. So we are focusing on working with the financial industry and seeing how we can work with them to introduce this.
I remember Governor Gordon talking about something that really interested me, and that's you basically want the stable token to act like cash, right? And there's some stablecoin issuers who actually prohibit what they're buying, or gun laws, or whatever it might be.
We're still navigating the compliance waters of that.
Okay.
As you know, the Genius Act was not passed.
Right.
That would have provided a good compliant railway for us and lawful railway for us to operate, trying to formulate the pros and cons of doing something like that. And it's not only we intend to have the stablecoin used not only in the state of Wyoming, but across the United States.
Right.
So we need to consider all the statutes across all the 50 states.
But to Eleanor's point, we're not going to be cool with.
Right.
I almost look at that as an opportunity versus a detriment.
Absolutely, yes, absolutely. And not only that, it facilitates transaction, enhances the adoption rate. We're working with them on how we can introduce the Wyoming stable token into their business line so they can further enhance their value chain and the value that they deliver to their clients.
Incredible. I had a question, and it just went out.
About bringing that same
I've worked, and it's been a collective ecosystem that's been created by the government and the citizens of Wyoming, stemming from the Governor Gordon to the Director Apollo They brought together a multidisciplinary team from the outside that have worked on the entrepreneur space to deliver this kind of product into the marketplace. I can't see too many places doing something like that, too many states doing that. I mean, we're working within a government agency, and we are a high-performing team with a collective set of skills that, when brought together, will certainly transform the financial railways of the state of Wyoming and across the nation.
I remember my question. I feel like there's a lot of pushback against a government issuing a
Yes.
token, right? A CBDC, right?
Yes.
What differentiates a state stablecoin from maybe a government-issued CBDC? What would you tell the critics that, oh, this is not a way for us to surveil you. This is just a way for us to make our lives easier, your lives easier?
Well, there's a couple of factors. So trust, confidence, security, transparency.
Yep.
So if you look at everything that we do, it's all transparent, all public information.
Mm-hmm.
You could see all the rules surrounding not only issuing and burning the tokens, but also the reserves that underlie. It's an over-collateralized underlying portfolio, extremely conservative, that backs all of that. We're not here to surveil. Our envelope ends with the exchanges, the blockchains, and they have to carry it forward. We do have a robust compliance program that we're putting together, so KYC, AML, KYB, OFAC reviews. So we're going to introduce all of that, and all of that is for the public to see. So you can visit our website, contact our Director Apollo, or the governor himself.
All right, we will do all of those things. Thank you, Joseph. That was Wyoming Stablecoin Token Commission Chief Financial Officer, Joseph Saldana. All right, let's see what's going on the summit stage.
Go cross-chain or multi-chain, it's so easy. So if you're not controlling your narrative and building your brand for yourself, you're taking risk on both sides. It's just, it's a problem, right? So despite what the actual technical architecture of Mantle Network in this case looks like, being literally an L2 built on Ethereum, building your own brand is more important than saying we are an L2 on Ethereum. So by the end of that, it wasn't as spicy as I thought it would be. It was a little bit more tepid. Yeah.
There was no attacks on other chains or anything. You kept it very safe. But that's okay. We're doing this for consensus. But Kyle, the same question to you, and you built multiple brands in this space. But again, starting over from scratch, how would you re-architect your go-to-market plan? What you guys thought was incredibly important, and really thinking about what you know today and how the market's reacting.
Yeah. So it's an interesting question because I actually didn't start Milk Road. We acquired Milk Road. And so we did get to kind of rejig things once we acquired it. I think the one thing I would have done if I had started it, and I wish they would have done, which we began to do as we acquired it, which was to bring the humans front and center, right? Bring the people that are writing the content, that are creating the content front and center. And so as soon as we got Milk Road, we launched a podcast that got our faces in front, right? We started showing off who are the writers and getting them and bringing them out on Twitter, et cetera. And I think that's one of the most important things that we've done to start like connecting closer so that when we walk around a conference like this, people are like, hey, it's the Milk Road guys, it's the Milk Road guys. Before that, no one knew who they were. It was kind of a mystery. And so I think that's been one thing that's really helped. I actually think one of the best pieces of advice I give to a lot of brands out there is founder-led marketing, right? Is bringing the face of the founder of the company. And I know founders are busy, so they often don't want to do this, but it's like they should be out there on Twitter all the time talking about the products that they're going to be launching, talking about how that launch went, what they could have done differently, right? Like going through everything they're doing internally in the company and just spilling that out to the audience. Because again, I know that the audience will follow the brand account and they'll do things the brand asks, but they'll do a lot more if the founder's doing it, right? It's why many people here probably follow Brian Armstrong. It's why Mark Zuckerberg has been all over podcasts lately, right? He's trying to like bring everyone back to Meta and liking Meta again, because there was a while there where everyone hated what they were doing. And so I really think founder-led marketing is one of the most important things that any company can do. And it's something we do a lot of at our agency as well, because again, it's about bringing the humans front and center of your company, because that's where we connect.
It's awesome because, I mean, and you can look outside of the crypto space as well for incredible examples of this. Just last week, the brand Poppy was acquired by Pepsi for $1 billion. That was a founder-led company, founder very front, and very much a lifestyle brand that found a new, very unique lane for what they were going to do. leaned into the cultural zeitgeist today and ultimately now become this unicorn company being acquired by a much larger company. So I know that is in the aspirations of a lot of people who are attending Consensus today. How do we continue to scale? How do we continue to now get closer to mainstream larger companies that want to help scale us or partner with us? The opportunity right now, and especially in this space where it's we're either in regulation or deregulation, sometimes it's a little hard to tell where we're at, but that is unlocking so much opportunity. But I actually want to end there with rather quick, like in this era of regulation, deregulation, but which just feels like the rails are open to us, what do you think is the most exciting opportunity for what crypto brands can do today to lean into this opportunity?
I think it's simply having some level of confidence that they could operate in the U.S. As an American, I'm saying that, right? The last couple of years, it's been difficult to set up an office and actually, raise capital and launch a product in the United States. And you still get geo-fenced on all these apps that won't let you touch their product because of the last regulatory regime. And it feels like we lost a lot of time to experiment and innovate and get things right. Not to be dramatic, it almost feels like calling psychedelics in the 50s and 60s, Schedule A narcotics, and losing out on 70 years of testing and seeing what that could do for medicinal purposes, right? So yeah, we lost a lot of time. And I think the most exciting thing right now is that we have time, and we have sort of like it's not clear, it's clearer, but we can now operate and figure things out.
And Kyle, more specifically in the marketing space, is there ways you guys have started to pivot how you go to market with brands now that regulation, is easing up a little bit? Is there things you're able to say a little differently or communicate a little differently now?
I would say you can now, a lot of brands actually wanted to not market to Americans. They thought, let's go overseas and focus our attention there. And that's definitely changed. Now their go-to market strategies are in the US. They want to launch tokens in the US. And I think there was a while there where they actually didn't want to do that at all. And like you said, they were actually blocked and they actually couldn't even have Americans do it. I think that's I don't know if it's fully changed, but it's definitely changing. So there's definitely more freedom there to tap into one of the most important markets in the entire world. So I think that's really cool. In terms of what you can say or do in marketing, I don't know that that's necessarily changing a ton, because you know what? Crypto actually probably needs some more rules around what we can say and do. We don't have a lot of that, right? And so I actually think we probably need to get a little bit more strict on that so that we have a lot less scams, a lot less rugs. So I would say on the marketing side of things we say, we're not really changing a ton. We're just kind of changing on where we can market to. The other thing I would say that's most exciting for me with all this thing is innovation can finally happen in crypto. I know crypto is very innovative, and we have been innovating over the years, but it's definitely been stifled. We've been blocked on the things that we can do, and I think that that's finally close to kind of opening up, and we're opening up the floodgates there, and I think that means we can do a lot more things, whether that is with marketing or whether that's your token or that's with your project. I think there's just a lot more that we can do, so I'm excited to see what that brings.
Yeah, we're all excited up here to see what that brings. I know we've all been in the ecosystem, in the community for a very long time. It's great to come to Consensus, get an understanding of where the space is moving, where it's flowing, where the founders are moving, where the larger companies are going. And it's been a pleasure here today to have both of you guys up to learn about where you're going, understand where your companies are really innovating, and ultimately bring that to the Consensus audience. So I just want to say thank you, Brian. Thank you, Kyle. Thank you, Consensus, for having us today. We'll see you on the floor.
Thanks, guys.
infrastructure. That's an excellent point because in fact, I don't know what the monetization strategy was in building a dam that size where the grid couldn't keep up. And so, the Bitcoin miners coming up and soaking up that capacity is a huge boon for them.
100%. And I think it also has a dramatic impact on the returns on invested capital for building a new generation site. If you're able to, let's say a typical power plant might have a payback period of maybe 20 to 30 years. And now you're able to, for a really small percentage of your commodity that you're producing, the energy, you're able to sell it for a significantly higher price, or you're able to arbitrage markets, or you're able to capture inefficiencies which would have otherwise been sunk costs. By diversifying your revenue streams with this additional technology, you can actually reduce the payback period. You can improve the economics of investing in new power generation.
Absolutely.
And so if you're somebody who's like, Ethiopia, or if you're a private company who's looking at investing in power generation and you're not looking at how Bitcoin mining might come in a really small way. I'm not saying 100% build a whole new generation plant for 100% Bitcoin mining, but how do you integrate small amounts of Bitcoin mining into the power generation plant to dramatically improve your ROIC? I think that is a really, really powerful story.
Yeah, agreed. Like amortization periods are much less with a consistent customer like a Bitcoin miner than with just the grid and organic demand to be the consumer. So our time is almost up, but would you have any final thoughts on our discussion?
I think the really interesting thing here is just that we are still at very early days in Bitcoin mining. Most of the Bitcoins that will ever be mined have already been mined, but Bitcoin mining is still supposed to continue for another 120 years. And so when you start looking at, the Bitcoin mining of the past, really it's not an indicator at all
what is
of the Bitcoin mining of the future. And so it's going to be really, really interesting to see how it gets integrated, I think, into energy markets and how it's going to evolve both Bitcoin and energy at the same time.
All right. Well, thanks very much, Ben.
No final thoughts for you, Mike?
Keep plugging in machines and hope for the best.
Power to the miners.
Yes, thanks.
Thank you.
Okay, it's the mid-afternoon. You might be a little tired. You might be a little done with Bitcoin mining, but we're not done. We're still here on stage. If you need coffee, we got coffee over in the Bullish Park. And then come on, find your way back here to talk more Bitcoin mining. Bitcoin miners don't turn off, so we're not going to turn off. We're going to keep it going here on the Spotlight stage. Let's welcome Mike Ho and Matt Prusak to stage. They are from American Bitcoin. American Bitcoin made, turned a few heads this last year with the recent spin out, the merger with Griffin Digital, and then, of course, having a Trump on the board doesn't hurt as well. So let's welcome Michael Ho, Executive Chairman of American Bitcoin, and Matt Prusak, the CEO, to stage. Inside American Bitcoin, the Trump Hut 8 mining venture.
All right.
Okay, we got handhelds for this session.
All right,
nice.
yeah.
Now, we got the CoinDesk logo
We're
for the
repping.
shots. That's looking pretty good. Okay, so we'll kick it off with just like a little intros. Like this is a podcast, little podcast bios for both you guys, and then of course so much to talk about. It's hard to follow up what we had on the other stage with Eric Trump and Asher, but I think you guys can pull it off. If anyone can do it, you guys can do it. Matt, we'll throw it to you first, and then over to Mike.
Hello, everybody. It's good to be here. So I'm sure some of you saw the panel earlier. That was a nice intro act, I'd say, for us here at American Bitcoin. I'm the CEO. I could not be more excited for what we're doing and telling you about what we're up to.
As a fellow Canadian, it's nice to be back on Canadian soil. I think we brought a lot of life to Toronto this week, the Consensus Conference. I'm Mike Ho. I'm the Chief Strategy Officer at Hut 8. I'm the Executive Chairman at American Bitcoin.
Love it. Okay, so for context, let's lay the groundwork. If you have not been paying attention to Bitcoin mining headlines, which surprisingly, a lot of people don't pay attention to us, do they?
They're lost.
They're missing out because we're having a lot of fun. In the Bitcoin landscape, we've had a lot of M&A activity over the last year. There's about 20, 25 publicly listed Bitcoin miners, either on the NASDAQ, New York Stock Exchange, or here in Toronto on the TSX. Hut 8 is one of the oldest publicly listed Bitcoin miners. They have one of the deepest hodls, and therefore they have a lot of leeway to make some interesting pivots and moves in the space. And the American Bitcoin one was certainly probably a chapter-defining movement for the company, and then I think for the Bitcoin mining space in 2025. So let's really briefly just walk out what happened, Mike, and then we're going to get into what you guys are doing with this spin-out. I got a lot of questions. I hope people in the audience have a lot of questions. We're going to try to answer them. So first, you, Mike, what happened in a 90, 120-second recap?
Hut 8 was one of the oldest Bitcoin miners. I think Hut 8 first went public back in 2017. Asher and I merged with Hut 8 about a year ago. And since the evolution of the company, Hut 8 is focused on an energy-first digital infrastructure strategy. Over the course of the last year, Hut 8's shareholders went from about 90% retail to 55 to 65% institutional. The business model for Hut 8 is focused on energy and digital infrastructure, low volatility. Naturally, we found a way to structure American Bitcoin to be the continued higher volatility Bitcoin exposure, while Hut 8 can maintain its infrastructure and lower volatility side of the business.
I love that. So again, US Bitcoin, which you co-founded, then merged with Hut 8, which then spun out American Bitcoin, which then merged with Griffin Digital. So that's what happened in the last 2 years in a nutshell.
I've been busy.
You guys have been really busy. So we could do the same kind of thing with him as well, but we'll cut away from it and just, Matt, I want to throw it to you, where is American Bitcoin right now? What is the story? You have a clean slate. You have a new opportunity here. You got fresh new merch.
We've got the merch. We have the swag. So look, American Bitcoin is a brand hard launched April 1, right? So we were out, Wall Street Journal coverage, ready to go. And it is rare now for a new Bitcoin miner to really emerge or have its own brand. As you said, the space has been fragmented. It's over a dozen public miners. But what's interesting about that kind of fragmentation is that it creates opportunity for a category leader, somebody to really be that pure play, give Bitcoin exposure, give hash rate exposure. And so there was an immense opportunity here for Hut 8 to carve out those mining assets, obviously add in Eric as a co-founder and present that to the public. And that's basically what we've done over the last month.
Yeah, so an interesting thing about what Hut 8 has done is they've basically done an equity swap for the assets, the mining assets in Hut 8, into American Bitcoin. Hut 8 will be a majority shareholder. Yes, majority shareholder. I was flipping that in my head. It was 80-20 the other way, but I'm correct. Hut 8 is going to be a majority shareholder in American Bitcoin in exchange for those assets. And that's going to give you guys the optionality to now focus on Bitcoin mining with American Bitcoin. And then Hut 8 can focus on the HPC side. Mike, over to you. What does the HPC landscape look like for Hut 8? And then we'll pivot back to American Bitcoin. But I want to talk about the HPC side first, just to give everyone a taste of it.
We've made some announcements of our site in Louisiana. I would say stay tuned for more announcements. The HPC side of the business has a much longer sales cycle than Bitcoin mining, which is mostly strategy. Ultimately, the thesis for American Bitcoin is to increase Bitcoin per share for the shareholders. When you buy Bitcoin spot, when you buy a Bitcoin ETF, it's always going to be a ratio of 1. And this year, we hope that a year later, being an actively managed company, your share of Bitcoin will increase from 0.1 to 0.11 or 0.12, a greater number. And we do that through multiple prongs. One thing that is missed in the market, MicroStrategy's success. When MicroStrategy first started Bitcoin accumulation back in August of 2020, they were a 800 million market cap company. Fast forward to today, their wealth usually carries a negative connotation, and Bitcoin has a high volatility. Bitcoin miners carry an even higher volatility that enables the flywheel and enables the premium to NAV of being able to.
Because like it is a blending of Bitcoin mining and MicroStrategy, which I think is a pretty novel idea. So, Matt, let's throw it over to you. What does that look like on a day-to-day basis for American Bitcoin?
Yeah, look, so I think for us, I would put it in those 2 buckets. So the first one is mining. It's our core business. Bitcoin per share, an advantage there as well. So when you take that and you couple that with the treasury, we're finding multiple ways to accumulate as many Bitcoin as possible. And then you add in just exposure to the network, right? Any increase in transaction fees, any increase in adoption, we'll see it in our treasury and we'll see it in our buying.
To the hodl, or are you guys going to make some aggressive plays to go purchase Bitcoin? How does that kind of start? You know, April 1st. I mean, you guys just launched, so like this is kind of new here.
I think there's a lot of excitement in the public markets for Bitcoin accumulation vehicles. Cantor launched CEP. Believe they traded extremely well. They opened at 10, up to 57 the first week. We saw David Bailey's announcement of Nakamoto, also very well received. We're incredibly excited. We announced our Griffin transaction. We expect to close that sometime in Q4. The surviving entity will be traded under ABTC, and we expect to be able to monetize our volatility and be able to raise the converts for both Bitcoin accumulation through mining as well as in the market spot purchases.
Okay, so it's the volatility play that's kind of been made famous through strategy, but with Bitcoin mining attached to it for further growth of the hodl. Is that the?
I think that's fairly clear. I think for us, the mining is the perfect business to use as a base load, right? Kind of like power. Think about it. Our day job is accumulating Bitcoin. Our treasury volatility strategy also accumulates Bitcoin. We've found ways to make sure that no matter what happens, our Bitcoin hodl will go up.
What do you have to do on the capital side to be able to get large enough to be able to pull off those converts? Because only a few Bitcoin miners were able to do that in size. CleanSpark, Riot, Mara, might have been one other. So do you guys have to get to a certain trading volume per day? Do you guys have to get to a certain market cap? We're forecasting. This is like when you guys merged with Griffin. You said it was Q4, so it's a little bit out there. But any thoughts on that side of things?
There is a lot of appetite in the market for converts, and we've built extremely strong relationships with a lot of the institutions and the investment banks that are underwriting, that are issuing these converts. We expect to carry over those relationships and to have American Bitcoin very advantaged out of the gate. Again, we're expecting a Q4 listing, but we're stay tuned and we.
Yeah, we're not going to predict the future here, but we'll take a Q4 bet. So for the Bitcoin mining side of things, I mean, I think a lot of Bitcoin miners, like pure Bitcoin miners, they're almost like Bitcoin maxis in a way. They just want to focus on Bitcoin mining and that's it. Yeah. How are you guys managing the marriage of the financialization of these things with like converts and then internally staying focused on operation execution?
I honestly view it as a win-win. I think for us, when you look at the wider market, even beyond the current miner investors, right? So if you think about different audiences, you've got the Bitcoin mining investing crowd, the hash rate, price, power, et cetera. You have the Bitcoin maxi crowd, maybe MicroStrategy type investor, more broader DeFi, crypto, et cetera. And then now also you've got a large kind of America First investor pool as well. And so that's another audience that, frankly, I don't think has really come into the Bitcoin story. I think only now that we're seeing governmental support. We've got obviously a new administration in the United States that's very pro-crypto. It's been great to work with from an energy security perspective, from a network security perspective. So when you layer all these stories in, I think the time is really now to have that differentiated offering, right? So I think to your point, we're as focused as any miner is on ensuring our operations are best in class, and we're getting more Bitcoin that we're spending in energy. But there's just all this additional torque that comes from the audience and the interest that we can then harness and grow and expand our businesses in the US and potentially abroad.
So some of the language you guys are starting to roll out, and again, this is pretty new, is like the strategy playbook with the Bitcoin mining playbook. And then the last part is like this ecosystem of different Bitcoin mining applications or Bitcoin applications. So walk me through, you mentioned the transaction fee thing earlier.
Sure.
What sort of things are you guys interested in building on top of Bitcoin?
I think this is excellent. So I would think of our business as having 3 layers, right? So layer 1 is our mining. We've already got best-in-class operations thanks to HUD and the leadership from that team and the US Bitcoin Corp origins, right? Layer 2 is a lot of what Mike's describing, tremendously exciting opportunities. Bitcoin per share is a North Star and a key metric for us. Layer 3, though, all right, so you've got one of the largest HODLs in the world, you've got audience, you've got believers. What are you going to do with that, right? Is the old quote, right? Spider-Man, with great power comes great responsibility, right? So what are we going to do to ensure that we're a leader, not just in Bitcoin mining, but in Bitcoin overall, right? Are there ways that we can help facilitate Lightning? Are there things we can do with payments? Are there things we can do to help the devs who are working fairly tirelessly to upgrade the chain and ensure the safety of the network? What can we do to be a leader in the ecosystem? And I think there's tremendous opportunity there because if you think about it, a lot of those projects and a lot of those opportunities are denoted in Bitcoin, right? So the Bitcoin yield aspect of that is fairly compelling. Again, as a third layer, right now we're focused on 1 being mining, 2 being the volatility engine that Mike has described. But and come back in a year and see what we're up to.
Well, I'm curious just for first takes, anything that stands out as something you'd be interested in? We have this op return debate going on right now. Maybe that's piquing interest.
I think it's an excellent question. Bitcoin historically has been treated kind of like gold in Fort Knox. You know it's there, you believe it's there, but it's somewhat of a dead asset, right? It's just on the balance sheet. What are ways that we can energize that or we can use that without taking material amounts of risk, right? Because we have a HODL first mindset, but are there things we can do or groups we can work with to bring to bear that treasury and that ability above and beyond just leaving it in the vault? We don't plan to sell it, we don't plan to trade on it, but can we enhance it using the markets?
Okay, just to stick with this, I'm gonna kind of pepper you a few more questions because I'm personally interested. You kind of piqued my interest. Bitcoin yield.
Yes.
Dirty phrase from last cycle.
Yeah.
But also kind of important to have. Interest on a loan. So kind of like a bedrock of financial assets is interest. So as much as the Bitcoin maximalist crowd and a lot of people from last cycle don't like talking about Bitcoin yield, I think it's pretty important. Is there anything in the market right now that's interesting to you guys on the Bitcoin yield front that you would look at for a potential future HODL? One anecdote really quick is CleanSpark, a peer rival to you guys, has been moving more towards using their HODL for lending operations and kind of almost operating like a new neobank in the future. I think they're years away from making that happen, but you can kind of see in the works potentially some of these Bitcoin miners pivoting into that neobank role. Is that something you guys are interested in, or is that is too early to tell at this point?
I'll answer that with 2 hats. At Hut, we've been able to generate a pretty impressive yield on our stack, and I'll refer back to one covered call trade, a single covered call trade that we did about a year ago. This was April of 24 when Bitcoin hit all-time highs, and the implied volatility was 2 standard deviations higher than the trailing 12. What that meant was with a spot Bitcoin price of about $60,000, we sold 115 to 125,000 strikes of calls in December of the same year, and we were able to bring in more than $10,000 per call. That's a 15% yield for a almost 2x coverage on the strike, and ultimately those calls expired out of the money, and we kept tens of millions of premiums. That is the type of trade that we're able to do at Hut. That is creating a yield on the stack. This is not a trade that we would look at on the American Bitcoin side. American Bitcoin's philosophy is to provide the best exposure for Bitcoin to shareholders with uncapped upside. we will look at yields such as potentially utilizing lending to institutional counterparties like Coinbase, obviously IG type balance sheet, and Matt can touch on the other strategies.
Yeah, I mean, it gets more exotic from there, but in ways that we think are going to reaffirm the kind of the power of the network, right? I think Lightning, it's in beta and may always will be, but I think things like that, there's opportunities to operate as a node or a sort of a netting player on the network there. I think that could be interesting. There's a lot of it. There's some stuff. Some of you track Thorchain opportunities there. I mean, there are folks that are building interesting financial primitives around Bitcoin. I think in our case, we're willing to take meetings and speak to a wide variety of folks. It's always going to be risk adjusted. We're not going to go mega bullish into something that's unproven. But at the same time, our first responsibility is to maximize Bitcoin exposure to our investment, or for those investing in our shares.
Okay, one more question on the financialization aspect of these things, because it is the conversation of the day.
Yeah.
Then let's talk about Texas data centers, expansion, and growth for American Bitcoin, which I have many questions about. Mike, I'm going to throw this one to you. Like, we have Nakamoto now, which was a merger and pipe financing operation. It was pretty confusing. And then you have the 21 deal with Tether, Cantor Fitzgerald, SoftBank, Strike, and 6 other companies.
Yeah.
Where do you guys fit in the picture of this? And then try to give me an explanation that's a little more simplistic than these other options that tending to go a little more exotic and much more confusing. Where's the appetite for investors when it comes to alt plays on the strategy playbook, and how do you guys position yourselves? Alternative plays to strategy. So if I'm not going to buy MicroStrategy and I want to buy a hyper Bitcoin acquisition asset
We're massive fans of MSTR and all of Saylor's products. MSTR today is $100 billion, and they're going to grow to 200 and beyond. But to double MSTR, you're moving $100 billion of value. The way that we see American Bitcoin, or even Cantor's 21, is you're starting at a much lower basis. To double, triple Cantor, you're moving single-digit billions. With American Bitcoin, we'll see in Q4, but it's as if you're buying the Bitcoin accumulation strategy of MSTR much earlier on in the last 5 years.
With the Bitcoin mining staple to it.
That's correct.
For further growth. Okay.
And again, I think we're so philosophically aligned with Bitcoin that for us, I mean, everything from our core business being mining, our RTO partner being a mining vehicle, obviously the treasury, which will accumulate via mining and via the volatility strategy. I mean, we're through and through Bitcoin miners, but we think that when it comes to offering a MicroStrategy-like play or a strategy-like play, we're a differentiated offering. And that's without even getting into the Americana aspect and what we're able to do to really be a leader in that space as well.
Love it. Okay, let's pivot to the good stuff, which is the Bitcoin mining side of things, which you guys both have deep experience in. Texas is getting a little crowded these days. I mean, there's still tons of places to plug in, but any initial thoughts on plugging in to North America for American Bitcoin's future sites? I know Hut 8's footprint pretty well, but American Bitcoin, I'm curious about that.
Well, I know you're Texas-based, so I'll let you go first.
Yeah, thanks, Mike. Yeah, so I'm ridiculously long Texas, right? I live in Austin. Look, you've got the wind, you've got the sun, you've got nat gas. I mean, energy's coming out of the ground, coming out of the sky, and you've got the market-based sort of grid going on there as well. And the market signal is saying build, right? And when you factor in the rule of law, I mean, it's perfect. And so when we look, we've got a global mindset. Mike has been mining for the better part of a decade. I've been involved for fairly long as well. It's just the perfect combination. I mean, I was in the State House about 2 weeks ago, meeting with the Lieutenant Governor, and the attitude there was, how can we help you, right? And so, at the federal level, a lot of the conversations are around, the commodity aspect and financialization and securitization and things like that. But when you get down to the tactical aspect of Bitcoin mining, you need a supportive regime or supportive government that's able to help you put steel in the ground, right? And you say it's getting crowded. You should probably get out to West Texas. There's plenty of space out there for folks who are looking to build.
I love that. Any thoughts on your side?
We love Texas. Texas is very pro-business. Most people don't know this, but Texas has more energy generation than a lot of European countries.
Yeah.
Texas today is the equivalent of 8 Portugals. Texas today is over 80 gigawatts of total generation. If you look at Portugal total generation is about 10 gigawatts. Today it's 8 Portugals, going to 12, going to much more over the next 5-10 years. We see Texas as an incredible state to continue expansion in.
What does the profile split look like for some of the HUD 8 sites? Now, HUD 8 gave its infrastructure over, but as you mentioned at the top, there's a new, probably HPC site, you probably can't confirm that, in Louisiana going on. So I'm curious, like, what sites are going to be developed under HUD 8, which ones are going to be under American Bitcoin? If you could just clarify that for the crowd. And then how are you guys thinking about building out these sites, given that the mullet miner does exist and people want both AI, HPC, and Bitcoin mining in the same sites?
At HUD, we have a pipeline that we disclosed into the many gigawatts of energy sites within North America, within US specifically. On the Bitcoin mining side, HUD 8 is able to support American Bitcoin's growth well through over 50 exahash within the next 12 months. These are sites that are already under exclusivity. These are sites that we're able to break ground on and support the infrastructure side, data center operations for Bitcoin mining for American Bitcoin.
No, I think that's well put. The one thing I would say is that from HUD 8's perspective, not all electrons are created equal, right? There are sites that are uniquely advantageous for data centers, right? I mean, fiber connectivity, latency to customers, et cetera, right? Mining has slightly different characteristics, and so I think it's extremely complementary when your portfolio is the size and the amount of gigawatts that they've got. I mean, they've got over Portugal pipeline. I think we'll be okay.
Okay, so within Texas, you have more interest, I think, with an ERCOT of just kind of understanding what's going to happen with Bitcoin miners building out into the next few years. I wouldn't say more scrutiny, but more interest for sure. And just from your position, being based in Austin and being able to go to the State House, what sort of things are Texas lawmakers looking for with Bitcoin miners? Are they looking for you guys to go out and start funding new generation? Is it to that point, or is it more so you guys are going to the open market and just purchasing generation that's already been completed?
I'd say a bit of both. I think in mining they see a group of sort of entrepreneurial developers that are complementary to wind portfolios, solar portfolios, nat gas portfolios, and so on. But also, we've done several years now of education for the state lawmakers, and they're starting to understand the ability of us to balance the grid and really see the benefit that we can bring to smooth out energy prices, right? And so we're turning it into a hard asset. So they like this idea of the interruptible load, extensible load, ability to build out rapidly, but they also now really like the ability to put this hard asset in Texas. So we're getting, I think, benefits from the crypto boom, from the energy boom, and from the renewed public interest in the grid. And I think coming out of Winter Storm Uri 4 years ago, everyone was taking it upon themselves to learn more about the energy markets, right? Both in the small talk in Austin as well as the State House. And we were very fortunate that mining was up and coming during that time, and we've been able to be a part of those conversations and educate the lawmakers as to the role we can play.
Okay, sidebar, which is kind of unrelated to this topic, but I am interested. Anything in Texas that you heard from the recent blackouts in Iberia, or has that kind of brought up any conversations around how ERCOT is built?
Hasn't come up.
Really? Okay, interesting. I would have thought that would have popped up.
Okay, maybe I'll say that there was conversation on renewables and saying, it's almost like whenever there's a crisis, it's an ink blot test, right? And folks look at it and say, I knew this was renewables. They were always going to do. Okay, maybe there's other folks that said there was a frequency issue, the hertz. I mean, not to get too technical, there's issues with the hertz, and maybe it was a bit of both, right? But I think in both cases, the conversations we've had, with lawmakers, but also frankly with the bureaucrats or the regulators at ERCOT, we can assist with both of those things. We can curtail, with the wind, with the solar, but we also can assist with irregularities, you might call them, in hertz. So no matter what you're seeing in the ink blot, I'm seeing Bitcoin mining as part of the solution.
We got 3 minutes left, so I'm going to wrap up, of course, with a question on Eric Trump being on the board, as I understand it. What does that do for the ability to bring capital into American Bitcoin? What kind of groups are you guys able to speak to because of this? I mean, this comes, of course, in the heels of the Trump administration being in Saudi Arabia with their investment summit. Obviously, these things are very different. Like, it's government and then there's business, but the name does bring a certain sway to it. Any thoughts on that topic?
Eric Trump is the co-founder and chief strategy officer at American Bitcoin. Eric is not related to anything on the political side. Eric is a private businessman, for sure. It's incredible the support that we're able to gain, even the opportunity to be here today. We're honored to be able to speak here, but in terms of, we all saw on the main stage earlier, the turnout, the attention, the engagement, just to hear Eric speak. Eric is deeply, his mission is to expand crypto and to give crypto, Bitcoin specifically, a voice. Adoption for Bitcoin is on the right trajectory, but it's still not fast enough. And this is something that Eric is deeply passionate about. And it's great for everyone in the industry. Really believe that he's going to bring more supporters and attention to the space.
Matt, I'll finish with you. He brings in the experience of American Data Centers, Inc., I believe it's called.
Yeah.
Correct me again if I'm wrong. What sort of experience is that team bringing into what American Bitcoin is doing?
You know, that is actually more on the Hut side. I mean, data centers are the Hut bread and butter, so I think there's some interesting synergies there that Mike can go into from the Hut perspective. I think for us, you know, we've just seeing there's a sort of we're in Canada, but there's a pride about being American that I think is back. I mean, before we walked on stage, I saw that in Dubai they've just lit up the tower with the American flag. Never thought I'd see that. So I think when we work with someone like Eric, who's so well able to articulate the American story and the Bitcoin story together, it's compelling. And I think American Data Center, which Mike can speak about, is kind of a part of that story. But America's back.
We got 30 seconds, so we got to give a little time for Canada. We are in Toronto, right? So, like, Mike, finish us out. What are some things that Hut 8 is doing in Canada or in Toronto that you're excited about? I mean, you guys were based here for quite a while until the recent shift to Miami.
We are always looking for more opportunities. We're open to ideas. We love Toronto. We love Canada. We have 2 sites in Alberta, active mining sites. As of recent, most of the opportunities, we're frankly just seeing better energy prices, better opportunities in states like Texas, and our focus is on the US.
Always a changing and dynamic market in Bitcoin mining, so who knows? Put your hands together for these 2 gentlemen. Thank you both for your time.
Thank you.
Welcome back to the CoinDesk studio. We are coming to you live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. Through its acquisition of Helio, the platform now owns Solana Pay on Shopify. Jake Brackman has been at the forefront of investing in frontier technologies for over a decade as the CEO and founder of CoinFund. He joins this special edition of Markets Daily to share his unique perspective on where the next phase of crypto innovation and capital is headed. Jake, welcome.
Hi, Jen. Great to be here. Good to see you again.
Yeah, great to have you on the show again. I know that you were a judge at the Consensus Pitch Fest. So tell me a little bit about what was going on there. What kind of projects did you see folks pitching?
Awesome. Yeah, there were 3 judges, me and Kelly from Arrington and Mickey from MetaLayer. And we had about 7 companies present to us for 3 minutes. I would say the judges at the end all agreed that there were 2 that really made it out to the forefront there. One was a great pitch from Niftmint, Jonathan Blanco, and one was Chain Patrol, which is a security startup that was already starting to generate millions of dollars of revenue, making crypto safe.
You see a lot of pitches. What is a common mistake or misstep you see startup founders making when they pitch VCs?
I think especially at a pitch competition, what really matters is presentation. You know, everyone's looking at the founder and thinking about what does the team look like? You know, is the presentation well spoken? Is it neat? Is everyone understanding what the product is? So we had some mixed results today on that, and respectfully, you know, we're all constantly working to make our startups better, but a few of them definitely stood out.
So really focus on your founder story and presenting yourself before the project, because the project can always change, right?
Absolutely.
All right. Well, you know what I wanted to talk to you about today? I know that you are an investor in WorldCoin. You and I have spoken about that on this show before.
Yep.
And there was some big news 2 weeks ago. We heard that WLD is now available in the United States, a big development, especially what's been going on with that project. Talk to me about how you're looking at the project as an investor and what we can expect.
Absolutely. So CoinFund has been invested in World from the very beginning. We did that very first round, the end of 2020, early 2021. This is a Sam Altman project, and of course, that's a big name now, and I think it's a very prescient idea. At the core of World is a biometric proof of personhood. It has a lot of applications in the world where AI has gotten really, really hard to distinguish from people online. But what I would say because we're at Consensus, which is a crypto event, I would say, from a Web3 perspective, World is the greatest Web3 go-to-market, I think, of all time. 26 million registered users, 8 million monthly active users, and almost 2 million daily active users are today operating on an iPhone app, which is really easy to use, has one-click login, and works on Ethereum technology, on an Ethereum L2 built on Optimism. And I'll just say that Bitcoin as a network has about 106 million users and about 22 million MAUs, and I really think that, at least on those dimensions, with this US opening, World has an opportunity to overtake that and leave those numbers, honestly, in the dust. There were days last year when World was converting 1 million users a day. If we could do that for a quarter straight, we will overtake the number of Bitcoin users.
Well, okay, that's a bold statement, Jake. I want to talk a little bit about this go-to-market. There are a lot of folks here at Consensus who are thinking about go-to-market. They're wondering, how do I bring more users? How do I get this amount of users to my project? What do you think sticks out? How was World able to go-to-market in this way?
That's a great question. I think one of the ways that they've done it is they've had a global go-to-market. I think they're in something like 35 countries, and with the US, they're poised to double, if not more, like the attention on the project. But here's the funny thing. World Chain is a blockchain, and World has opened up 6 brick-and-mortar flagship retail stores. One of them is in Miami, where I live. And the fact that people can be walking in our Miami neighborhood, see something interesting, walk into a store, learn about World Chain, learn about World ID, get verified on the app and earn some free cryptocurrency and try out a DeFi protocol in the app. That is an incredible progress from where we were 5 years ago or even 2 years ago in terms of getting mainstream users to use crypto. 2025 is really going to be one of the first years we're going to start to see real consumer adoption, and I think that World is at the forefront of bringing it to market.
Tell me a little bit about that in-store experience. That's kind of interesting. I have never walked into a storefront and learned about a crypto project, and like you said, maybe that is one of the secrets to unlocking the audience that we talk so much about.
It really makes the experience and the ideas real for people. The stores are very, very simple. They contain almost nothing except, a bunch of these orbs from World. You download an app on your phone, you scan a QR code in the World, and then it reads your biometrics, and boom, you have a blockchain account. You have an app store with DeFi apps and games that you can try out. And it's really night and day from the kind of, tough user experience that we've seen in the past.
The last thing I want to ask you about this is, you did mention that World launched in multiple different jurisdictions, multiple different countries, and there was some regulatory scrutiny when it comes to the project. How do you think the project, and how do you advise projects to move on from that and continue to build, continue to bring users into the project?
I mean, I think World has done an incredibly professional job moving throughout its different jurisdictions. One of the reasons that we're seeing the US launch only now is because they've been incredibly conservative and working with regulators to make it, a safe and compliant launch. The same is true for, I think, all the other jurisdictions that they're operating in. And countries have different questions about how this technology works. It's a new technology. It's a very advanced technology. There's many crypto, blockchain, zero-knowledge proof, privacy technologies at play in this device. And I think it's healthy that jurisdictions want to learn about it. But I think when they do, they will see that this is really the primary, most privacy-preserving biometric proof of personhood that's out there. It is extremely relevant, and it's driving Web3 adoption.
Jake, thanks so much for joining us at the desk here. We'll see
My pleasure.
We'll see you around the conference.
Thank you so much.
That was CoinFund CEO and founder Jake Bruckman. All right, we are going to take a look at the price of Bitcoin. Let's see where Bitcoin is. It's at $103,172 right now, trickling right along. You know, we started consensus. I think Bitcoin was at about $100,000, so it's nice to see it's still above that 100K mark. Let's take a look at what's going on with Ethereum now. Ether is at $2,539. We will continue checking the price of Bitcoin and ETH throughout consensus. See if we get a little bit of a consensus rally as we talk to all of the top builders and innovators in the space. All right, now we're going to take a look at another aspect of the markets, and for this I'm going to bring in my co-host Andy Baer. He's the head of product and research at CoinDesk Indices, and we're joined by John Devine, head of strategy at Blockfills. John, thanks for joining us.
Thank you for having me.
All right, tell me about your consensus experience. Let the audience know what's going on here.
It's fantastic. I mean, this is my first time in Toronto, and it's an incredible city. And honestly, looking around this event, it is electric. What a great job this conference has done. It brings the right people together. The conversations I've been having are just expanding my mind on where this industry is going.
I love to hear it. I love to hear that people are having a great time at Consensus. Now, John, I want to talk to you about Blockfills. It is not a newcomer when it comes to crypto trading for institutions.
Yep.
Crypto has grown a lot. We know that. We are experiencing that here at Consensus. What parts of your business would you say are growing the fastest?
Yes. Well, so Blockfills, we started in the industry in 2018. We serve institutional clients on a variety of markets, spot markets, options markets, futures, lending and borrowing, structured products. Where we're seeing the most growth is in the derivatives. And obviously perpetual swaps are trading a significant amount, but the options markets are really getting interesting. And I think the reason they're becoming interesting is very organic to what an options contract allows a market participant to do: manage risk and create real yield opportunities. That's the focus. It's less speculative execution and more
outcome oriented, right?
Yes, exactly.
Yeah, that's right.
Yeah.
I'm
So
learning
that's what we're
things
seeing.
like that because I went on my Amazon account and Amazon's like, "You're buying a book? That's unlike you, Andy, but what book did I buy? I actually bought your book," which I think, and
You must be referring to my book that I wrote on Bitcoin options markets. Yes, so this book came out last summer called Bitcoin Options. And, I wrote the book because so many institutional market participants have been asking me, "John, what's going on with Bitcoin options?" And well, instead of just always explaining the same thing over and over again, I said, hey, pick up the book, give it a read. This is a very nice primer, I would say, on different strategies that are being executed in the market, different philosophies on spread trading that's going on in Bitcoin that's very unique to digital assets relative to traditional finance, different ways of capitalizing on premium, taking premium in kind, and how we collateralize these options, and also some of the interesting technology that's going on with blockchain in terms of counterparty risk management and tri-party collateral vaults.
the clunkiest parts of traditional,
Yes,
right?
which are not so much fun to talk about, but this is actually what's changing the world in finance from a blockchain perspective, and we're just incorporating all of that technology into how we collateralize options.
It's lovely. The house is being rebuilt from the plumbing outwards, right?
It really is, and Blockfills has had an advantage of working these pipes since 2018. So now that this industry is really coming into the mainstream, I will say with quotes around that, Blockfills is ready to service this part of the market.
So we've talked about index options before. We know that it's very important in equities, important in credit.
Yes.
You've been at the forefront of bringing CoinDesk 20 options to hedge fund clients, to institutional clients. What's it going to take to get this moving forward? We would love to have huge Bitcoin option liquidity and huge index option liquidity.
Yep.
How does Blockville see this, and what are your clients saying?
This is one of the most exciting things that I can think of that's going on in crypto right now is the CoinDesk 20 index and the products that are being built around it. Obviously, the focus for options has been Bitcoin and, to a lesser extent, Ethereum and the likes of Solana is coming into play and Ripple, et cetera. But the CoinDesk 20 index solves this fragmentation problem for managers that want exposure to the industry, but they don't want to go pick apart the top 20 assets by market cap and figure out where they want to allocate. They're looking for a broader reach into the industry, and this CoinDesk 20 product has been a nice solution for them. What we're seeing from asset managers is they want to deploy cash into this market. So it's a very nice opportunity to sell cash-secured puts against the CoinDesk 20 index. These things are cash settled, but there are ways to physically settle against the index as well with the way we structure these options. And then I think once a manager is assigned into this portfolio or this basket of assets, there's an opportunity to continue to monetize volatility and sell the upside call options against the index. And that's the point we're at now, where the interest is coming in and trades are getting done, and we're expecting this to really accelerate.
So same formula, just at the portfolio level.
That's right.
Yeah.
That's right. And I think CoinDesk did a very nice job of putting together a package that's digestible to traditional finance managers. Once they dig in under the hood a little bit, everything clicks, everything makes sense, and that's helped facilitate some of this early action on the market.
That's just great.
That is great, John. We are going to have to leave it there. Thanks so much for joining us at the desk.
Thank you very much.
Thank you for bringing your book by so folks can see what it looks like and learn how to get it.
You too can shock your Amazon account by buying a book made of paper.
We'll see you around the conference floor.
Thank you for having me.
Thanks.
That was John Devine, Head of Strategy at Blockville. And thanks to Andy for joining us. We're going to take a quick break. We'll be right back. All right, if you're just joining us now, we are coming to you live from the desk at Consensus 2025. I'm joined by my co-host Sam Ewan and Barstool Sports founder and chief content officer Dave Portnoy. Hello.
Hi, how are you?
I'm doing great, thanks. How are you doing?
Great.
Last time we talked, you told me north of Brooklyn was the best pizza that you have had so far in Toronto. I have not yet had a chance to try it, but would you like to change your answer before I go out
I
and
did
try?
a couple pizza reviews before I came. Shout out Bill the Greek, who's like my chaperone for Toronto. But north of Brooklyn still is, I would say, my favorite.
What else did you try?
There were three. We tried, oh man, you're going to put me on the spot.
Did you try Badi Ali's?
I've already had Badi Ali's.
And
Great.
It doesn't...
Rated good pizza city.
Yeah?
Absolutely.
Yeah? All right, let's talk about crypto. First crypto conference, what's your read? What's your read of what's going on here?
I mean, it's exciting. I don't know that I had one big read one way or the other.
Okay. On attention, right? We see the meme coins. Even Bitcoin is, frankly, a meme coin. You are so good at understanding the media ecosystems. Do you believe that we're really entering this idea of the attention economy?
I mean,
starting off easy.
Yeah.
We went from what's your read to that.
Yeah. I mean, drawing attention and being able to create news certainly helps. I don't think that is necessarily unique to crypto. I mean, the user influence will always matter. I don't know if it matters more in crypto than other spots.
You know, the last time we talked about some of your experimentation with crypto, but I didn't get the chance to ask you what the craziest bet you've made that's paid off, and it doesn't have to be in crypto. I'm just curious, you know.
A quick hit or just something overall? They're two different things.
Okay.
So for me, like, my best stock is probably Axon, which is a stock I invested in around 200, around 700. So that's a big one. Rose Bowl and Michigan grad, they won. So that's probably my biggest. Oh, and Scotty Scheffler to win the Masters. So I had a couple big gambling hits. But long term, probably Axon.
Okay.
Do you think that, you talk about you're betting on the stock market. We all are these days. We're betting in crypto. We're betting on sports. What is it about the mentality, the betting mentality that's really come to be at the top level of our culture, right? I think about how you can't watch a sporting event these days without seeing betting sites pop up. That never used to be the case. So is it just that we are all more comfortable with risk these days, especially like young men are just interested in putting their money where their mouth is?
I think there's more ways to do it. Obviously, like gambling now is legal, sports gambling that is. The advent of crypto. I have worked very hard with Barstool Sports, like 2 decades. It took me 10 years to make $1. I've made a lot of money. I like making money. There's something about it when you place a bet, you see Bitcoin go up, you see XRP, and you're just sitting on your couch like, ooh, I made that money not working. That's a great feeling. I think that's a feeling that everybody has. And I think that's the rush that people chase.
I guess it's like a bit of FOMO culture too, right? Because if you're not
100%.
participating, you see these people making millions of dollars betting on sports games, making crazy money in crypto. Do you get that FOMO, regardless of how much money you have?
I have smashed my fist on a desk, and then you see, it's like, I remember I was trying to buy an apartment in Miami, and I got outbid by a crypto bro. And I'm just like, that bastard, he just bought, he heard about Bitcoin when it was, I don't know, $8, $7. It's up on 100. I've slaved for 20 years, and he just outbid. So yes, there's 100% of FOMO on everything. I think that's the meme coin. That's general. I mean, I don't know Bitcoin. I don't know if there's as much FOMO now. It's so established, but like that's why I'm in XRP. Like that it's FOMO. It's not like I have some grand belief in it, but it's what, $2, 40 cents or something like that. It's like, what if that's the next Bitcoin? So FOMO, I think, plays a huge part.
I feel like that real estate story is like your like origin villain story or something.
Yeah, and I'm sure a lot of people have it, and you see people. I mean, I driving around, you'll see somebody with a Bitcoin license plate, and they're driving like a Ferrari, and you're just like, ooh, I wish I bought that when I was, heard about it the first time. And I bought it. I bought Bitcoin the first time around 10,000, and I just happened, the Winklevoss twins were staying next door to me at a hotel, and they came and explained what Bitcoin was. It was the dumbest explanation I'd ever heard, and I sold it all right there. It was like $2 million I had at 10,000. It would be my best investment I ever had if the Winklevosses didn't happen to be sitting next to me at a hotel. So, yeah, you get FOMO.
Dave, I love what you said before, that you spent 10 years not making $1, but you had a passion for something you wanted to build. This industry's barely 15 years old. Out on the show floor, there's all these entrepreneurs who are not making money, but they're trying to believe in a vision. What was it about the drive that kept you doing it even when you weren't able to make money? And then tell us about when the success happened.
Sure. Well, what I always say to entrepreneurs, and I do believe this, I loved what I was doing. So I had a 9-to-5 sales job, which I did not love doing. I was cold calling, dialing for dollars.
What were you selling, by the way?
It was basically consulting services. So, we had a bunch of smart people, and we sell access to like wireless firms. It's called Yankee Group, Gartner Group. Yeah. They actually would be a group that probably covers, for all I know, the crypto space. But I wanted to do something I loved. So it wasn't about necessarily turning a profit right away or making money. I wanted to wake up and not hate my life. And I think if you are in a space where you're passionate, enjoy it, the money you can live with, maybe not having as much as you'd like, but you like waking up and working for yourself. That to me is always the number one thing you got to figure out as an entrepreneur. Do you love what you're doing? And if you do, you can stick with it a lot longer and last through the short times. And for me, it was just with Barstool, it's a 20-year story. It wasn't like I woke up, it's like we made it. It was a very long, slow journey.
What was that inflection moment when you said, oh, this is starting to click?
We started in 2004 in Boston. Around 2011, we did a music type tour, and we left downtown Boston for the first time and went to college campuses, and they acted like the Beatles showed up on campus. They knew who we were, there were signs, and I was like, oh, this may be a little bit bigger than I thought, and I probably won't have to go back to a 9-to-5.
In a way, that's a community, and like crypto, as you know, is based, many projects are based on community. You have to have your diehard fans there for you to ride or die while you're building. What advice would you give to folks who are trying to build a community that is not just there at the beginning, not just there for a token launch, but are there with you for as long as your community has been with you at Barstool?
Yeah, you gotta be authentic, communicate a lot with your audience. We were very interactive with our audience. I mean, that's one of my favorite things actually about crypto. The audience, they're hilarious. They're also crazy. But like, I love the memes. I love all the back and forth. I think that's actually what really drew me in once I got into it, is how active they are. So it's a great space to build an audience because people will support you probably almost too much. But it's a very interactive, internet-based, cool crowd. Ish. At times.
I mean, I see a lot of people, and I know a lot of folks in the space who get in and they kind of can't handle what they say is a toxic environment.
Yep.
And the toxic really is, oh, you don't agree with me. And I feel like you're someone who leaves it out on the field. Like you put yourself out there. You probably take a ton of negative as well as a ton of positive. How do you sort of navigate what feels like what might be an onslaught of like negative energy coming your way?
Yeah, you really got to. I'm used to it. I don't want to say I'm built for it, but Barstool, I've been dealing with. We always have haters. Crypto is for sure. Like I delved in meme coins for a little bit. I've never seen a crowd like that because always when people are making money or losing money, it ramps up. It's not just a sports team. You're taking it very personal. But then you got to remember, you don't know who these people are. I sometimes liken, if you want to say X, where I think it's the craziest, it's like sports talk radio. There's tons of people listening. And the people who are maybe saying the craze is like 0.001% of that. You just got to remind yourself they don't reflect the majority of people. That's how I personally deal with it, like the negativity. And it is toxic, by the way. It's great. It's toxic. It's everything. You should know that going in.
You and I spoke before Consensus a few weeks ago, and you said that meme coins are just like a Ponzi scheme. We know the SEC said that meme coins are collectibles. It's outside of their jurisdiction. I'm curious if you were going to advise, as someone who has participated in meme coins, a regulator on how to regulate these things. What would you tell them?
I don't know how easy it is to regulate them. I mean, right now they're basically saying it's fair game, right? Yeah. My major thing with it, if you tell somebody, which I've done and I still get killed for, hey, there's no real value, this is collectible. If you put in money, it could be gone like this. Like you could snap. You'd like to think they're adults. I'm very much like, hey, if I want to bet on a sports game, I may lose. I can do that. You just got to know that that's what meme coins are. Like your money could be gone in a second. I don't want to hear the bitching, the crying, the moaning. You should know what you're dealing with. But to regulate it, they're going to make the decision. Right now they're saying it's not regulated. If you want to regulate it, I think it's going to be very hard, but you got to make that clear. The rules of engagement, as long as they're clear, I don't have a problem with it.
I think I want to give you props because I think you were very clear when you were talking about these things. Hey, I'm just doing what I'm doing. Don't follow. But you also were very much acknowledging that your audience was big enough.
Yes.
That you yourself said you could move a market.
Yes.
Right? How do we look at this age of celebrity where, there's 1,000 people on TikTok with 2 million followers right now? How do we like educate people to let them know, hey, don't trust everyone. Like you've proven yourself in certain ways. Not everyone is.
Yeah, I want to trust 99.9% of these celebrities that have launched coins. And I don't even know that they know what they're getting into sometimes when they launch them. But, you see, for example, I was listed in a lawsuit with SafeMoon. Like this is when I had FOMO. I saw all these coins. I didn't know what the hell was going on. It's like, I'm going to buy one of these coins. I did a press conference about SafeMoon. I basically picked out of a hat. Like, I don't know the first thing about this. I could get screwed. I could make money. But this is what I'm doing, SafeMoon. I lost all my money, 40 grand. Wasn't a ton. And it would have been more if I could have figured out how to buy it at the time, which I couldn't. But I got listed in a class action lawsuit because they said SafeMoon paid me to promote it, which is totally false. But a lot of the other people listed in that, they were getting coins, free coins, whatever it may be. I wouldn't trust anybody is the answer. Like, you really have to believe, including me. Like, I trust me. I'm trying to be as honest as I can. But, you know, buyer beware out there with that type of stuff for sure.
You get listed in the SafeMoon suit. It alleges that you were paid, you were not. What's going through your mind when?
Well, I
when
knew
this
I
happened?
wasn't. It still cost me 25, 30 grand to get out of the lawsuit. Like, I had to turn over all the communications. It's like, I had nothing to do with this. And I did get thrown out, but it's still, people still tell me now, hey, you're a rug puller, you're this, you're that. I've probably lost in meme coins 300 or 400 grand by just like buying the minimum, and I don't want to make money on it because it's not worth it for me at this point. I get killed anyways. I've actually slightly retired from meme coins because of the hate that I get, but the gambling side of me, it's still a great rush. I love being like, so it's the angel devil on my shoulder.
All right, well, I think that's all the time we have.
Yeah,
Dave,
that's all
thank
the
you so
time
much
we
for
have
spending
with
time
you.
with us today.
Amazing. That was Barstool Sports founder and chief of content, Dave Portnoy. Let's take a look now at what's going on the showroom floor.
My name is Debbie Soon, the author of Digital Mavericks, A Guide to Web3 and Becoming the Main Character of the Next Internet Revolution. I'm here to speak with Brad Spies, Managing Director of Consensus, who will give us a behind-the-scenes look at what it takes to put on crypto's most influential event.
Consensus is really the big tent event of crypto and digital assets. So there are certain events that are just about Bitcoin or just about Ethereum, and we have all of the protocols as well as all of the TradFi titans and the DeFi folks, the policy and regulators. We have all the people who are working on blockchain, the developers, everyone who's working with AI and Web3. So our goal with this event is to kind of have all of those different tribes have a home base for themselves, and then to create moments for them to come together.
So tell me, what are some of the things you're excited about that are happening today?
Okay, so I have some cool things to show you, Debbie. The first thing is Acronym Foundation's Mini Mall, which has a nail salon, a dry cleaner, a Blockbuster video store, and all sorts of fun stuff. We also have Bullish Park, which is a real little pocket park in the middle of everything for people to chill out, go for a swing, have a meeting, all of that stuff. And really, as we get further down, we have stages for a lot of our different audience segments, right? So we have our builder stage that showcases a lot that's happening in Bitcoin mining that will be happening tomorrow. It showcases our protocol village that has a lot of protocols presenting on their latest projects and what's happening with their community and with their chain. And then on Friday, we have our Pitch Fest here, which will have 40 of the top startups in the world competing in the Pitch Fest, which is fantastic. SpaceCoin is here, which is a decentralized satellite company. They have a fantastic activation here. They have both our entry tunnel, which is kind of the way that people get into the show and kind of know that they're kind of coming into Consensus. Our hackathon is something we're really proud of this year. It is North America's largest in-person hackathon.
Wow.
We have 6 sponsors. And people are competing for millions of dollars in prizes and grants and all of that stuff. So there's over 1,000 developers participating in that, and there's some super cutting-edge projects that always come out of this hackathon.
Wonderful. Well, that sounds really exciting. Can't wait to see what comes out of the hackathon. That's always my favorite, all of these incredible ideas. And thank you for giving everybody this platform to showcase their brilliance.
Oh my God, thank you for coming.
Yeah, absolutely.
All right, see you next time.
Our next guest has been called the Oracle King because he co-founded Chainlink, one of the most widely used decentralized Oracle networks. For those of you wondering, oracles are essential for enabling smart contracts to interact with real-world data. Sergey Nazarov joins the show now. Hello, welcome to the desk.
Thank you. Thanks for having me.
You were just telling us you've been to every consensus since its inception. So thank you for being with us for so many years. I know that you made an announcement here at Consensus 2025 yesterday. Talk to us about what it was.
So that was a pretty big institutional announcement between ourselves, JP Morgan, and Ondo. JP Morgan, for the first time, opened up their infrastructure for doing cash settlement towards a public chain, in this case, Ondo's public chain for their tokenized treasuries. And Chainlink kind of orchestrated and cross-chain connected those two chains. So it connected the JP Morgan private chain that was used for the cash side of the transaction for the payment. And then the asset, the delivery of the asset happens on the Ondo chain, which is a public chain. So it's significant as far as you have a large institution like JP Morgan opening up and starting to work with public chains. You have a solution like Chainlink that can create the necessary interoperability between a JP Morgan private chain and an Ondo public chain. And you have just kind of the nature of the transaction being a big deal because you have high quality tokenized treasuries and you have high quality on-chain cash settlement and payment. So it's kind of like the institutional version of the future coming into existence.
Sergey, Judd and I were both at the Ondo Summit. You just made your announcement. There's so much excitement and interest right now in tokenization and these real world assets. In your opinion, what do people need to know? What do they need to understand about tokenization and why it is so revolutionary?
So tokenization actually extends to all parts of the economy. Stable coins cover currencies and cash. Tokenized funds, which is the largest category of tokenization other than stable coins, covers the asset management industry, the fund manager industry, so that's like BlackRock, Fidelity, Vanguard. But really, tokenization of all equities, all commodities, is what's next. And the reason that tokenization has a lot of value is because the traditional financial system was basically made about 70 years ago. It has huge costs, huge levels of fraud, huge delays. Many of the systems in the current financial system, they work on what's known as 21/5. So 21 hours a day, 5 days a week. The crypto system, for example, works 24/7, 365. Settlement times in the traditional system can range from days to weeks. Settlement times in the crypto system ranges from seconds to minutes. You have the ability to verify data much more quickly, which reduces the gap in time in which fraud and failure can happen. So there's many, many different reasons why different categories of assets or payments find tokenization useful. But to really understand it, you need to subdivide it by category. So stable coins have a kind of their category of use for blockchain technology. That's mainly global distribution. So you don't need a local bank in a country where you don't have a good banking system. You can still have stable coins. That's an example of the power of tokenization for stable coins. Tokenized funds have the ability of global distribution, global liquidity, and the ability to automate how they operate, which lowers their cost. So the application of tokenization kind of varies by use case also, the value it provides to that specific use case.
When you attended the first consensus all those years ago, did you think that in 10 consensuses from now, you'd be sitting here announcing a partnership with JP Morgan?
Yeah.
You did. You did. You could see that?
Well, yeah, I mean, in 10 years, yeah. In 10 years, I thought it'd be sooner. I'm
did.
an optimistic guy. I thought it'd be significantly sooner. But I'm just, that's a caveat you should know. I always think up until November of every year that this is the year. That's my view usually every year. So right now, this is the year. This is the year everything is happening. I think it's this year or next year, actually.
I like that.
But yeah, I would have seen it. The thing that actually surprises me about this consensus is this is the same venue that Sibos, the large Swift conference, was held at a few years ago. I think it was like 2023. So if you asked me in 2023 if Consensus, the largest crypto industry conference, would be held in a huge conference center of this size with, I think, like well over 10,000 attendees, that I wouldn't have been sure about. So like the rate of our industry's growth, even in those few years, is massive. So I've literally been in this conference center now 3 times.
Wow.
2 times for Sibos, but now for the first time for Consensus, which for me is a very big sign of the industry's growth.
Well, we love that you're here. Sergey, I mean, we are in Canada. We just had Eric Trump on stage. I know that you were in Washington, D.C., participating in a lot of the sort of summit on digital assets and have been involved in the White House. What's your take right now on where the U.S. is in terms of really making digital assets more accessible?
I think the U.S. needs to catch up, but it understands it needs to catch up, and it wants to catch up. And it is catching up. So stablecoin legislation, for example, I think is likely to happen before the August recess. The market structure bill may or may not happen before the August recess. It's very possible that it doesn't, but I think it could happen this year. And the U.S., I think people don't fully understand exactly how the regulatory landscape works. The U.S. is what's known as a super regulator, where their decisions ripple out to many other regulators. There's a regulatory international agencies like IOSCO and others where the U.S. is a very strong force. And so if the U.S. regulatory regime endorses tokenized funds, endorses stable coins, endorses tokenization of equity, tokenization of commodities, that will massively accelerate the U.S. financial system, which is still the largest financial system in the world. And the U.S. financial system, once it can make money, and once it can do it in a way that it complies with the law, it usually moves pretty quickly. And often it takes too much risk or moves too quickly. And that's why you have certain boom and bust cycles in the U.S. kind of financial markets. So I think once there is this green light from the U.S. Legislative process, from rulemaking from the SEC and the CFTC, and from other agencies like the OCC under the Treasury, you will have a kind of inflection point. That's what I expect to see. And that inflection point will affect the Canadian market, the global market, just by the US's sheer size, and the US's influence on regulation globally.
Sergey, it's been such a pleasure having you at the desk here. We got to wrap it up. We'll see you around the conference, and thank you so much for joining us.
Pleasure to be here. Thank you for having me.
Thank you, Sergey.
Thank you.
That was Chainlink co-founder Sergey Nazarov. We are going to take a quick break. We'll be right back.
Ethereum and its native token Ether are the second largest cryptocurrency by market capitalization, and they were created right here in Toronto, Canada. And one of the people at the helm of launching that smart contract blockchain is Anthony Diori. He's a co-founder of Ethereum, a prolific crypto VC and CEO of Jaxi Central and his latest project, Andiami. Anthony, so glad to have you here.
Thanks for having me.
So ETH has been on a tear in the past month. It went from 1,500 to 2,500 in the last bull cycle. It didn't reach its all-time highs that we saw with Solana and other coins. Nevertheless, did you ever think that it would reach these highs when you first created Ethereum?
No, I think initially the thoughts were getting from 25 cents to $5 and then thinking maybe it could get to 100 sometime, but no, these numbers were not something that I thought about. I mean, you had the hope of it, but no, didn't really think that it would be getting up here. So.
Do you think it has the potential to, I mean, we spoke earlier, but to reach the highs of Bitcoin, be more of a store of value?
I've thought so in the past. I'm not sure about right now, but It could. I wouldn't be surprised if it did sometime in the future. I think there's a lot more value creation coming from Ethereum than I do think much with Bitcoin. But I'm a big Bitcoin fan. But I still think there's an opportunity that it could do that.
And what's your, if you don't mind me asking, what is your portfolio allocation right now?
So I hold Ethereum, Bitcoin, Ripple, and Solana are two that I got into just recently and had never purchased before, but did get into it. That's pretty much it. I've really shortened things down to just a few of what I've had in the past.
Yeah, I want to go back to ETH, and we're kind of approaching the 10-year anniversary of mainnet launch, I believe.
Past the 10-year.
Well, this summer, it's like July, I think. End of July 2015.
I mean, depending on when. Of the launch of the platform, they just did a 10-year celebration for us in Switzerland.
Gotcha.
Where we got some awards for that. So for the 10 years. So yeah, it's the 10th year.
Yeah. So what's it like reflecting on a decade of this thing existing in the world? Like 10 years in, what are your thoughts as you look where Ethereum was to where it is today?
I left the project in 2016, and I've been focused on more of a larger ecosystem than just Ethereum. So even the prices that you mentioned, I haven't really been following that it's gone up that much in the last month. So I follow it kind of from the perimeter now. I'm busy doing the building of doing node infrastructure for many different chains. And even with the chains that we support, I have a hard time kind of keeping up with everything with it. But so I'm not following this closely as I used to, but I mean, it's still pretty amazing when you think about what was accomplished and what came out of Canada, or mostly out of Canada here initially, and to become the second largest thing to Bitcoin, I think is quite the special thing.
It was created right here in Toronto, Canada. You think it's a lost opportunity on Canada that they didn't have the regulatory clarity to have entrepreneurs like yourself stay in Canada, because you guys went off and created the Ethereum Foundation in Switzerland?
Well, the genesis of it, I would say there was 3 Canadians on the project. Vitalik's from Toronto, I was from Toronto. But I guess most of the work and development came out of Switzerland because we had to move there. The environment here was not something that we felt safe doing it here, and it was much easier and swifter to do it in Switzerland. So it was a lost opportunity, I think, and it's unfortunate that it couldn't be said and very clear it is a Canadian project. I think most people would consider it a Swiss project, or I think that would also be a fair bet, just with where the foundation is set up and the fact that it was very early days here that we started it, but then we had to unfortunately take it elsewhere.
And now you're working on a new project with Andiami, and you're focused on decentralization and keeping in with that theme. Tell me a bit about how you're trying to help people stay self-sovereign and take ownership of their own
Sure. So
data.
Much of infrastructure for blockchains are being built on cloud providers, whether they be AWS or Google Cloud, and it's not something that's talked about much, but it's really not decentralized if 90% of Ethereum is being built on a third-party provider like AWS. And if tomorrow AWS says that we're going to have to remove Ethereum, or there's government intervention or something, that's a real risk point. So I've always thought you can't have a user-controlled internet unless the user actually is running their own server. So we're building blockchain computers that are individual consoles that come preloaded with whatever node you may want, and that an individual can run and send their own transactions and have a full node. And then we're building a protocol to be able to share your resources to help send other people's transactions and give blockchain data to other people, which would normally be coming from an AWS system or infrastructure on AWS. So we want to provide an alternative to hopefully shift some of these technologies away from the centralized cloud providers to a more decentralized user-run system that then is a larger decentralized network, and help to decentralize these projects.
I mean, it sounds really cool, shifting back to self-hosting. Is there any sort of timeline updates you can share about when we might see some of this hardware in the world?
Yeah, so the focus for the last 2 years has been on building a platform to build on Jami. So I'm kind of adverse to dealing with a lot of people and having a big team. So we've been building a platform to build platforms, or to actually carry out large-scale projects using digital agents rather than using the human capital that would normally be used. So marketing functions, sales functions, all these functions we're actually putting into a system that we've created to be able to carry out those tasks. And we have a very small 5-person team with 1 front end, 1 back end, a CTO, and an AI lead, and that's pretty much it. All the rest is going to be coming from this product we called As You Wish, which is being made specifically for launching and building on Jami. So the last 2 years of building this platform, we're now shifting back to the cubes, using this platform to actually put it all together. But the node infrastructure is something we've had for years. That was built since 2018 for supporting our wallets that we had in the past. So that's all been built. But something like what we're doing will generally require dozens, hundreds of people. And I just don't have the stomach to actually do it in that way. So with the advancements of AI, we're finding we can actually do a lot more with a lot less people, and that's what's been the focus. But I'm expecting next year that we're coming out with the computers and the game that's going along with it for the distribution of the tokens.
Super interesting. We got to go deep on the AI workforce in our next conversation, because
Sure,
the agentive company is very cool.
What's
A
ultimately
one-person company.
What's ultimately the vision of having all this artificial intelligence at your disposal? I mean, how do you view the future in the next 5 years?
The vision is a one-person company. The idea that one person or very few people can have all the tools they need to empower them to actually carry out very large-scale, customized projects. And it's coming to fruition in terms of where AI is advancing. It ties in very closely with the blockchain side of things. So our computers are also going to have AI agents that are also, personalized systems with privacy in mind. You're not sending your information to the chat GPTs or the larger entities. So along with building the nodes, we're also building AI infrastructure as well that you can run on your own machine with open source software, so that you'll have also a very private access to all of your information, your data, along with running your private nodes. So that's where I think it's all coming together.
Awesome. All right, Anthony, we got to leave it there, but thank you so much for joining us.
Thanks for having me.
All right, that was Ethereum co-founder Anthony Diorio. In a world of geopolitical uncertainty and rising cyber threats, Chainalysis has grown to become a leading blockchain analytics firm, empowering governments and businesses to trace digital asset movements and mitigate risks like fraud and money laundering. Joining us now to discuss is Jonathan Levin. He's the CEO of Chainalysis. Jonathan, always great to see you.
Great to see you. Thanks for having me.
So speaking of cyber threats, Coinbase just had a massive exploit that they announced today, which is to say that they had some employees compromise some data of customers. Up to $400 million may have been lost from this exploit, and they're giving a $20 million bug bounty for anyone who could help them find out who these criminals are. What's going on here? Your thoughts, and how could this have been prevented?
So when you look at the way that Brian's responding to this, I mean, massive kudos to him as the CEO coming forward and actually talking to the market, being very transparent about exactly the method that has led to this issue for them. And what's great about that is that now everyone is going to look at their supply chain, look at their customer support teams, and do the same types of changes that Brian announced in his video about the changes that they're making to shore up their support ecosystem and make sure that this doesn't happen again. They're also taking a really proactive stance on reimbursing people for their losses through phishing attempts that were gathered from the information that was stolen from these rogue customer support agents that worked for Coinbase. And I think that that's a really good lesson in thinking about how do these enterprises protect their users against scammers that are targeting crypto users, that are targeting regular consumers. And really, our approach at Chainalysis has been, we need to collect a lot more information about these scammers than before, and what we need to be able to do is actually meet those scammers before they meet regular customers. And so that's what we've been doing with our acquisition of Altaria and providing that to leading fintech companies and exchanges across the industry.
Well, they're doing this $20 million bug bounty. Is that something that Chainalysis can follow up on and try to trace who these scammers are?
I think what you'll see is that there are always creative employees at Chainalysis who are looking into these types of things. But we also we look at that as this is something that Coinbase will do an internal investigation and find out really the vectors of attack on this situation.
Just want to rewind a little bit. When you say meet scammers before they meet real customers, what do you mean by that? Just tracking wallets? Are you going to shady alleys, weird, strange places, parts of town? I want to know more. That sounded like a colorful comment.
We go to the weirdest parts of the internet. I mean, that's been our job for the last decade. So we continue to build technology that actually goes onto scammer websites. We screen every single website that's listed in the world every day, running models against that to be able to actually find scammers' websites, and then we're using AI technology to log into those websites and actually find out where scammers are targeting their victims and funneling them to pay into those schemes.
Well, one of the latest moves by Chainalysis was to focus on prevention, and so would that help in preventing some exploits like this from ever happening?
Yeah, it really does, because actually when you think about the financial infrastructure that scammers are using to get money from their victims, you have to go and meet them where they are. And so that's what we're doing at scale with Altaria, and that's actually really helping prevent billions of dollars of losses from scammers targeting crypto users.
All right, so you know scammers better than anyone else in this room. And it's a scary world out there, right? There's all sorts of attack vectors that we're seeing, whether it's a wrench attack or an exploit, DeFi, CeFi, lots of stuff going on. From the horse's mouth, what's the biggest risk to the ecosystem now that you see in terms of specific attack vectors?
I think that when it comes to retail users, scammers are the #1 threat when it comes to targeting retail customers. And so retail customers have to be trained in understanding, whether, if an investment sounds too good to be true, it is too good to be true. But that's not going to be enough. And actually, what we have found is that by providing data to platforms like Coinbase, like Robinhood, like Kraken, like all of these places that people go to buy and sell crypto, it's actually possible for them to detect scammers targeting their users, and that then even if someone falls victim to one of those scams, those platforms can help educate their users and prevent that activity from happening.
Is that mostly on the social engineering side, or is it some other sort of means by which these scammers are accessing funds?
There are a lot of ways in which scammers are targeting customers. There is phishing attempts, which is one vector, which is what we've seen in the Coinbase example. But actually, there's just a lot of investment schemes that are out there, even scams on tickets, scams, people selling false goods on marketplaces. There's really a wide variety of scams that are out there in the public domain.
One other topic I want to touch on was this latest kidnapping attempt in Paris, France, where the daughter of Premier Burke CEO had an attempted kidnapping with with her son present and her partner there. Luckily, they escaped. But is that something that Chainalysis can see in terms of preventing or finding some way to protect crypto holders from being targeted in this way?
Yeah, I mean, it's a really terrible trend that we are seeing, and our partners in France are very much on top of being able to get a grip on the organized crime groups that are behind these kidnapping cases. And it is very much about sending a message to those organized crime groups that if you're using cryptocurrency, you will be tracked and you will be held accountable. And there've been multiple arrests at this point in those investigations, and it's something that we are tracking very closely as the situation develops. And my goal is to make sure that we're also tracking the payments that are going on even before these attacks happen, to pay people to actually carry out these attacks. And some of that will be in cryptocurrency and some of that may not be. And to the extent that it will be in cryptocurrency, we'll be on top of it.
Fascinating. All right, Jonathan, we got to leave it there, but thank you so much for joining us.
Thanks so much for having me.
All right, that was Chainalysis CEO Jonathan Levin. More after the break. Welcome back. MoonPay announced a major event this morning. They are partnering with MasterCard, and they recently made 2 historic 9-figure acquisitions, allowing it to enable commerce and asset management. Joining the show now to discuss is MoonPay Enterprise President Keith Grossman. Keith, great to have you here.
Thank you for having me.
All right, tell me all about this MasterCard partnership. I mean, it's going to have a lot of potential for the addressable market.
Sure, so look, like we love MasterCard. We've been partnering with them for many years now, right? When I joined, their CEO, Michael, was so nice when I left Time. He sent me a note and said, you know, you've been so good to us for all these years through Time and Bloomberg and Wired. Let me be good to you. And he introduced us to a bunch of different teams at MasterCard. And you've seen over the time, like we did connect.priceless.com and their initiative to move to the blockchain for the priceless sort of campaign. We've done push to card with them. But then today, after the acquisition of Iron, which we announced a few weeks back, which gives us, you know, white labeled API solution for stablecoin infrastructure, we announced that we are going to power the entire MasterCard network. So 150 million MasterCard locations will be able to spin up virtual accounts and ultimately have stablecoin cards.
Which stablecoins will they be using?
That is not, we are not getting to the point of announcing a stablecoin that will be the de facto stablecoin. It's a staged effect. First, you get the virtual accounts to be able to spin up, and then we can move into which stablecoin do they want to actually use.
What does this mean in terms of transaction volume? Does it speed up the network?
Sure, so look, I think when you look at the space is getting faster and more efficient, right? And so when you look at sort of the card volume, like the networks are going to start to evolve, right? Like what we're seeing today is the same thing that we saw, you know, with telephony and the internet, right? Like if you remember back, I would say 10 years ago, there was ads, 15 years ago, we'll say, ads that were like, call AT&T, $2.14 a minute to, you know, India, use AT&T, $2.41 to China, right? Whatever it was. You never see these ads anymore, right? Because the internet essentially absorbed voice over IP. So the price goes straight down and the speed and the efficiency goes up. I think the same thing's happening with money, right? And so you see these stats, and we always use this Castle Island stat of there's 120 million wallets that are using stablecoins and transacting with stablecoins or holding stablecoins today. You see these stats, and they're just going to continue to grow up, 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 up. And what's really happening is the speed of money and the friction that's holding it back is essentially going down, 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 down.
So I'm always curious, like when these big, giant announcements come out with big, giant financial institutions, you guys are on the front lines of these conversations, talking to these executives, trying to get buy-in, right?
Yeah.
Do you witness any sort of aha moments around stablecoins when you're talking to, say, a MasterCard or exec or another fintech exec? And typically, what is that aha moment that they express to you?
Sure. It's such an interesting question because you see it all the time, right? Like if you think about even my career in media, right? Like it was always pushing new technologies, right? And so like nobody really feels comfortable with the new technology until sort of like it gets to a certain moment. I think that the aha moment here is if you look at the crypto ecosystem, and the two of you, I mean, live it, and you report on it every day, for 15 years, it's existed in this gray space, right? And for the first time ever, the crypto ecosystem is seeing clarity. And clarity is the best thing that can happen to any industry, right? Because when you have clarity, then all of a sudden money can start to flow into it. People can start to build off of it, right? The smallest amount of clarity can have the biggest, most profound impact, right? But crypto is actually undergoing 4 clarities, and it's amazing, right? It's undergoing regulatory clarity, and we're seeing that at the SEC and the CFTC. It's undergoing legislative clarity, right? So you saw that a few weeks ago with the DeFi sort of broker rule being repealed, and you're seeing stablecoin discussions taking place. You're seeing a market structure deal coming up. You're seeing it with banking clarity, right, with the OCC. And you're seeing it with accounting clarity with the FASB rules. That is amazing when you think about that, right? 4 clarities all happening at the exact same time in the crypto space. This is like, you smile, but it's like, how could you not look at this and say, this is amazing? The outcome of those clarities is conversations like this with real, true players that are foundational to the evolution of the space, like MasterCard, can actually take place, right? And so, you know, like it's absolutely incredible to me from my vantage point. 6 months ago, I couldn't have conversations that I'm having today. Today I can, right? So while all the focus might be on meme coins and other things out there, like there's real sort of constructive building that can also take place in this ecosystem. And it is unbelievable. That's the aha moment.
Wow. Following up on that, MoonPay recently opened up their headquarters in New York City, so I guess that's part of the regulatory clarity there, because a lot of entrepreneurs in the crypto space left the United States, left New York, concerned about the regulatory crackdown, regulation by enforcement. Are you finding that people are coming back? Well, you're coming back. So tell me a bit about that decision-making process, as well as any concerns once Trump's 4 years are up.
So, okay, well, first.
Loaded
No. I mean, I'm as New York as you get. Okay,
True.
I just want to be like totally clear.
It's true.
I grew up on the Upper East Side in apartment 9F. I now live on the Upper West Side in apartment 9F. Okay, I've only worked in Midtown New York. I went to school upstate New York, right? I sit on the board of New York Cares, which is the largest volunteer network. I've used my platform every instance to benefit the city of New York. MoonPay was very involved in bringing the Met, you know, online to New York with the most recent sort of exhibit. I sit on the board of Whitney's digital art collection. I say this because New York has a very large advocate at MoonPay, okay? And like, I love the city. And like at the end of the day, when Ivan and I were chatting about it with the larger team, like New York is the financial capital of the world. And under this administration, and I think this administration's actually done a phenomenal job of actually shining a light on this industry, right? As regulatory sort of issues and legislative issues come to the forefront to be discussed at Congress, as they have actually made crypto relevant to the larger conversation, like we want to make an investment in America, and there's no better place to do it than New York.
Are you scared of what happens after the midterms and after, you know, Trump's 4 years are up?
So I'm not, because I actually look at this not as a moment in time, as a fad. I think that crypto is ultimately a trend, right? Like, I actually don't think that there's ever putting anything back in the box. If you looked at the previous administration, right, and this is not pro-Trump or negative Trump, and this is not pro-Democrats or negative. If you look at the previous administration, like, I felt just as strong about the crypto space and building, as did Ivan, as did the entire MoonPay team, during like what I would say is one of the hardest moments like in the crypto ecosystem. Right now is a really good moment in the crypto ecosystem. Everything normalizes back to a median sort of like state at one point, but like, so do I think that it's very good right now? In some instances, yes. Do I think that ultimately it normalizes back to like what's right and like getting all the right legislation and the right regulation? Yes, right? Do I think that it was overcorrected in the wrong way before? 100%. But like there's a lot of good that's going to happen, and I got to tell you, like, I just don't think that this is something that in 3 years or 2 years or 4 years or 1 year ends. And with my conversations with a lot of Democrats, including Democratic senators, like a lot of them realized that there was a handful of Democratic senators that pushed it too far and vilified what should have been a technology that actually provides access to a larger financial ecosystem for a lot of disenfranchised people. And on my last point on this, and I apologize because I'm very passionate about it, when I was the president of Time, I was very sort of outspoken about like this technology offering the rights for royalties to be distributed properly, for disenfranchised communities to access the financial ecosystem. Like if you look at the Black community, Hispanic community, there's a lot that are blocked from this current ecosystem that crypto actually provides, but without proper regulation and without proper education, right? It's a very sort of like recluse sort of access point. This should actually be a democratic ideal. It was not, because it was vilified by Sam Bankman-Fried and FTX. But ultimately, I think that now that it's sort of moved back to where it is today, I think a lot of Democrats have come on board. And then my final point on this, and I apologize because I know I'm going over, is if you look at Stand With Crypto, which has rated every politician and policymaker, and this is what a loser I am, is that I count this stuff, right? 68% of the politicians that are rated get either like an A or a B as it relates to crypto policy and legislation, and that means Democrats and Republicans. I think it's a misnomer to think that it's one party. This should not be politicized. This is a technology.
Keith, I feel your passion. I appreciate it.
Listen, I love you guys. Congratulations on a great show, and I will hit 19 exclamation marks by tomorrow, but the 20th
Prediction
one
markets,
may
take
not
note.
be hit. We do not know.
Myriad Market Betters, you've heard it here. All right, that was MoonPay Enterprise President Keith Grossman.
Hey, Keith.
Thank you so much.
Good seeing you, man.
What happens when you combine blockchain with art and AI? You get Seed Phrase AI, which is launching to curate the world's largest community-led digital art collection. Let's learn more with David Fields, founder of Ready AI. Hello, David. Thanks for joining us.
That's not David. That's Raja.
David. This is Raja.
Raja, I'm so.
But you got me, which was awesome. I feel like a David sometimes.
Sorry, you're with Stellar.
Oh, yeah.
My apologies. Okay, Raja, great to have you with us here at CoinDesk. Tell me a bit about, you've been doing a lot of work on stablecoins. So tell me, and real-world assets with a very ambitious goal of reaching $3 billion in real-world assets. So tell me a bit about that trajectory and how you plan to get there.
Yeah, it's been quite a journey for us. I think when you look at it from the outside, the growth has been really tremendous in many ways. So if I think about stablecoin growth overall, we've seen, I think, the total number of stablecoins that are in circulation today at about 240 billion, give or take. But what we've seen that's really exciting is the actual movement of those assets. So stablecoins have transacted, I think it was $27 trillion of volume last year, which is more than the combined value of both Visa and MasterCard, which is phenomenal to think about. 27 billion, sorry. And which is phenomenal to think about because it actually means that there is a lot of use case for this. And at Stellar, one of the things we are really proud of is our work in helping facilitate kind of this global commerce mechanism. And that's been really exciting. But beyond that, and something that's been really prevalent at this conference has been talk about real-world assets. And for us, asset tokenization is really that next level in a really foundational way. The first assets that were tokenized were dollar-backed, kind of dollars and digital dollars, but we've now started to see this mass proliferation of focus on tokenizing other financial assets like money market funds and a lot of interest in incremental assets. And so we really are focusing on building those, but not just to tokenize them for tokenization's sake, but to actually solve real problems.
Tell me about the institutions that are choosing to go and work with Stellar with these real-world assets. What kind of qualities are they looking for, and what would be an appropriate fit?
Definitely. I mean, I always like to think about one of the first use cases we had. So many of us are familiar with Franklin Templeton, and so what Franklin Templeton did was they saw a couple years ago this opportunity to tokenize their FOBXX money market fund, and they issued the Benji token. And I think what was really interesting about tokenizing a money market fund is this idea about accessibility. So if you wanted to invest in a money market fund, the average kind of entry point to that, it's like $3,000 to invest in it. But by tokenizing it, the entry point is $25. So what does that actually mean? Well, it means, first off, you've actually dramatically expanded the TAM, or the target addressable market, of people who can invest in that asset. That's great because it is of business value for Franklin Templeton, but it's great accessibility for consumers who are looking for these types of assets but may not have been able to invest in them. But there's also this massive efficiency play that happens with Franklin Templeton because, man, like, you remember the days of hand reconciliation and spreadsheets and fat fingering different numbers and all of these different issues. And so you're seeing this massive efficiency gain. And I think that's one of the things that's been really exciting for institutions to think about why they should tokenize something and what type of impact that can offer. And one of the things I am always really excited about is anytime consumers can get access to a financial asset that gives them more value, boy, we're really starting to get to something that's going to create, I think, long-term value.
It does really seem like Benji kind of catalyzed a lot of the real world asset adoption that we saw in the last, say, 12 to 18 months. Yeah. So looking ahead, is there anything on the horizon that you can share about other experiments in that realm that you guys are working on?
Yeah, I mean, I think we've been fortunate again. We built a blockchain that was really designed with asset control features in mind. So the ability to issue assets, but also have asset controls like freeze and clawbacks. These are really important for institutions. And institutions like WisdomTree, for example, launched their WisdomTree Prime funds, which were 13 different funds on Stellar, but now have expanded to WisdomTree Connect, which moves it from retail to wholesale. And so you're seeing all of these opportunities that are really built for broader access. And again, I think it comes back to this idea of institutions are really interested in what tokenization means for them. But again, why would you go ahead and tokenize, like an antique automobile, for example? That's not really creating value. But where you are creating value is looking at things that have a lot of value, like real estate, like private credit, like private equity, but haven't really before had that liquidity. But now you can have that liquidity because there's a demand for those products to deliver this kind of new yield. And that's incredibly exciting, and we're here to facilitate all of those opportunities.
Over at Stellar, you're also known for last mile disbursements. What can you tell us about what's happening in that area?
Well, last mile is, I think, one of our favorite topics to talk about because in our mind, when I think about the blockchain, I don't come from the blockchain world. I'm not a native crypto person. I come from traditional finance. I worked in structured finance. I worked in mortgage-backed securities all through the 2000s. I worked in payments and fintech. And ultimately, it comes down to what is the actual usability? And so crypto and innovation for crypto's sake is less meaningful for me if you can't actually put money into the system and, more importantly, take it out of the system, right? So a lot of our focus is how we've partnered with last mile ramps, like MoneyGram, for example. So MoneyGram is a significant partner of ours where they have 450,000 global physical locations across 150 countries. What makes that really valuable is imagine somebody in Kenya who is getting a remittance from a family member in the United States, and they get that in a digital dollar form. Well, do they need to know a lot about blockchain? I don't really think that's what they care about. They want to be able to get access to a US-based dollar, but then they want to be able to cash that out. And what the MoneyGram partnership allows us to do is actually have that person go into the location and then turn it into fiat that they're then able to go transact at a local merchant. And so those are really important aspects of this, and I think that's how you really connect it back to the real world, which is what this really should be about.
Raja, so interesting. Thank you so much for joining us. We got to end it there.
Thank you so much.
All right, that was Stellar Development Foundation Chief Business Officer, Raja Chakravarti. All right, well, we are in progress on the main stage here at Consensus with a wonderful interview with Tom Farley and Dave Portnoy. We want to also thank you, MoonPay, the global leader in crypto payments, as our sponsor. Let's turn now to the main stage, where we are seeing, again, Barstool Sports founder Dave Portnoy is in conversation with Bullish CEO Tom Farley. I'm Christine Lee. Thank you to my co-host, Zach Seward, and we'll see you tomorrow.
And went nuclear, but yeah, people are saying for me doing meme coins, I should be in prison. So someone created that to say Dave's going to prison. I tweeted it out and it went berserk.
So I don't get it. I don't get meme coins. That was part of why I was excited to be here and talk to you, because you have greater sway over the younger community than anyone I can think of. And a lot of them are really into these meme coins. One of the funniest things I've ever seen in my life was years ago. This may have even been pre-COVID or during COVID, you talking about SafeMoon, and you put out the video about SafeMoon. Those of you who don't remember, the gist of it was, I have no idea what the hell this thing is. It clearly has no value in the world. And there's like a video, I think you had like an astronaut helmet on, and he said, nonetheless, I'm gonna buy it to the moon. And I thought, wow, this guy and I were kindred spirits. Neither one of us get meme coins. And then in prepping for today, you've kind of stayed with meme coins in one way or the other. There was the Libra token. We want to hear you talk about that. There's Jailstool. There's Greed 1. There's Greed 2. You tell us when Greed 3 is coming.
Yeah, a lot of people expecting that.
What the hell is going on in meme coin land? Help those of us in the room who are like granddad here.
Yeah.
What's driving this?
FOMO, you can make money quickly. There's an element. So when I bought SafeMoon, I would see, I'm chronically online, and you see all these people, it's up 9 billion%. And they're flying around in planes. They're like, I'm making all this money and I'm working. It's like, what the hell? I want to make money like this too. So this was almost the first explosion of meme coins. So I picked SafeMoon out of a hat, picked that one, ended up in a class action lawsuit. They basically said SafeMoon paid me to promote them, total lie, cost me 20 grand to get out of the lawsuit. They're like, oh, he got taken like everybody else. And then meme coins exploded more, and I had to basically get involved. Basically, I was interested in creating a coin for Barstool. I thought, they're legalizing it really when Trump did his coin. I'm like, okay, this seems like a good way almost to go public without having to do the paperwork. And I started researching it, getting involved. In meme coins, I think, always have stayed true. It's a form of gambling. It's a Ponzi scheme, and I don't say that in a negative way, but you need people buying it, and every time somebody's making money, someone's probably losing money, which is fine. I gamble, I enjoy it, but you gotta make sure people know that's what they're doing. I've tried to be very clear with that, but for younger people, it's an exciting way, I think, to make money quickly. I mean, that sounds pretty straightforward, but that's it. Now, for me, meme coins, as I've gotten more into it, I do think there's a collective group of people who are rigging, I don't want to say rigging, but they have algorithms, they have copy trading wallets, and they're making money every single time. And if you're late to the game, you're losing money. So it's the same group of winners, and it's the same group of losers. So I want to say retired, like the whole thing fascinated me with Greed 1, Greed 2, because people kept coming at my throat, being like, Dave, you're a rug puller, you belong in prison. I'm like, I'm telling you guys what I'm doing. The name of the coin is greed. I'm not gonna make money on it. It's for greedy people. And people made money, people lost, and the people who lost still are like, I hate you, you should be in prison. And at some point, even I was like, you know what, the backlash is not worth it. But I have an angel on one shoulder and a devil on the other. I love the rush of it. I'm at nature a gambler, and there is nothing quite like seeing a meme coin. When Jailstool, I think I put in a couple $100, $1,000. I was up $7 million in an hour. And I was like, what the hell is going on? It took me, to make $7 million with Barstool, took me 13 years, and I'm up.
I actually don't know the story of Jailstool. I know the other ones. Can you tell us the story of Jailstool? How did it come to be?
So
you didn't launch Jailstool.
No, I did not. I was researching meme coins. I'm like, what after the Trump one, I just started paying attention. What is this world? Can I do a Barstool coin? So I think there was some reality show that went viral, and someone created a meme coin for the reality show. I bought it, put in $100, made 1,000 in a second. I'm like, what is this world? And then I talked about one. I said I bought it. I tweeted, hey, I just bought this, and I made, I don't know, another couple $1,000. People got mad that I sold it. They're like, how could you sell this? You dumped on people. I'm like, it's a meme coin. Like, what do you expect to happen? And everyone's coming at me. Someone created Jailstool. They're like, Dave should be in jail for dumping on people. So I retweeted Jailstool. And I said, all you people, shut up. This coin's probably going to go to nothing. I'm never going to sell it, but I'm going to show you how hypocritical you are because somebody else is going to dump on you. And that was it. And I think it got to, what was the market cap of Jailstool? It was maybe 50 million, maybe 100. I don't even remember what it was. But I'm telling you, I was quite literally up $7 million. I was sitting at the Super Bowl where there's all these parties that I'm invited to, and I was just sitting in my apartment watching it go up. I was like, holy shit, this is crazy. And I said I'd never sell it, I never have. It's come back down, but that was really when I got into meme coins. I have a weakness for what I consider very funny, like memes. I love the internet. I love Bitcoin. I love seeing viral memes and things making videos, and the meme coin community is the best at it. They're also crazy, they're also toxic, but it's like a wild, wild west of making money. And it's legal. Like, they've made that very clear, it's legal.
I don't want to leave. I planned on moving to other topics. This is too much fun. Can you tell us the Libra story? So I just want to add one note. CoinDesk, our brand and our host here at the conference, broke a story that Hayden, the guy who put it together, had texted the sister-in-law, the sister had texted someone and said, I'm close in, sort of implying maybe a relationship with the sister of the president of a G20 country, Argentina, and I'll get him to do anything I want. That got my attention. So I'm very interested in Libra, how it came to be with you.
Yeah, and this is a very Barstool, very Dave story, like that I went from not really knowing what meme coins were, and then 2 weeks later, I was sort of involved in like the biggest scandal probably in meme coin history. So I wanted to create a coin for Barstool, as I've said, but I didn't want it to tank on people. So I'm exploring, how do I do this? I don't know how to make a coin. I know how to do it on Pump Fund. I don't know how to do it on Pump Fund where you can prevent a crash. So actually, a guy did a podcast with Josh Richards. He's like, hey, I know this guy. He knows how to make meme coins. Hayden Davis, let me introduce you. So I spent a week and a half, hours with Hayden Davis, peppering him with every question you could ever have, like trying to make sure this guy's real. I actually said, if you're gonna launch my coin, we're gonna be handcuffed to each other because I don't wanna be one of those guys like, oh, the guy who created it ran away. So it's going well. And what he was saying was making sense to me. Now, he did tell me that this is deep in meme coin. He's like, when it launches, we will snipe our own coin. So you'll buy a lot of the supply when the thing's rocketing. And then what he said, with the money we make, when it starts dipping, you rebuy it. So that keeps the price up. Made sense to me. So I was ready to launch. He's like, I just got to go quick to Argentina and launch this coin with the president of Argentina, and then we'll come back and we'll launch your coin. I was like, all right, great. And he's telling me about this coin, Libra, and he said the president was Malay. He's like, he's in. This is going to be a life-changing thing for Argentina. He wants to work with you, Dave. He likes like some of the things you've said. I'm like, all right, I am in. And by the way, this coin's going to go to the moon. I thought I was going to make $100 million on this coin. So he goes, and a couple things happened. First, they sent me free coins from Malay in exchange for tweeting about the launch. And I said, all right, yeah, I'll take the coins, but I'm going to say you gave me the coins. I can't say, hey, there's this great thing with not disclosing that. They said you can't disclose it. Thankfully, I sent the coins back. I'm like, if you're gonna, I can't take them if I'm not gonna say I'm involved. I put my own money into it because I thought it was gonna go nuts. I spent, I think, $4.5 million buying Libra. I'm at Saturday Night Live. It's their, what was it, their 50th anniversary special, music, and I'm watching the Libra launch, and this thing's going backwards. I'm like, what the hell is going on? And I'm texting Hayden during it. I'm like, buddy, what is going on? He's like, don't worry, he's in on it. He's gonna mention that he's gonna double down and things are gonna go back up. He told me Elon was gonna tweet about it. So I'm like, this thing's gold. Well, turns out Malay says it has nothing to do with him. And it crashed, it became this huge scandal. 1 second Malay said, I endorse it. The next he said, I have nothing to do with it. And I lost all my money. Now, where people hate me, Hayden gave me the money back. That night, he's like, I didn't mean this to happen. He sent me back the money I bought. I don't know if it was to try to still launch my coin or whatever it was. To this day, what Hayden said happened, what I just described, where he said he'd snipe the coin and put the money back in with Barstool, he said they didn't let him put the money back in. So they snipe the coin, it tanks, and they don't redo it. Whether that's true or not, who knows? It's the luckiest thing that has happened to me in the sense I was an inch away from being like, Barstool backs this coin, because I thought it was real, but it's a crazy, crazy world. And people, by the way, have forgotten about this incident to me, which is bananas. You had the president of a country endorse a meme coin and then say he had nothing to do with it 2 hours later, and people kind of forgot. The money's gone, I don't know what. But people are mad because I explained the whole story, and the trenchers, God love them, hate me because he gave me the money back, and I'm always like, well, what would you do? Be like, no, dude, I don't want your money back? It's like, I lost 4.5, and he gave it back to me. Yeah, I got it back. I'm one of the lucky ones, but you know, I'm not going to not take that money back.
Do you realize how nuts this all is?
It's crazy.
Like, this is batshit crazy.
Listen, I was at SNL, Lady Gaga. I was just typing. I'm like, what the hell is going on here? It was terrible.
I can't stop. Greed 2. Just a quick. This is so much fun.
So I launched Greed again to kind of be like, show how hypocritical. I don't like when trenchers complain that they lose. Like, you know what you're getting involved in mostly, for the most part. You're an idiot if you don't. I say on my coins, this could go to zero.
Can I sorry, interrupt?
Yes.
Why do they keep coming back? Because I agree with what you said, that this world, what you're describing, it's gambling, and it's like going to a casino. But we were talking backstage about, you know, the odds on the Knicks, and it was plus 125. I know if I bet this, I get that. I know who the house is. It's transparent. As you said, this world, there's certain people, they make money. They launch these things. You don't know what the tokenomics is. They lie about who's endorsing it for what reasons. And then everyone else comes, and the chances are you're going to lose money. Every once in a while, you can make money. Why do they keep coming back?
Well, first of all, I think of a lot of people. There's professionals who are doing it, probably with 1 million different accounts, and they are making money. Like, I look, that's why I stopped launching them. I try to look who's made the money, and it's the same early algorithms, copy traders, and they're just creating almost noise out there. So you can't tell the real people from the false. But I mean, you will hit the jail stool or the fart coin, which, I mean, that's all you have to know, like fart coin. I mean, come on. But these coins, you can make real big money. I mean, you even look at like Dogecoin, like it was a dog. So there are some that make it, and for very little investment, you can make a ton of money.
To go on with Greed, I cut you.
So Greed, I was almost caught up. I was making unbelievable hype videos. And I actually said with Jail Stool at one point, like, I was telling people, any coin I launch outside of jail stool, I'm going to dump on you, and I'm going to put it back in jail stool. I was telling people I was going to do that. And by the way, I never take anything out from jail stool. So Greed 1 launched, it went big, and then it started crashing like they all do. So it had it was 75% off its high. I sold it, put it into jail stool. Dave, rug puller, Dave's the worst. I was like, all right, here's Greed 2. You guys who are saying it's the worst, you're going to buy it again, aren't you? It didn't go as high, but they bought it, and I'm just addicted to the rush and the memes. So Greed 3 is something that I've been teasing for. I actually even teased it. I'm like, watch out, I could launch Greed 3 up here. But then the smart part of me is like, is it worth the hate? Because real life, who's the guy? Jeremy Dan, absolutely hate him. He's a trencher. Came up to me in a casino in Vegas. He's like, you cost me 200 grand. And I'm like, what are you talking about? I've said everything, and I don't want those headaches. I don't need, it's all fun and games, I guess, behind the computer, but that reinforces people are losing and making real money, and they're not always taking responsibility for the risk, even though I think they should. So
headline will be Dave Portnoy does not launch Greed 3 at Consensus.
Yes, I believe that will be. As much as when I say it, I mean it. And then I just look at my mentions of everyone being like, put him in prison and he's a rug puller. Like I did something of the Kentucky Derby which I thought was a very interesting, real meme coin test. I created a coin for every horse in the race. That theoretically is a way for people to bet on the Kentucky Derby through meme coins. And people hate, he's doing 21 rug pulls at this. I didn't make anything. It's like, if the horse that wins, I thought it would go nuclear. There's a lot of hate out there.
Do you think of yourself almost as a bit of a performance artist?
A little. I mean, I am.
I mean, you're kind of, I don't mean this negatively at all, but like you're mocking in some ways the absurdity of the meme coin world.
Oh, I was 100% doing that. Okay. And I was saying I was doing that.
Yeah.
But there's a part of me at heart that is a trencher, that is a gambler, that loves the rush. I get why people like it. I'm in an unusual situation because I'm the house. Like if I launch a coin, I've used this example, if you watch the old Price is Right and the yodeler, they're going up. I know when the yodeler is going to fall off the cliff. Now, I don't sell it anymore, but that is what's so crazy about meme coins.
The house controls
the house controls, and they're essentially, in a weird way, letting, like if you want to get licensed to be a gambling site, you got to go through all this regulation. You can create your own little gambling world like that, like the snap of your fingers.
You think it's here to stay?
I can't imagine it's here to stay. I think it's here to stay for the next 4 years. What happens after that? I don't know.
Yeah. Well, speaking of which, what do you think of regulators in DC?
I mean, I'm never a regulator fan, but I wouldn't say I wake up, I'm like, screw the regulators. I mean, some things need regulations. Some, I'm generally free will. So I don't have a.
I just remember a couple times where, you had the buzz index, and I remember the regulators kind of came after you for what you were saying. You were giving them a hard time. I mean, do you think the regulators are awake in Washington?
I think it's become a lot less. So yeah, that was Buzz was a ETF.
Yeah. A cannabis-based ETF, cannabis stock?
No, it was.
Am I confusing the two?
Yeah, the Buzz was essentially. So I did something called DDTG when COVID started, which was a stock show, and essentially it was an ETF. It had software that would, which I thought made sense. It would track positive sentiment for stocks, and it would put them in a mutual fund. And that was that. But I was very clear. I didn't make any money on that either, but I did have to turn my phone and all my information over to the SEC to investigate whether I did anything wrong, which I didn't. But I guess there's a degree of, see, I go back and forth. Because like the trenchers, they don't need protection from the SEC. They need protection from themselves. So it varies on how I feel.
So you're from Boston, I'm from New York. Hopefully this won't exclude too much of the audience, but I genuinely think at this point, and prayers up to Jason Tatum, I think the Knicks are a better basketball team than the Celtics. And I'm going to give. You're going to have the floor. I won't interrupt. You're going to have the floor. I won't interrupt.
But just to clarify, you're saying without Tatum.
Without Tatum.
Yeah.
And with Porzingis, who, again, prayers up to him. He looks like he's on death's door. I think they're a much better team, and I don't think the Celtics have a real chance in hell in winning both games. What are your thoughts?
Well, I'll start it by our quick conversation that we had backstage when you said, I think the Celtics were lucky last night. They won by 40. So maybe take a grain of salt. I mean, the Knicks got to say what the Knicks got to say. Obviously, it stinks that Tatum's out. The Knicks are, for the most part, most of my life, a joke franchise. So it's irrational confidence to say honestly, the Celtics don't have a chance to win 2 games in a row. We won last night by 40. I think it's a 2-point line. The Knicks are favored by 2 at home, which says Vegas thinks the Celtics are better. Wouldn't shock me if the Knicks won, but if I was betting, I would still bet on the Celtics to win the series. I already have it, so I'm not going to redo it. But
I really do feel terrible for Jason Tatum. Terrible. 27, 28, hard worker, good guy. That's terrible. One more Boston sports story that fascinates me. I really got into this, like when we all work hard and then you take a break and you hit ESPN. I got really into the Bill Belichick, Jordan Hudson, his girlfriend. Those of you who don't know Bill Belichick, like the greatest coach ever, and known for being very private, very serious, and never saying anything that could generate undue media attention, is dating a 24-year-old young lady who's slowly but surely taking over his life.
Yeah. I didn't expect this on the consensus bingo card, by the way.
What's up with that?
It's an interesting relationship. She was just in Miss Maine. I know, I always preface this, I know both of them. They both spend their summers in Nantucket where I do, and I do not want to have Jordan in my face while I'm carrying a watermelon out of Stop and Shop. So, I hope the 2 kids do great. I'll leave it at that. It's an interesting relationship. It's caught the world by storm. Like, you're not the only, everyone's talking about it. It's a very interesting dynamic.
You're not known for being circumspect.
Well, yeah, I'm a little frightened by her, if we're being honest. So it's like, I want to keep everything cordial.
A story that generated some news, but not a ton of news. Dave owns a number of bars under the Barstool name, and we've all seen examples of anti-Semitism on college campuses recently. Kanye released a song, I think it's called Hitler or Hail Hitler,
something
or something of that nature. And then you had an incident at your bar. Maybe you could share it if you're comfortable doing so. I'm just curious, like, if you have a view on what's going on there? Like, what's driving this? And is this something that's the new normal? Because it's definitely been an increasing number of anti-Semitic episodes.
Yeah, I certainly hope it's not the new normal. The instance you're talking about, we have 4 bars in Philly. You bottle service, you get you bottle of vodka, champagne, whatever. You can get a sign. Somebody in our bar had "fuck the Jews" on the sign. I went ballistic, drove me crazy. I'm Jewish. Clearly what's going on in the Middle East, and I think a lot of what's happening is convoluting what's going on there was just pure anti-Semitism. Like I've said, if that sign said in our bar, "Free Palestine," I wouldn't have liked it in the sense I don't want political statements in our bar. I would not have fired anybody. I would not have kicked out. You're entitled to your things. Fuck the Jews. You're talking about me. You're talking about my parents, all of it. And I just think it's being normalized and being mixed. I've also said, I think a lot of protesters, I've been doing Barstool for 20 years. So we've been through, in the States, Occupy Wall Street, which was Occupy Boston, then Me Too, Black Lives Matter. Now this is the cause du jour. And all these causes have legitimate reasons, and intelligent minds can agree on different things. And then you have serial protesters, serial agitators who just hate, I guess, what they consider the norm, and they are going to rabble-rouse. Like the same people would be at all these protests. So it gets all mixed together. But in terms of anti-Semitism, if you said 3 to 4 years, Dave, you're going to be fighting this, like you'll be a face of it. Like I was doing a pizza review today in Toronto. Somebody just drove by, "Fuck the Jews." It's like, what the fuck is that?
That happened today?
Today. That's how normal it's becoming, and it's why I'm speaking out about it. I want everybody to get along. I don't have great answers for the Middle East, and not many people have for thousands of years. But again, I can intelligently disagree and understand a lot of points of views over there versus just being like, fuck a group of people. Yeah. So I think it's so normal. You hear the Hitler song from Kanye, who Kanye sucks. I've hated him forever. I actually have a tweet that I was a league leader. I hated Kanye before it was cool to hate Kanye and nuts. But people sit around, it becomes normalized. Like when this happened today, there was a group of high school kids behind me watching the pizza review, and they're a fan of me, and they all started like laughing, and there was no hate in their heart, but it's like normalized. So that's why I've spoken up and tried to be, because it's not normal, and I think there's a lot more that we have in common, regardless of race, religion, creed, than against. So I just think the two issues, because it's awful. Nobody wants people to die anywhere, but especially Middle East, wherever. But that doesn't mean like fuck the Jews. Like I don't know. So it bothers me greatly. Not even because I'm not overly religious. Like I got bar mitzvahed, haven't been in temple a lot, but that's my family. That's my grandparents. So I think it's gotten to a point I felt like I had to stand up and like, hold on a little bit. Like I get you can differ, but you think about what you're saying here.
I just want to add on that very important topic that I thought you handled it great. For those of you who don't know, the sign is about yay big, and the letters were about this big, and it was carried in the restaurant. So this was not a minor thing or a hidden thing. It was out there. It was grotesque. And Dave responded by he spoke to the perpetrators and offered on his own dime for them to go to Auschwitz, as opposed to him excoriating them or putting them on blast, which, you know, I love that. I loved it, because if you measured me by my worst moments when I was 21 years old, you wouldn't find any fuck the Jews signs, but you'd find stuff that I seriously regretted, and so I appreciated that. But do you mind telling kind of what happened?
So I did offer that because of what you said. To me, it is something that'll stick with you. One of the main perpetrators, his name is Mohammed Khan, turns out to be just the most vile human who ever lived. And forget anti-Semitism. He's throwing buckets of water on homeless people. He's spitting on people on a bench sleeping. Turns out he runs a webcam business, drug dealer. Though it works. In a weird way, it's like a gift. So and he turned around and he took no responsibility for it, none. So I put his name in lights and tried to be like, these are the type of people who do that stuff. Like, this is a bad person who's bringing this sign into the bar. This is when you're like, fuck the Jews, anti-Semitism. Is this what you want to be? And again, I think there should be more talking. And I'm sure there's anti-Semitic people who actually like me, and hopefully I'm turning a couple minds to be like, really, it's that bad? We've gone to a society where somebody, not only it's on our bar, that somebody thought they could order that at a bar, that it ends up on the sign. There was one person who fought back on it, but it's just become too normalized. Like even the drive-by today. Can you imagine another group like that you could just yell that out the window and people are laughing? So
crazy. Crazy.
I've been doing Barstool for 20 years. I feel like I have very thick skin. I personally, and I think there's a clear difference, have poked fun at every type of person in the world, including Jews, whatever, harmless, clear. I can tell the difference between hate and just normal. I haven't seen anything like what the last year and a half has been in the 20 years of doing this. And it is eye-opening, and hopefully it just opens eyes. Again, I can't believe like I'm talking about it. If you said 3 years ago, Dave, you're going to be talking about it, like, you're crazy. Why would I do that? It's not what I do. But, you know, somebody has to step up.
There's no way to smoothly transition from that.
No.
But I'm going to move to pizza.
We went from Belichick and his girlfriend to anti-Semitism.
I told you I was going to ask the things I was interested in. So I told you, I think the Knicks are better. That's one thing I think New York's at. The only other thing that I would say, I married a girl from Boston. I'm a taxpayer in Mass. My best friends are from Boston. The other thing is pizza. How in the hell have you become the guy in the pizza world globally with your One Bite Pizza review? A guy from Massachusetts. How did this happen?
You can say Jewish guy from Massachusetts. The Italians say like they offer. Yeah, it's So it started as myself and Dan Katz, Big Cat, who works for us. We just had a debate I don't know, 12, 13 years ago, if you could eat one food the rest of your life, what would it be? He said burritos. He was going breakfast burrito angle. And I said pizza. And then we're like, well, let's see how long we can do that. So for a month, I ate just pizza. And people started asking, is it any good? I'm like, let me give you a one-bite score and rank it. In Barstool, what I'm pretty good at is realizing what hooks with our audience. People wanted more and more of the pizza. And how I became an expert, I just have done it every day for 10 years. So, and my taste is on to the general public, but there is no doubt that pizza, if you said, Dave, what's your best area of influence? It's pizza. Like, people live by my pizza ranking. So we gave out our first 9 since 2023 in New York just like 2 days ago. Big review.
So thank you all for being here. I'm not done. But for those of you who have been sitting there going, why the hell isn't Tom, I'm a crypto guy, why isn't Tom asking about crypto? Let me bring it full circle before we leave the stage. And my apologies, but I'm a fan, and these are the sorts of things I wanted to hear about. Let's go back to crypto. Bitcoin, XRP, ETH, those are in your wallet. Are you excited about digital assets as an industry because you think, blockchain technology is interesting, or are you really just into it because you like trading, you're a trader, and they move and they're volatile and it's in the zeitgeist and it's part of your media business?
Yeah, it started off strictly, I would say, because I was excited by the volatility and the gains and what's going on with it. And I'm talking about Bitcoin in specific. I do think what happened recently with like tariffs and Trump, and I know that's one of the big things about Bitcoin is you should be independent of like government decisions and what happens there because it's its own currency. So I do think there's validity to that. But I also think 99% of the people who own Bitcoin are in it to make money and look at it as a commodity. And even when the stock market tanks, for the most part, it follows. It's been lockstep. So it's a combo. But I do love the blockchain. Like the blockchain, I think, has a lot of great utility. And so there's different concepts I would never even think of. Like we were talking to somebody before, like a used car, like being on the blockchain with like sales facts, so you actually see everywhere it's been. So there's utility that I would never think about. But it's still, at my heart, I am involved as like trading a commodity.
Got it. Well, look, you were all here for Dave not launching Greed 3, as well as in general, a great conversation. So I'd appreciate it if you can give him an extra loud applause. Dave Portnoy, founder of Barstool Sports.
Thank you. Standing O, I love it. I love it.
That's great.
Thank you.
Thanks, bud.
Yep.